Good morning. Okay, jobs numbers. Markets liked what they saw. Not gonna debate the nuances. Markets are higher, so that's all I care about. Price. It is Friday, the 6th of September. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. I'll be with you all day until around 4 p.m. Giving you the play-by-play. Looks like all the FANG stocks are looking good except Netflix. Netflix dragging its feet. Tesla looks good. NVDA looks good. Apple, Amazon, Broadcom higher after that earnings last night. We have an Iron Condor on Broadcom. We'll watch those puts and calls evaporate. We'll collect our credit. I'll take those puts off. I had a put hedge. I was leaning a little bit bearish from the price action that we saw last night. I was thinking that it was a good thing that we took the puts on. We are a bit lower at the moment, but starting to head back up. Broadcom. So I'll take those puts off. It was a hedge just in case it really dropped hard. They expired today. The Iron Condor expires next week. So the thinking was, let me put on a hedge for tomorrow, yesterday, because they were pretty cheap. Cheap for a reason. Most of Broadcom action was on the call side. Lots of volume on the call side. So looks like we'll see a bounce, follow through. Watching the New York FANG stocks, the top 10 on the NASDAQ 100 with 15 minutes to go for the open bell. Top 10, Lulu, Tesla, AstraZeneca, Intel. Intel's up 1.5%, 1.2%. NVIDIA, Meta, Micron, Apple, Google, Microsoft. Where's Meta? I don't see Meta on the list. MongoDB is basically flat, but green. Adobe and Dexcom. Let's see what the S&P 500 says. Survey says S&P 500. We got about 50 green. We got about 30 red, and the rest are unchanged. Top of the list, Lulu on the S&P 500. Tesla, Intel, NVIDIA, Textron, Meta. There's Meta. On the S&P 500, Meta is number 6. Micron, Apple, New Mining, Google, Enphase, Ford's up today. Ford, a little bit. Uber, Paramount, Caterpillar. All of these are higher today. Decker's Outdoor, some of the oil and gas names, EOG, Microsoft. The airlines are higher again today. Airlines, we pointed out the strength that we were seeing in airlines. Let's go take a look at that real quick. Airlines, a little sell-off towards the close. Look for an ABCD pattern yesterday. We're up trading. Where's airline? Where is six? Oh, that's not American Airlines. What is that? Yeah, it is. It is. Okay. $10.80. Okay, so we're inside of this wick. Some of the better looking airlines, I believe LUV was higher yesterday and for the last few weeks. That's trending. Consumer staples. All right. So yesterday we saw a little fade. Today we're up on the jobs numbers. What's semiconductors doing? Semis. Semis back to the closing level. Semis are flat. Netflix is trying to push higher. Zscaler is trying to get back up to yesterday's high. Grinding up. Actually, we're above yesterday's closing level. NVDA looking very strong. NVDA. It looks like we might have some sort of action in Bitcoin today. Let's see. Bitcoin rising. Bitcoin is moving. Okay, Bitcoin might be something to play today. CONL and Coinbase. Those are moving higher. Coinbase, let's look at that daily. Okay, at the lows. These are pushing a bit higher. Okay, Broadcom. Okay, let's get ready for the opening bell. We got about 11 minutes to go. Broadcom. That dashed line is the 140 level. That's where my puts kick in. They'll be up a little bit because of the drop, but I'll take those off. Looks like Broadcom's going to rally. Apple's up. Trading 223. All right, let's get ready for the opening bell. We've got 11 minutes to go. 11 minutes to go. Let me change stations here. Listen to Schwab. All right, I'm going to take a 5-minute break. I'll be right back. Uncertainty from either side. So we wouldn't forget about the election as a potential positive catalyst once we get it out of there. All right. Maybe put one way, gridlock is good. Hey, yes. The chart we're looking at really summarizes what you're saying there. The negative returns for September, October, and election years comes back around positive November, December. So there's the visual of what you're saying. One other item real quick is the history of Fed cuts related to stocks, because as we start to price in more chance of 50 the last couple of days, the market's gotten a little worried that maybe that signals we are coming apart here. Just be careful for a fade at the open. Watch for a fade at the open. Give me 5 minutes. I'll be right back. This is from Ned Davis. So they define that. We've got the years in there that they put as fast and slow cycles, but I think the key point is basically when they're cutting, gradually, which is what we think what will happen. We think we're probably going to get 25 basis points to start. But even if we get 50, it's not about the size of the first cut. It's about the pace of the easing cycle. It signals that they're just normalizing policy to account for a big drop in core PCE inflation to 2.5%. They're not panicking. The wheels aren't coming off the economy. If they're cutting fast, like in COVID, tech bubble, great financial crisis, obviously it's a different scenario. But even then, stocks are up 5% in the next 12 months. When they cut slowly, they're up 24%. And even when they are weaker, when they're cutting fast, they're up more the second year after the cut. So I think the problem for the bears is that stocks go up the vast majority of the time. Yeah. So it's tough to thread the needle as a bear and try to, articulate these negative scenarios. You're really pushing against the grain. Over time, stocks go up the vast majority of the time. Totally. I mean, that's where it seems like they would come full circle, which is basically, do you believe the Psalm rule holds? That's what the yield curve on inversion, which aligns more with recession than the actual inversion? Do these historical things hold? If not, if it's another crying wolf, then, hey, doesn't the wolf
wolf show up at the end of that tail though? Like eventually he does. He gets there, right?
I think one thing to remember: the economy evolves. Immigration's having a big impact on why the labor market's staying healthy. So a lot of these historical analogs don't work because they don't take into account how dynamic our economy is and how much it changes over time. So maybe things aren't as bad as people think.
Yeah, I hear you. Love the conviction. Like the charts. Great stuff, Al. We'll be in touch.
Thank you, Oliver. Great to see you.
All right, strong bullish voice here to start off the morning. Maybe giving stocks a little juice to keep going positive. Let's talk some data details in the jobs report with Amy Glazer, SVP of North America at AVGO. Amy, great to see you as well. Good morning.
Good morning, Oliver.
Okay, so take us through the numbers. Kyle, let's go back to the basics here from this report. Obviously, we missed the expectation, but maybe our bar a little low after the last one was so dicey. How would you describe this report?
I think this report just signifies our return to a normal, stable labor market. No massive surprises. I think it was a little disappointing, but beat kind of some of that real extreme worry. And we always see August as a lull as people finalize vacations, students return back to school, and a lot of the states were really just gearing up for that September surge.
As William says, I want to look at the latest jobs report data more closely.
The kind of question we're debating with Alex is, all right, how much predictability of the unemployment trend is there right
job
now?
data is
If we're
consistent
kind of normalizing and settling in, then I guess one could argue maybe we could get stuck in like low 4 unemployment for a while. Is that possible?
That's what I view. I think especially as we head into the election, we're going to stay in this low to mid 4s, and we'll probably see a return in a spike after the first of the year.
All right, so looking at what you guys see through your lens, where are the clearest trends for employment? What's strong, what's weak?
Healthcare continues to be white hot. It will continue for years to come, especially with the aging population. So healthcare strong, construction we're seeing really strong right now. Education strong. Everything else is just kind of status quo. We're not seeing any real big losers in that category. But those other industries, white hot. The other big trend we're seeing is this notion of gig work or flexible scheduling, and part-time jobs and job opportunities continue to rise.
Okay, so that's been trending too, right? That's been like a pretty key part of this scenario for a while, kind of like post-COVID in particular.
Exactly. That and part of the aging workforce, and the fact that right now we have 5 generations in the workforce for the first time in history. And you look at me, I'm a Gen Xer, and I'm dealing with childcare and children and potentially elder care as well. So flexible schedules really impact every generation, whether it be the baby boomer that retired and wants to come back to work, whether it be a Gen Zer who wants to part-time work when they're in college. So we really just see it impacts all generations.
Services, as we saw, still a strong part.
All right, let's get ready for the opening bell. Look for a fade at the open. It's still September. So if we get any kind of follow through in the morning, we'll have some opportunities to trade stocks like Tesla. All right, we got more stocks on the S&P going green. We're at about 50 right now. Okay, let's see.
Seems like there's a little more of a ceiling that's kind of been put generally kind of on mobility and wage related movement and jobs.
I think we're seeing that as well. You do see a little uptick in the summer as mid-year performance reviews happening. We'll probably see that stall again until the first of the year with my projection.
Got it. Okay. Amy, great stuff. Thanks for details. Appreciate it. Absolutely.
Okay, what's CrowdStrike doing? CrowdStrike. Back to yesterday's closing level. CrowdStrike. We got about 4 minutes, less than 4 minutes to go. All right, CrowdStrike. CrowdStrike currently trading 256, 256, 256, right around where it closed. This Iron Condor, I'll probably keep it until Monday. Have the, over the weekend, theta decay. Add to our profitability. I don't see it jumping anytime soon. Bollinger Bands are coming together. I'm looking at the red curvilinear lines, Bollinger Bands coming together. Okay, what's Apple doing? Apple is up pre-market. Apple's on the move. Watch for a fade. Thinking we could see a fade of the open. If we don't get a fade of the open, we'll be looking for stocks that hold, like Tesla, Apple, Amazon's already starting to pull back pre-market. So people are taking profits into the opening bell. Meta's higher. Tesla's pulling back a little bit too. Tesla pre-market is pulling back now. Okay, Tesla. Let's watch Tesla. I want to take some profits in Tesla. Have verticals there. Let's see where Tesla. Okay, let's get ready for the opening bell. All right, we got less than 2 minutes to go. Let me see the verticals that expire today. I'll take these off.
Can you offer me the same choices as Schwab?
Tesla. Okay.
Yeah, at Schwab, I can get full service wealth management advice and invest and trade on my own.
Come on, you know Carl's the only choice you need, right?
Market order.
Gotta run, Carl.
Schwab. Have a choice in how you invest with Schwab.
Okay, we notice that we hit supply right there, 234, 235 on Tesla. So we need to get through that today. If you're day trading it.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab network.
Okay, we're about to open. Good luck, folks. First 15 minutes, I'm not doing much of anything except taking profits off the table. Reassess the markets after 945, 950. Looking for stocks with a upward sloping or downward sloping VWAP for directional trades, flat VWAP for range bound strategies, high relative IM to tell me a stock is in play. Okay, and we're open. Okay, Tesla, I'm out of the verticals that I have for today. Expiration. Let's see, Tesla.
That's my favorite client.
Quick question, Carl. Can you offer me the same choices as Schwab? Choices? Yeah, at Schwab.
Okay, Tesla with a nice little bounce.
And invest and trade on my own.
Come on, you know Carl's the only choice you need, right? Neil, tell me you know this.
Gotta run, Carl.
Schwab. Have a choice in how you invest with Schwab.
Okay, nice little rally.
With the highs of the morning here, a little bit of a bounce happening with the S&P 500 futures climbing about 40 points since jobs came out and market running with it. Bonds rallied and gave it back, so with yields up, that fits a
Tesla.
little with stock strength right now. You are wanting yields up. If you are bullish,
Tesla pulling back.
at least the framework that I've been using, which I believe is correct, given that equities have been rallying while bonds are.
Okay, futures continue.
Will we be able to turn it into a real meaningful move today? That's going to be
Okay, let's see what Broadcom is doing. Those puts, I want to take those off. Let's see, Broadcom, AVGO, Broadcom, earnings. Okay, pulling back a little bit. Okay, let me take these puts off, Broadcom, into this weakness. Broadcom.
Semiconductors slightly lower by about 0.5%. NVIDIA's barely changed. You've got Tesla.
All right, Broadcom, I'm going to take a market order and just exit here on these puts. Nice profit. Okay, Broadcom, I'm out the puts. I have a Iron Condor 140, 135, the puts that expire next week. So the puts I took on Broadcom was for today's expiration. Nice profit there. Okay, Broadcom.
Maybe limiting to some degree how far bonds can run. To Kevin's point this morning, the odds of a 50 basis point cut in September have swung a little bit lower again, back towards basically coin.
Nice profit.
Watch bonds; they are selling off after the rally. So,
all right, we'll hold on to the Iron Condor. Obviously, the whole reason for taking next week.
George Tillis joining me, looking at the session. Our senior markets correspondent, GT. What do you think of that number?
Well, I think the number was
AVGO.
obviously
Nice trade. All right, so that one worked out well. We don't have to manage it like we did with Zscaler. Zscaler, let's see what Zscaler is doing. Zscaler is up 1%. Okay, there goes Zscaler. Nice job, Mondo. Yeah, I like Roblox too. Roblox, I like it too. Okay, let's take a look at Roblox. Make sure I'm not missing anything I want to take profits on. Let's see. Monitor. Let's see. Okay, that looks good. Zscaler. All right, so that's up bigly.
I think the market reaction is still trying to be balanced, looking for, obviously some good.
Okay, so obviously, if you took the strategy we talked about yesterday with Zscaler, rolling it to next week, same strikes, surpassing the debit at this point. We're looking at, actually, we're very close to the debit. So we're at $70 per contract gain from yesterday. I could have waited and, but didn't know that Zscaler was going to do what it did. All right, Zscaler, nice move on Zscaler. Congratulations, Mondo. Mondo took the calls. He held on to them overnight. Congrats, Mondo.
To the point on wages for a second, because Kevin's making a big deal about wages this morning. Seeing that number tick up a little bit, it seems to me like wages moving higher now is more like a welcome thing than it was.
All right, nice move. Get through 165 could run.
I mean, do you think that moves the needle at all at this point? Seeing wages creep up.
Beautiful, beautiful.
Let's go to Diane, who's waiting for us in New York. Banking Hall, joining me from the New York Stock Exchange.
Beautiful.
All right, Diane, so
Beautiful, as they say in Jersey. 205%. Nice move.
Yep, it definitely looks like that's the case. I was thinking that's kind of one of the factors putting a pressure on that, because it's not just the macro picture. Obviously, macro matters, and we came into today knowing that the all-important jobs report would matter in terms of the direction of the market overall. But
all right, beautiful guys and ladies. Nice work.
Where does the Fed go from
nice work.
Will that cut be later this month?
All right. So that starts off your weekend, right? And, he's a junkie. He can't leave it alone. He'll probably do something else instead of go do some work. Forget about it.
Chips right now a little bit lower, a little bit more actually now, down about percent. So that's obviously going to be a little bit of a headwind for us here. But HPE down 2 doesn't really help either.
Okay, Apple, looking for Apple to turn back. All right.
Yeah, I know. I was surprised because of the initial
Okay. Yeah. I still think we're going to fade. I think we're going to fade, but that's just me. If I'm wrong, that's fine, because I still have long positions I'd like to exit. There goes Amazon and Apple pulling back now. Broadcom pulling back a bit. Okay, Broadcom, I kind of held on to those puts a little bit longer. Okay, looking for Broadcom. Google pulling back, or at least pulling back. Now Tesla pulling back. Nice job there, Timmy.
Looking for 740 on revenue, so that is better than expected. The company talked about how they have streamlined more. The CEO talked about operating more efficiently in this, again, post-pandemic world. They say we're doing, quote, a really nice job with the two, stabilizing the business, improving efficiencies, and setting the stage for new growth. Obviously, like many other companies that operate in this new generative AI growth space, they talked about AI as well. Quote, we're essentially doing what AI is really good at. We're analyzing large volumes of text and extracting essential data that tends to be relatively consistent between agreements. So in other words, they're benefiting from this boom in generative AI. They've managed to pivot more.
That's not bad for them to be able to kind of surprise with growth, to kind of drop themselves into the conversation. Are they like making breakthrough products? I don't know. I don't think so, but like at least the market now kind of understands what sort of trajectory it's on. A couple of interesting notes out, some commentary this morning. SMCI down another 4%. This thing's basically like in free fall. Doesn't seem to matter what the broader market does.
Yeah, Supermicro is really having a tough week, and the latest leg down has to do with JP Morgan Chase downgrading their view on it. And they say that's not even to do with the issues with the Hindenburg report. So JP Morgan Chase has downgraded Supermicro to neutral. They previously had it as overweight. They've got a new price target of $500 a share. To put that in perspective,
IoT yesterday, there was a lot of conversation about IoT. Was it some takeover or something? Some kind of bullish commentary, IoT. Okay, it's fading now. Look for the fade to get bought. Look for an ABCD pattern on IoT. Samsara. Okay, IoT, looking for an ABCD pattern. All right, there we go. We got a fade. Everything's pulling back, fading. Okay. Z-scaler holding up fairly well.
This Hindenburg report, which we know Hindenburg has a short position in the company, but there's a lot of issues. And after that report, they've delayed their annual filing with the SEC.
Okay. So even though they're saying that that they don't necessarily believe the short report is correct, or that they're bothered by their delay, they also, basically say that the bull case is faded. So like, I don't know. It's kind of, it feels like, all right, like, they're slashing the price target in a massive way after a big sell-off from these exogenous events, and then they're kind of saying like, the events, they don't really matter. Like, I don't know, come on.
I don't think they're saying it's a non-issue, but they're saying that that's not the issue at the forefront right now, because while they see it as a a separate event, they say there's a lack of visibility around what happens with the valuation now for Supermicro. So they're more focused on the granular right now picture and near term, but obviously this report doesn't help.
Yeah, no, definitely doesn't. Big slash the price target for sure. The share is getting hammered right now down 5%.
That's right.
So it's just very unforgiving. The snowball effect, basically pylon, taking them while they're down, all these downgrades essentially. Coinbase with an upgrade, a winner in today's market. Diane, hit me with this real quick. Barclays, which is neutral. But like the price target.
Okay.
Yeah, so Barclays, that was some love for Coinbase and Robinhood, actually. They boosted their target to equal weight. They previously saw it as underweight for Coinbase. Their new price target is $169 a share. Now, previously they actually had a higher price target, but they said the business model for Coinbase and Robinhood, they said both of them have matured. They say yes, risks remain for both the models of the companies, but there's potential sales catalyst from new products and regulation as well. We know that there's, the regulatory climate seems to be more beneficial now to Coinbase and the crypto sector in general.
All right, looks good. Let's see how far we fade or if buyers step up. Looks like profit taking. Nice little bounce so far. Okay, Apple making a new high. Apple making a new high. After a little profit taking.
Pretty bad there. Now down $1.50. Speaking of coins, BTC just went.
Apple new high of the day. A little profit taking.
Definitely getting hit a little bit here.
Okay.
Yeah, bombs pretty chill still. All right, thanks, Diane.
I'm still using the opportunities to exit positions, reduce my exposure. Day trading, we're just waiting for. I'm just waiting for a little bit more action. Oh, sorry, I didn't mean to be stuck on this. Z-scaler. Okay, let's keep an eye on Z-scaler.
Walmart, of course, one of the most reliable trades in this market, a steady staple doing exactly what it's designed to. Will Kroger meet those criteria as well? We do have earnings coming up for that business.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Apple, nice pop there on Apple. Okay, Z-scale looking for more. Nice little bounce. A little choppy open. Okay, let's see who's doing well. All right, Apple looks like it wants to keep going. Apple. Okay, we got supply overhead. If you're watching Money Magic levels on Apple, thank you, Money. Thanks, Money, for the update.
Stocks looking a little unreliable here this morning. We're flip-flopping, but holding in there. Let's go to a place that's been very.
We appreciate you, brother. Really appreciate your input. 227.50 is the new upper call wall. Apple 227.50. Is 227 a new one? Let me just check yesterday. Yes, it is. Okay, so 227.50, new one. 227.50. You can see on the screen we've got some supply overhead. 225.50, 225.50. Watch for some rejection here.
Is there anything that gets in the way of them? Maybe a Kroger, Albertsons tie-up, takes the grocery market, or like that?
Okay, Apellis Pharmaceuticals, APLS. Let me take a look at this one. I ran a scan last night, APLS, and for some reason, okay, this is following through. APLS. All right, APLS was one that I was looking at yesterday. You can see today we're up again. Bollinger Bands are starting to open up. This is a swing candidate. Let me just check earnings, APLS. I don't want to buy something that's got earnings tomorrow or Friday. Not tomorrow, unless you trade Saturdays. APLS. That used to be a non-event Saturday trading, but you got Bitcoin now. October 31st. Let's look. Apellis Pharmaceuticals. All four metrics are great. Look at this. Ooh, that's a winner there. I'm going to buy some Apellis. Let me buy some Leaps. Apellis is probably not that expensive. Don't hear this one mentioned that much. APLS. APLS. I just want to get a dip for an entry. APLS. Oh, big spread. Big spread. So you're going to have to do something besides options on this one. Okay, somebody bought 1,255 of the January 25s. The 40 strike. Let me go single and see what this looks like. Single. It's not too bad. It's 80-cent spread. So you got 80 cents. You probably get in the middle of that. 45. All right. So I got some traders buying all the way out to the 90 strike on Apellis. That's crazy. That's probably somebody selling premium. 60. Where are we? We're Apellis, APLS. Okay. You don't have to chase this. All right. So just because I said it looks good doesn't mean go after it, because it's up $1.60. It's got an ATR of $1.80. So you're almost 100% of your ATR already. So maybe some shares, scale into it if it dips a little bit. You can buy some more. Okay, Apple, low profit taking. All the FANG stocks are fading. Okay, Microsoft fade. Tesla continues to fade. All right, so those trades that came in, what was it, on Wednesday? Made the trade yesterday very bullish. Thursday, all day yesterday, Tesla was strong into the morning open. Hopefully you took profits at the open. It's probably all the profit taking, all the calls that we saw going into Thursday's open. Apellis.
There's been internal documents citing that about 2/3 of the sale price of this deal is just the real estate value of these divested stores. So that could signal, hey, you may be down in the future.
Okay, I guess maybe versus pricing it as pure real estate, then okay, maybe. Basically. Hey, real quick on Walmart, Arun, is like, what's the surprise? Do they have any like as good as
Apellis. All right, so I'm just watching. What's semiconductors? What are semiconductors doing? SMH. Okay, more of a fade in SMH. So what happens at the 200-day? SMH, if you're short or if you took the call credit spreads,
but a company is growing almost like a tech stock these days. And I think what investors are really excited about with Walmart is that they're growing beyond just core retail. Like I said, they're growing their advertising business, they're growing their third-party fulfillment business, they're growing their online marketplace, they're growing their health and wellness business as well. And these are much higher margin businesses. At the same time, they're investing in things like automation, things like that. And so I think really right now investors are really optimistic about the long-term margin expansion opportunities at Walmart, where a decade ago, we were not talking about operating margin expansion at Walmart. It was Walmart's historical operating margins have historically been around 3 to 4%. But now we're thinking, in the next few years, we can get to 5%, and potentially even reach 6%. Which for a company that produces $500 billion in revenues per year, that's a lot.
All right, let's take a look at Roblox, RBLX. Okay, CrowdStrike. CrowdStrike. All right, so I could take CrowdStrike off. You know what? I'm going to wait until Monday. That was the plan. Wait till Monday, get a little bit more theta, depending on what we can get out of these for. Let's see. CrowdStrike. Oh, yeah, CrowdStrike's a nice. Let me see what I can get out of this. Create. 32 cents. All right, so I can get out at 32 cents, $32 per contract. I want to get out closer to $10 per contract, so I'll wait one more trading day. Monday, I will take a look at exiting CrowdStrike Iron Condor that we took for earnings. Has a huge profit on those. $214 per contract. Got 10 of those. I haven't sold any of them yet. We had 5, then I doubled up. If you recall, I doubled up on this one. The day after earnings, premium was still very high. That looks really good. So what you should be thinking is during September, we want to pay attention to the highs, the previous highs. As September rolls, we should see more weakness. So Apple, as it moves higher, I'm looking at selling more of these call credit spreads, looking for Bollinger Bands are coming together. We got 227.50 as the upper call wall that Money Magic updated. 227.50. Okay, 231 is the upper Bollinger Band, it looks like. Upper Bollinger Band is 233. No, that's a Keltner channel. Bollinger Band, 231.50. All right, 231.50s. You got resistance there. You got resistance on the Tuesday candle. Probably going to see a lower high on Apple, just given what we're seeing on the futures. So CrowdStrike will wait until Monday to exit that trade. Zscaler looking good. Zscaler. Tesla. Let's see. Zscaler pulling back a little bit. All right, people taking profits. Let's see. Hormel. Hormel had a gap down for earnings. And up again today. Hormel. Okay. Hormel.
Strike call and buy the 49 strike put. That's buying a strangle. And then in the near term, September 13th options.
Kroger. They look. Oh, that looks good. This looks really good. Kroger, a credit. He's probably too close to the money. That's probably why. These guys tend to take. They tend to take too much risk on these iron condors. I like to go further out. He's looking at the $5 wide, 57.53 calls and 49. No, what is this? That's a double diagonal. Never mind. Sort of a fly, a bullish fly, bullish butterfly trade. Looking at a peak around, what is that, 53? I'll pass on that trade. Okay, let's see what is actually working today on the fade so far. S&P fading. We suspected we'd see a fade. Okay, insurance names are up. Travelers Insurance. Mr. Flood, if you're curious about insurance trades. Yep. What don't they make spam? Who makes spam?
Good use of volatility and collecting a little premium in Walmart too. Thanks, Tom, for the trades here in a group that is offering a little safety. Walmart staples. That's been the most reliable trade. It might be going that way again here today because we're flipping red in a hurry for tech. The only stock that's up in the mag.
Spam?
Apple. So maybe it's got some safety properties still these days, even with the 4 PE above 30. I don't know. We'll trade it when we come back. A few little
Spam? That's you know what spam is. You busted my chops, right?
3 out of 4 indexes are red. Somehow yields are still up.
Yes, really. That was a big thing when I was in Hawaii. Spam, I was like, really? I'd like to fry it up in the morning. Canned meat product. It's like a rectangular can.
This election season, stay out of the muck and the mudslinging. Schwab Network's by the numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week. Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed. Stay ahead. Tune in to our election coverage on Schwab Network.
The market is
Yeah, who makes spam?
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
trading attracts a lot of the best and brightest students because it's enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you
Yeah.
exploiting human
They made it for years, yeah.
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data. You currently see patterns.
Okay, so I'm sorry, I didn't mean to get stuck on this. Merck with the follow through, Merck potential follow through.
When we look at your whole brain, you don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
Apple looks Apple's fading now. Apple fading.
I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
I've eaten it. I've eaten spam. I mean, it's not bad if as long as you don't think about what's in it. You know, it's all byproducts, I'm sure. Food byproducts. All right, so Goldman Sachs, the banks looking for a bounce in the banks after a little profit taking. Caterpillar looking for a bounce. Nike, no. Apple looking for a bounce in Apple. McDonald's, watch McDonald's. Today may be the day.
Coming in hot. Ben's joining me in a moment. And the Peanut Jarians coming on. We got a lot of good stuff to talk about. Kevin's going to trade Apple here for us in a moment. The only tech trade working right now, as everything went red there. We're not at the lows of the session so far, but we are getting there in a hurry with NASDAQ futures now down 1.3.
Probably.
And NVDA down.
Yeah, they probably, I don't know where it came from, but yeah, it makes a lot of sense. Anyway, we're still fading.
Not sure that number was particularly reassuring this morning. Wages up a little bit. That was a subject for 18 months ago when inflation looked out of control.
Okay, sorry. Let's get back to trading. My bad.
More than a coin flip right now. Well, basically a coin flip. Again, I don't know why bonds are selling off. Dollars up. That's a little different, I think.
Okay, so that's the Dow Jones. Let's look at the S&P 500. Builders First Source. Okay, we got Norwegian Cruise Lines, NCLH. Norwegian Cruise Lines, looking good. Okay, trying to get above the 50-day, higher lows, higher highs. Let's see, Royal Caribbean, RCL, Royal Caribbean. Okay, don't get sucked into the idea of a long at the moment as far as the indices. We're still fading. Norwegian Cruise Lines. Okay, let's look at CCL, Carnival. No, I like Royal Caribbean. Okay, it's holding on. The airlines have been looking pretty good. Airlines. Grinding. Okay, so American Airlines, let's look at Delta. Okay, that looks okay. JetBlue. I'm not a big fan of trading airlines, but some of you might be. United Airlines. These have been in play lately. UAL, AAL. Let's see what else. Ryanair, RYAAY, Ryanair. Okay, LUV has been trending. LUV has been trending. Southwest Airlines, LUV, looking good. Spirit Airlines, SAVE, that one flies out of Myrtle Beach. All the golfers come down here. There's a hub down in Myrtle Beach. Small airport, but very busy. Okay.
Well, I think the idea here is that whether it's 25 or 50, the economy is slowing. I mean, look at the revisions that we saw to last month's data. Look at the manufacturing payrolls, which came in negative. I mean, this is
hasn't been a great week for data.
No, it hasn't. And I think in many ways, considering that the market, I'm not surprised to see it struggle, right? The rallies that we saw held short of the week highs.
Why airlines? Because price. Airlines.
On this August low that we've established, we're still a ways off that right now. S&Ps are talking 400 points off that low. And we're only a couple hundred points up.
Okay, Bitcoin fading, Zscaler fading back to 160. Apple holding near the highs. We have resistance at 225, then 227.50, call walls. NVDA, big fade on NVIDIA. Apple, home builders, some staples. Toll, okay, thank you.
Situation here. The problem is it's still not a good situation. No, it's still not a good situation. We still missed. Yeah. We still had awful revision. Yeah. It's not a good number.
That combined with the idea and the concerns that the Fed's behind the curve right now, then they're in a bad spot.
Yeah, we got a lot of good golf courses, but it can't match Torrey Pines. Looking out over the Pacific.
Whether you're talking 25 or 50 basis points, right? I mean, there's some that are calling for significantly more than that. So. Yeah, I think
that's true too. Some people really want to go crazy.
Okay, it looks like shorts are starting to cover. Watch the shorts. Okay. Okay, looking for a trade on Tesla. Okay, Apple. Okay, S&P is still fading. S&P still fading. Okay, SMH, semiconductors still fading. So if you took those call credit spreads, these are doing really well. You can opt to take some profits into weakness or just hold on to it because I don't think semis are going to bounce anytime soon. Okay, here's the semiconductors. Okay, call credit spreads on semiconductors. The idea here is it's a bearish trade, okay? Okay, SMH. So we have the 245, 250 dollar per contract, $100 per contract. Got 10 of those. I could double up on them on any bounce that gets faded. SMH. What you trading there, Mondo? What are you looking at there, money? What are you thinking? Okay, 230, 235. Oh, got a lot of calls building up there. 225, 230. Okay, Apple. You looking to buy? I'm looking to buy on the dip. Apple, I'd buy on the dip.
And then all the way back down. And it's been moving a lot more clunky, low liquidity. I'm watching that because if it breaks down, I think stocks will follow today.
Yeah, that's important. That's a 1 day, 1 minute chart, which is very similar to the chart that we've seen off the all-time highs of around 74,000, a series of lower highs coming into play, but a low that has yet to be taken out with conviction and follow through around that.
Okay, thank you. For next week, all right. Buy the dips. Yeah, I'm 100% with you.
Some key lows that have yet to get taken out. So this is a range-bound trade as well.
Last one here. I'm a little surprised to see gold at the lows in the morning. I think gold's probably surprised that yields went up on this. But if bonds rally back, do we say gold comes back?
Yes, I think
probably right. If yields go back.
SMAR, SMAR. Smart Street, big move. I'd buy on a dip. SMAR.
That happens too. And that's when the dollar's up, basically. If we go pure risk off, dollar up, and yields down, gold may not like that as much.
Down 0.25% doesn't look like that's what's playing out.
Yeah.
So again, I mean, a little bit of selling, a little bit of continuation.
Okay, SMAR, I'd only buy an ABCD pattern if I was thinking about a long. All right, so you're at A right now. Look for a B and C. Okay, what's Z-scaler doing? Z-scaler starting to bounce. Z-scaler bounce. Okay, Broadcom, AVGO, Broadcom. Let's go Broadcom. Okay. Broadcom, this is why I wanted to take next week's Iron Condor, let this bounce like Z-scaler did. Take the puts off. If you took the hedge that we were looking at, we were leaning bearish. So this worked out perfectly. AVGO.
So then after they make the announcement, but between when they make the announcement, when they release, the average is up 2.2%. So the question is, do you trade it like that, or is this going to be something different? Is the AI, is there explanations about what they're doing with AI going to change the narrative from the history? Well, we've got a couple days, but Apple's certainly firming up ahead of that September 9th event. Bank of America, TD Cowen, both came out with relatively firm bullish notes today on Apple. That made
Okay, so looking good. Let's see. Apple's starting to fade a little bit more. Watch the dips in Apple. I would rather buy a dip.
And then we deal with the reality when the news comes out, Oliver. Okay. The market in its valuation seems to be saying,
All right.
yes, it is going to be a major game changer. You know, Apple does have that history of acting as sort of the ballast in tech.
Okay, semiconductors, SMH, semis. Bear flags, semis fading some more. Tesla. Okay, Tesla puts, put credits, Tesla. I have the 190, 185 puts. So I'm looking for Tesla to bounce eventually. I will probably double up on October 4th, 185, 190 puts.
morning. Thanks for the look at what to expect from the glow time. Thanks for the glow up.
Yes.
Dan Deming joining us, managing partner, KKM Financial, looking at Apple options. Dan, right now, it's kind of the only thing working in our Mag 7.
American Airlines, looking for the follow through.
You got me, Mr. Deming? Go. Good morning, sir.
Okay.
I had people talking in my head, so sorry guys.
Good morning. You're good.
Good morning, Oliver.
Tesla's still fading. Tesla. Well, that's quite the fade in Tesla. Bitcoin fading. I'm probably going to double up on SMH puts, or excuse me, call credits. It's a bearish play. Okay, that's doing really well.
The sentiment in the market, and you guys discussed some of the dynamics as far as the fundamentals and the data that we have received. And I'm a little leery that we're going to continue to see some selling pressure as we move through, at least through expiration, and then potentially maybe find our
Apple fading now.
October. But
Apple fading.
you look at Apple, it's not something that I feel like I want to chase here as far as the trade example this morning. So I'm looking to kind of again, capture some premium and have the opportunity to get put into the stock at a better level. So I'm just looking at a straight put sale this morning for the trade example, Oliver.
All right. So you're ready to pick it up a little lower?
Yeah, exactly. So, I'm looking at selling the October 215 put. Around 224, you can sell that for about $4.20. So it's about 1.9% return up versus the stock over the next month and a half. And then you have the opportunity to get put in the stock at
These guys at Schwab take a lot of risk. If anybody's following them verbatim, you gotta really reassess what they're talking about, because a lot of times they're selling premium that are like 30 deltas, 70% probability you're going to get a nice profit. 30 deltas, about a 30% probability that you could get assigned or have an issue. Some of these are like 35, 40 deltas. I don't know why they would be selling 35, 40 deltas. Seems very risky to me.
But you've got time on there, so you might have to take some lumps along the way.
Absolutely. Yeah, I mean, that's the thing about the volatility that we're seeing in the market right now. And, again, if it does continue to maintain the outperformance that we're seeing relative to some of these other, Mag 7 names, that, then you have the opportunity to collect basically 2% over the next month and a half, and then you can kind of reevaluate at that point. But, when you look at just what's going on here.
Okay, nice fade in the markets.
Expectations, shifting of dynamics and rotation in the market. To this point, Apple, for the most part, has been able to weather the storm. But, I do think that there's a potential here for some further selling pressure in the market for the next few weeks. And if that's the case, then I would expect Apple to probably get dragged down with the rest of the market. And then you have the decision to make if we do trade below that 215 level in October, if it's a level that is something that's compelling to pick up the stock. And, I think down here around that 210, 211 level, which is when you collect the premium, that's where you would get put in the stock, is a level that I think that from a longer term perspective looks more,
Okay, so that's Apple. Let's take a look at semiconductors, SMH. Okay, got a nice little bounce there at the 200-day. Okay, volume is starting to taper off. So we stochastics over, so MACD is turning over. All right, so I'm just looking at semiconductors. This is a bearish play here. This is basically short. This is basically short semiconductors. Selling the 245, buying the 250. At the time, that was $1 credit. So if you were going to do this, I would probably do it. I don't know that I would do it at this point. I'd like to see a bounce first. If you saw a bounce back to, say, 235, 240 and got rejected and rolls over the next few weeks, then I would probably take it there. But at this point, just assessing whether or not we want to get out of this position. Let's take a look at Gerald Appel's 3 momentum indicators. MACD, short term, medium term, this is the normal term. And long term, this looks pretty bearish. Okay, so I wouldn't be doing anything on the long side, trying to get cute. Maybe NVIDIA does, maybe NVIDIA bounces because everybody's focused on NVIDIA day trading it, but most of the semis probably fade with the markets. All right. So that's semiconductors. What else we want to look at? NVIDIA looking for the bounce now. C-scaler trying to bounce. What's Broadcom doing? AVGO. AVGO. Okay, back to 140. All right, so this worked out pretty good. If you took the trade on Broadcom, I would take those puts off. Probably going to do that more in the future. Well, at least during this time. Yeah, Tom's good. 20 delta. Yeah, anything under 20 delta.
Available anytime, anywhere, on any device for free. Schwab Network. I'm Nicole Petalidis, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
Yeah, anything under 20 delta is good for me, except when we're talking about earnings plays. Okay, so did I put this down? Broadcom, did I mark this up? I might have. Yeah. Okay, so we're down here. Okay, so this is good. This is a good learning lesson for those of you like Jeremiah and others that are interested in trading options, selling premium instead of trying to guess a direction. 50-50 coin flip. In this case, we took some puts because we were leaning. If you look at price action, what was it doing? It was below the 50-day, 9 and 21-day rolling over. It had a 5.6% probability expected move. So I doubled that, basically went to 10%, close to 10%. And I thought, okay, 140 looked good, 135, but I was going to take some puts as a hedge just in case it did what it's doing. So in this case, what we did was take puts yesterday. We take puts for today's expiration. If for some reason, because they were cheap, if for some reason we did drop more, then we could take profits. And that's exactly what's happening right now. But we have the Iron Condor that expires next week. So we've got time. Like Zscaler, it'll give us time to get out if we need to into the next week. In the meantime, what's happening is theta's kicking in. So that premium that dealers required you to pay up for if you were going to take a trade on earnings, dealers required higher premiums. So what the implied volatility was much higher. Now we're capturing that deflating implied volatility by selling premium instead of buying premium. So we're looking for a bounce similar to what we had with Z-scaler. Okay, Z-scaler, we got plenty of time. It's holding down here, and we've held here before, twice before, since moving above this level back in November last year. We started breaking through this level, 162 to 165. Right in this area here is where we held and then broke out. So we're looking for this to hold. If for some reason this were to start dropping off, we'd probably buy more puts. But for now, we're looking for a bounce in Z-scaler. Broadcom. Tesla, looking for a bounce in Tesla. If you like Tesla, this could be a day trade setup. Okay. Apple, looking for a setup here as well.
So I would say that those folks really, they've got a lot to make up for. The other folks who actually owe people an apology are those that say selling may go away. You've missed 600 points in the S&P 500. So I'm not saying you can always be a bull in the markets, but I think you've got to be smart. I think you've got to understand. And by the way, recessions, they're awful.
Okay, so let's take a look at a couple of things. All right, so let's say that you're the average investor, average to new investor, and what you're thinking is, I'm always thinking long, I'm kind of uncomfortable with going short. So look at what happened in 2015, 2016. August, we had 11% pullback. September, towards the end of September, we faded back down to the low. All right, that's 2015, 16. Let's look at the previous election year, 2011, 2012. This is election years. Going into the election, we had a pullback, and then we retested and took out the lows. August, September. We bounced in October. Okay, so there's that potential that we could see a pullback, further exacerbating the bearish move we have right now. So I'm leaning in that direction for now. So what am I doing? I'm selling overhead calls. Okay, so we lost the 50-day. We're losing the 50-day now. Apple pulling back more. We're below 5,500, 5450 is the next level. We're risk off on a break of 5,500. Okay, so that's the S&P. Stochastics now oversold. We could stay down here for a while like we did here in July, August, into August. You see that Stochastics, the dark blue rectangle at the bottom. Then MACD turned. MACD hasn't even shown any signs of turning yet based on price. Let's see what the Qs look like. The Qs, we continue to drop lower. Okay, Qs. IWM. Moving lower now. IWM. Nice job, Mondo.
So one kind of last point on the macro side then real quick, Pete, is if then we are going into the event in a couple weeks here, we've only really got basically two, I would think, major input pieces, which are the inflation numbers. Do you think then that we could possibly be dealing with an outside the box, pal? Is it for real this time that the market, might kind of force his hand a little bit? Because we only got 2 weeks, right? Like, are we going to go into the event with like a coin flip, or is the market going to nail him down within at least 4 or 5 days?
I would say, from what you're saying, I would say that, yeah, I think the market's going to probably nail him down. And if we hear anything about 50, I think that does rattle somewhat. But otherwise, I think it's status quo unless the numbers are just ridiculously different than expectations. I think that we're looking at exactly probably that quarter point.
All right, so we're risk off below 5,500. At the open, At the open,
but I think that actually, from a political standpoint, that's not as big of a deal. If this was a week before the presidency and the vote, I think that would be a very dangerous time for the Fed to maybe get any signals that they're leaning somewhere politically. This actually
at the open, we were anticipating a fade.
a couple of days after. Yeah, well said. All right. Okay, so trading wise, what do you like right now? One thing I'm noticing today, I was looking for bonds to come back. It seems like the bond rally has been like unstoppable, but what are you trading? Whether it's not
Okay, just waiting for some
I've been watching just like you have been.
shorts to cover, see if it turns into more than just shorts covering. Okay, Apple. Okay, Apple. If we lose the 50-day, there's a couple of layers of support down below, but lower Bollinger Band. Expecting prices to stay between the Bollinger Band. Same thing with Amazon. So if you're selling premium, sell outside the Bollinger Bands. Amazon looks like it could stay in a consolidation mode. Bollinger Bands continue to contract. Stochastics flat at 50. MACD is gradually grinding higher. September.
Now we're looking at a company that's a lot closer to a 38 to maybe 40 PE as you're looking at NVIDIA. And you're looking at Broadcom today. Those numbers on the guidance certainly was the main drag, I think, on the markets this morning, because suddenly you look over at the SMH and you say, wow, this is down 2% as well. They've got some joining along with them as well. I think from a micro, if I just want to have a couple stocks out there, Goldman Sachs has done an absolutely amazing job, I think. And when you look at investment banking, they're as good as anybody. And because of that, I think that's one of the reasons I still like that.
All right, so you should be planning for a fade. I want to beat this into a pulp. If you're looking to day trade, or at least play some of this downside, whenever this happens, whenever we got a bearish fade, I always like to sell call credit spreads overhead. Apple, for example. Amazon's another one. Let's see what some of these others look. Airbnb consolidating. You might want to sell an Iron Condor on this one. Adobe, Autodesk. So we called this right. This was an Iron Condor set up on Adobe. I didn't take Autodesk. I didn't take it. Adobe. Okay, let's see. Where Amazon. Looking for this to fade. I'll double up on this. Expires in a couple of weeks. Okay, 2 weeks from now, we've got expiration. So theta is going to kick in big time on these call credit spreads. This is a bearish play, short. Amazon pulling back to the 200-day. Let's see, ARM Holdings. Same idea. Talked about selling call credit spreads overhead. This play would have worked for you this week if you took it. I just keep holding on to it. Broadcom looking for a bounce. 200 days right there. So we got a week for this to consolidate. Stochastics oversold. Looking for this to turn back up. I believe, Paticus, you're long shares, right? I think you said you hedged. So the put's working for you. Super micro, you looking at there? Okay, super micro. Still moving lower, super micro. Tesla. Tesla back below the 50-day. Okay, Bollinger Bands, the red lines, Bollinger Bands, top and bottom. Look for prices to stay inside of those. So 235 over here was a previous pivot where people got stuck. Looking for a bounce in Tesla.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support.
Okay, hands off right now. If you're thinking long, hands off. We're starting to see shorts covering futures.
Plus, get
Futures shorts covering a little bit. Just shorts for now. New York FANG index stocks are all bearish. Okay, let's go see what's working today. We had Travelers Insurance was higher. Travelers was higher. Insurance names. Travelers.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks. Can't be that easy. It is with Schwab.
Schwab investing fees.
Travelers Insurance. Let's see, Norwegian, a little fade. All right, so watch the wicks on the top of these candles. That'll give you another opportunity. CMG, Chipotle, watching that one. Dollar General, trying to turn. Carrier. Walgreens Boots Alliance. Wow, that's a $9 stock now. It's come a long way since being delisted from, what was it, on the S&P 500 or the Dow? I forget which. Lennar, trying to turn. Builders First Source. Look at the wicks on the top of these candles. Okay, so there are sellers. People are just taking profits and calling it a day. I don't blame you. That's what I'd be doing. Let's look at the S&P Mid Cap 400. U.S. Steel with the bounce. U.S. Steel day 2 for Brother Bill. Stericycle. Okay, that looks like somebody's just going to buy it out or something. 5 below. 5 below. Five below. I don't know. I've shopped there before when the kids were really young. Get them lots of stocking stuffers. You know, they had all kind of crap in there. You know, cheap merchandise that you could buy for a couple of bucks. Have the kids keep them occupied for a couple of hours on Christmas Day. Now that they're older, all their presents are like 200, 300 bucks. All right, Apple's still fading. Okay. Toll Brothers. Okay, look at the wicks on the top of these candles. So there's people are taking profits. I would agree if you're not short already. Looks like we could follow through. S&P 600 small caps. Small caps. Dave and Buster's, nothing. Okay, a lot of these look like they're forming bases, but no reason to get crazy long. BRC. Okay, these are all small cap plays. Speaking of small caps, what are the junk bonds doing? Yields higher or they're lower? Junk bonds. Sorry, junk bonds. Junk bonds at the highs, so no sell-off there. 10-year yield. 10-year yield. Lower. Eventually, that's going to be good for small caps, IWM. 10-year keeps dropping. What's the dollar doing? Dollar, US dollar. That's been fading lately. Holding at the lows, dollar.
Stock's been able to kind of firm up a little bit, but still, obviously, as a tech company, moments like this where it comes under pressure, right?
Yeah, there's a lot to unpack with this chart too here. We can see that there's kind of a distinct change.
All right, so US dollar. Let's see what else. TLT. TLT. Whoa, there goes TLT. Okay, if you're still in the I'm taking some off. If you're still in the TLT 100 call, okay, if you're still in the 100 call, take some off into strength. Okay, S&P continues to move lower. Bonds, there's a, what is it, AOR? Core shares growth. That's not doing too good. SPY D, we told you to exit some of these. SPY D, looking for a dip down to the 21-day like it did over here. This moved half the distance that the S&P. Here's a SPY high dividend ETF. This moved only 4%. The last time the markets pulled back almost 10%. So look for this pullback. Time it probably in the next couple of weeks. You'll have a good entry for this one. I'll get back into more of these shares. Apple trying to bounce, a little short covering. Apple. I wouldn't try to be cute at the moment. CrowdStrike looks good. SMH is still fading. Tesla, American, Zscaler, Apple. All right, Apple. Okay, Apple. Black candle. If it drops a little bit more, this will turn red. That candle will turn red. The closing level is just a little bit lower. Right now it's black because it gapped up, it faded, but it's still above yesterday's high. Close. Okay, Microsoft's still fading. Okay, call credits are working really well. Okay. Call credits are working very well. Apple. Okay, call credits are working really well. Sell premium instead of buying. Amazon pulling back. Netflix watching this low on Netflix. Netflix starting to see TTM turn yellow, making higher lows. Maybe we get down to the 50-day and then bounce. Note the Bollinger Bands coming together on Netflix. Netflix coming together like the Beatles. All right, futures continue to fade. All right, let's take a look at CrowdStrike. I have an Iron Condor on CrowdStrike. CrowdStrike still working. Okay, this is starting to move towards the bullish, the bearish side. Bollinger Bands are narrow. CrowdStrike. Let's see what I can close these for. $37.
Palantir's Foundry platform, NVDA for their GPU accelerated AI computing, and I mean, like several of these other major players in AI. So they are partnered with the right folk, but again, I also think that they are fairly like corporate funding exposed. So far, it's actually been a pretty good quarter for some of these companies, but Adobe has actually been one of the most resilient in our coverage. I mean, we're hanging on to a 34% plus move year to date to the upside, and I know that's not where we were earlier this year. We pulled back about 3.5% from highs, but I mean 3.5% from highs is not what we can say for most of the Mag 7 at this point.
It's a great
CrowdStrike.
Oracle. I mean, like even though we found a bullish kind of pattern there.
Market's fading more.
Oracle does have the long
know, we have kind of hit a holding pattern here once again after we hit those highs near 146. We had a notable retreat. We fell back here to this level near 126. We had a high point before we had our gap up. That was our best closing price during our rally here. We retreated back to that same point. This was the beginning then of our new uptrend after our light blue downtrend here was broken. So we have retaken those moving averages once again, yellow 21-day and orange 63-day here. But like our last chart, we're failing once again at a point where we made a previous high here. So this one hasn't been as notable here. We haven't repeated the failure as many times here, but still not a great rejection sign here that we're seeing this swift rejection here. Actually, we're on pace to even form a bearish engulfing candle here, where today's red candle is swallowing up the smaller green candle. And we are breaking below our short-term white upward trend line here. RSI, even though we have broken our downward trend line and recaptured the 50 minute.
Okay, we'll continue to fade.
Slipping below this upward green trend line here. So look to see if we
Continue to fade. So these are working really well. Overhead call credit spreads, iron condors. What's Tesla doing? Tesla looking for a bounce. No bounce yet on Tesla. Okay, that was a pretty decent reversal. A lot of those, I'm sure a lot of those calls that were bought, they took profits into strength this morning, like many of you. Okay, anchored VWAP is coming into view. Anchored VWAP on SPY is coming into view. Maybe we'll get a little bounce here.
If you could get through that upside breakout, that'd be huge. And if you get rejected, that could be pretty juicy too. So it seems like in the short term, it'll be a little bit more of a fun earnings trade, maybe an Oracle. But nice chart. Like it. Okay, thanks, Rick. Thanks, Jenny. At the lows in the morning, stocks are getting hit right now as the Nasdaq futures down about 2%, more than that. So 5% down for Tesla, the big winner of the last couple of days, giving a good chunk up this morning. Apple also red now. We'll be right back.
We're not going to go straight down and we're not going to go straight up. So looking for a bounce. Mike Shannon. You guys know who he is. Mm-hmm. Do. Yeah, Tesla. I like that idea. Mitra. Okay, Tesla. Okay, so you don't want to do anything right now until we can see some buyers come in. Okay, there's no buyers yet. We're just fading. Let's look at Apple. No bounce yet. Still fading. Q's still fading. Everything's fading. Netflix is fading. No sign of shorts covering yet. Meta, they're just selling into strength. Now it's weakness. Broadcom, AVGO, looking for a bounce here at what looks like a support level. Broadcom. So if you held on to those puts, maybe consider taking some off.
Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Morning Trade Alive. I got Tom White here with me in the studio, and Diane King Hall joining from New York, same market correspondent. Tom, host of Fast Market. Kind of the ugly turn there, Mr. White. I mean, tech was the first thing that really broke. You know, we kind of ran into a brick wall with Broadcom, it seemed like, and everything just broke.
Yeah, it seemed like after the jobs report, everybody was kind of looking for that direction, right? Or is the SP 500 too highly valued at these levels with softening? If you look at the jobs report, you know, the white collar jobs are the ones that are growing at the slowest pace that they have in years. SP 500 looking at its worst week since March of 2023. So you're seeing some pressure there. It did break through that 50-day moving average. It looks like it's confirmed now, but now we're starting to get into that process where, hey, does everything need to reset? You mentioned the losses in the NASDAQ 100 down over 5% so far this week. So yeah, I think everybody's just kind of in panic mode right now. And it's not surprising because historically, September is pretty volatile. And if you take a look at maybe the moves in the other asset classes, you've seen yields go from positive to negative to positive, you know, chopping around back and forth. I don't think there's that anybody has a real feel of what the next step is for the equity market, at least in the near term.
I got a feel, baby. As long as we keep pushing up odds for 50, market's going to keep getting hit. As we were talking about with Pete, that's correlated with volatility right now.
Okay, Broadcom looking for the bounce.
In a way, like assuring in some sense, Diane, because I feel the market has finally normalized a little bit after a long
Tesla sitting on top of some areas of liquidity. Let's see what Tesla can do here. Tesla, Apple, same thing. Tesla, Apple. You can see this area of liquidity down below. Some resting orders. Waiting for a dip to buy Apple. Okay. Okay, looking for Apple to bounce. Doesn't mean it will, just watching for it. If it starts to bounce, maybe some calls on the dip. Money Magic talking about a long trade. All right, so we got a nice little dip here for Apple. 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 See if we get any kind of reaction right here. Apple. Okay, you got resting orders right down here. Apple looking for a bounce and a move back up into this range.
Deteriorating in a massive way. I mean, as Tom pointed out, you know,
225.
in some pockets, but there is also obviously weakness, for instance, in manufacturing. So I think those different sectors is just causing more concern again, especially because, like, yes, inflation has progressed to a level that the Fed is more comfortable with. We even heard the relief the last time we heard from Fed Chair Jay Powell. But in terms of what's next for rates, that's the balancing act. And it feels like this is a market that, one, is that, of course, we know markets don't like to deal with
Apple.
Two, as Tom pointed out, September is notoriously more, it's usually more rough, right?
Oh, yeah.
But three, in terms of the
Watching Apple for a bounce, potentially. Nothing yet.
Is there, what's the potential for what could be the result of that?
Tesla,
right now,
Apple.
There are more bets in terms of the CME Fed Watch tool that will get 25.
Yeah, barely. Like 51.49, I think, right now. But yeah, it flipped back. It's been going back and forth all morning. I'll come back to Alec Young's chart again at the top of the show that I think just really encompasses this.
Could see a little bit more downside on Apple.
Fast cut cycles have way lower returns than slow cut cycles. And that Davis chart that
Tesla. Watching Tesla.
Historically, when you measure cuts, because you're not in a rush, it's a much better environment for stocks. Yeah. But if you're blasting,
Okay, so I got to set an alarm. Got to leave here again. 10 after 11, go drop my son off at school and then head back. Apple, watching Apple. Watching Apple for a potential bounce. Could move a little bit lower, 220, 220.50. Let's look at money magic levels. I'm more interested in selling premium than buying anything right now. All right, let's see. Money magic, Apple, 217.50, 215. Okay, we're still potentially going to drop down a little bit more. Apple. Future's still moving lower.
Which maybe it should be at this point. Yeah. What's going to rescue us at this point? Watch the treasury market. You see people continue to pile in there. That's going to be some pain, I think, for equities.
I'll add on to that real quick, because if we go into full meltdown today, which I feel like we have the possibility to do, frankly.
Listen to these guys
because there still is
speculating.
AI valuation problem. That's basically what happened with Broadcom. But the thing I'll be watching for is if the dollar goes positive while yields are still down. If the dollar goes positive while bonds are rallying too, that's your pure sell both hands, basically everything, because yields going down tells us the Fed might actually go heavy, which should be dollar down. So if dollar catches a bid despite that, that's telling you that we're going to be getting shredded. So that's what I'll be looking for. It's an important point, though, Diane, to come back full circle, because Broadcom and the earnings are big part of this. Like, this is why, we started off with the tough hurdle in front of us.
Yeah, it's true. I mean, Broadcom, that outlook was disappointing, so that just weighed on the sector overall. So I think that is a separate issue. And the other thing is, I actually don't think we're going to see a massive drawdown, because I think a part of the last time we saw that off the back of the jobs report, I think the market was more prepared for this jobs report than they were for the July jobs report, even though there was a revision lower for that July jobs report. So I don't think we'll see a massive later. I think, to be fair, yes, like you said, I hope not.
Apple still sitting here at the low.
And especially given the Broadcom, that to me affects the tech sector more. And obviously we're seeing, a lot of the tech shares get dented right now, whether we're talking about Broadcom, other chip stocks, AMD, NVDA as well, taking another leg down today. But I mean, look at year to date, NVIDIA is still a leader in the S&P 500.
I think that's why they're going for it. Liquidity, man. It's just, that's the bank. If you want to sell for whatever reason, you dump the stuff that you're still up a ton on.
Yeah, and they were doing that with Apple earlier. Apple was the only Mag 7 that was positive. I think, using that as a safety play. You mentioned that dollar. Dollar's almost a half a buck off of the session lows here. So that push into the dollar might be reflective of this complete risk off mentality into the weekend. So you got to keep an eye on that. Watch some levels in the S&P 500. This level about 54.25 might be a level of support.
Broadcom pushing down to 136. So if you have those Iron Condors, no panic. We got a week to manage them. NVIDIA is still fading, so those semiconductor call credits are working fine. Okay, if you've been following the idea that selling overhead bearish call spreads, are you doing well? All right, so this one, if anything, we might see a hammer today, but probably pretty safe to take the 240, 245 at this point. Semiconductors, I have the 245, 250. Got $1 per contract, $100 per contract on those. Semis look really weak. NVIDIA's at the low of the day. NVIDIA at the low of the day. Okay, I got to leave here in about 13 minutes, about 10 minutes after 11. Drop my son off at school. High schooler. Okay, let's go back to the S&P. S&P. So we're looking for a bounce. Nothing yet. Russell must be cleaning up. Mondo, you still in those puts? Looks good.
marketplace and sift through enormous, staggering amounts of data.
Okay, we got a lot of liquidity down here looking for a bounce.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by.
Okay, starting to see a little bit more short covering. It's probably going to be another bear flag at this point unless we get some kind of follow through. 20, 30 minutes worth of solid buying. Okay, watching Apple for a bounce.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial.
The old guard is saying, oh, wait, off with their head.
Yeah, it feels controversial and it's going crazy right now.
It is going crazy.
All right, got a little short covering on the futures.
People want to buy it, the price can go up.
Goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
All right, we got resting liquidity down here. At green band, that's automatically calculated. Looking for a bounce in Apple, S&P. Let's see, Apple a little bit lower possibly. Apple, nope, it's right there. It hit that area of liquidity and started to bounce. Could be another bear flag. Could dip down a little bit more. S&P. Okay, S&P 500. Okay, do we get a hammer now? NVIDIA starting to turn. NVIDIA.
Good morning. We're 90 minutes into the trading day. Welcome to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. A happy Friday to you. The stocks are lower for the week.
Okay, here we go. S&P is starting to climb. All right, so we got watch for this to produce 3 or 4, maybe 6, 5 to 6 5-minute candles in the opposite direction. All right, so SMH, I just took SMH. I'm looking to get back in SMH on a bounce.
The Russell also losing ground, down 1.5%. Oil and gold are both lower. Oil sitting at 68.09, down over $1 a barrel. The barrel, and 25.36 there for gold, down about $7 today. The dollar 183, so that moves back to lower. 54,900 for Bitcoin. All 11 sectors are lower today after the jobs report, which we'll be discussing with Joe Busquela shortly. In the meantime, we want to take a look at a big story stock. Joining me right now, Jenny Horn, markets correspondent here on Schwab Network. And you have Broadcom on your radar. Broadcom right now down over 10%.
Yeah, Nicole, I'm seeing the selling that's only persisted throughout today's session. I saw it was down 7%, and obviously it's not letting up anytime soon. So I would say mixed bag.
Okay, big reversal there. Where do you see that green area? That's automatically calculated based on volume. This is considered a discount area where institutions will be looking to buy. The gray in the middle, I don't know if you can make that out, but the gray in the middle, that's the neutral zone, and the premium up there at the high. So if we got back up to these premium levels overhead, I'd be selling into strength. Okay. Apple, nice turn in Apple. Okay, so that was a nice bounce. Beautiful, beautiful. Hopefully you guys and ladies capitalizing on this bounce. Taking some shorts off and maybe taking some long. Okay, Apple. Okay, I got to drop my son here shortly. Let me just go make sure he's ready. I'll be right back. Don't mind that. That's just leftover bullish and bearish volume.
It's a solid, if unspectacular report. Right? Remember, we only need around 100,000 a month to keep the employment stable. What you saw was a decline in actually the unemployment rate for 0.221 from 0.253 last month. Moreover, once you really unpacked the data, what you could see was that decline that we saw decline, the much slower pace of job gains in July that was caused by a lot of seasonality. Those temporary layoffs, well, they more than reversed. It looks to me like it was one part the hurricane down in Texas, but mostly people going back to work in the auto sector as they shut down for summer or two. And remember, if you're not union auto worker, you get to get unemployment when they do shutdowns. So it distorted the data, right? And so, you got to take, this is one of these job reports, you really got to take a big step back and look at it. And, we talked about this. We thought hiring would cool for the end of the year. Now, at the beginning of the year, we said about 120,000 on average. Second half of the year, the 3-month run rate right now is 116. If you're a Federal Reserve policymaker, and you think you're restricted, what you want to see is
Okay, a little bounce, shorts covering. You can see, by the way, that we reversed very quickly. That was just shorts covering for now.
therefore we're getting that rate cut next month and later this month.
And that's exactly what we've been hearing. Fed Swallowers out saying it's time to start the cuts at the next meeting, so not implying it needs to be done today. What do you think may be appropriate? Would it be 25 basis points? Would it be 50 basis points?
This report screams 25 basis points. We've been pretty clear about this. Now, we wanted them to cut July. Okay, they didn't do that. That's over.
Okay, now we're starting to bounce. All right, I'm going to go drop my son off here in like 3 or 4 minutes. I'll stay with you here for just a few. Should be back before 12 o'clock.
Until we get to where neutral is. Now, I think it's really important post September 18th, the Fed heads get out there and start talking about neutral. Now, I've been very clear with you for this for a long time ago. We think neutral.
What's Tesla doing? Tesla looking for a higher low.
So that means we probably are going to get steady Fed rate cuts well into the second half of next year. That's a great thing. Why? It's going to unlock cash flows across the economy and unleash pent-up demand for business fixed investment. And that's a recipe to put a floor under the economy and keep things moving because we're mid-cycle.
Right.
In many ways, it's a soft landing.
So far, so good, right? I mean, because it doesn't scream panic. It doesn't say let's do 50 basis points. In fact, you're seeing parts of the economy that are still expanding. And so, we're not imminently heading into a recession or anything like that.
Okay, watching Tesla here, area for a bounce.
Clearly, we have an issue with housing, right? Especially with the campaign, we need to build a lot more homes. Manufacturing has been in the doldrums, right? We're going to see as the weighted average cost of capital comes down, employers feel more comfortable about borrowing at rates they know they're going to be able to refinance going forward. So that will
little too strong given the demographic trends that we're experiencing. It should slow to around 2%. Let's see how that goes. The Atlanta Fed tracking model, industry standard.
All right, so Tesla trying to bounce here. Nothing yet.
So tell me about what we should be watching. I mean, I certainly have the election on my mind, right? We're about 60 days away or so, and not necessarily which candidate, but more about policies, policy over politics. Is there any policies of the many that we're hearing that stand out to you?
We're having a substance-free election. This is more like
Okay, folks, I'll be back. Let me go drop my son off at school. I should be back before noon. Looking for a BNC pivots at this time of day. Tesla, nothing yet. It's still holding.
So let's go back to 217. We'll just leave the current administration out of this. At the last moment, they passed the tax cut. White House didn't design that. That was Paul Ryan in Congress. They'd been working on that for years. The detail was there. Both sides knew what it meant, right? Whether it's the vice president's plan to build more homes, good idea. I agree with it. No details. Or former President Trump yesterday saying he was going to cut the tax rate to 15% for firms that produce manufacturing, but only in the United States. Okay, what's that mean for the North American manufacturing supply chain and autos? And what does that mean for Boeing? Because Boeing's supply chain is global. Again, interesting ideas, want to engage, want to know, want to make econometric estimates. There's no detail there. So that's more political messaging, you know?
Yeah, we're hearing also about giving some money for mortgages for those who cross the border. I also wonder how the jobs reports, because I know that we had the revision from last spring to this spring of 818,000 fewer jobs that were added, right, in that final revision for the year. As those are crossing the border, how do we factor those people into our jobs report, to our economy? You know, you're talking about maybe, you know, we're hearing 25,000 for mortgages, 150,000, I think it was in California, they were saying. It's just all over the place, and I just don't know how economists can count.
So we need to take a step back and understand a couple things. The flow of migrants has been the secret sauce to why the economy's been so strong and why those job gains have been so strong. We don't have enough replacement workers here. We just don't. Not enough native-born workers to meet the demand. So we needed to import that labor. That's been a net positive, right? Now, from the data we've seen, immigration's really dropped off. It has really dropped off. And so we want to watch those numbers because the revisions that you were talking about, right, did not include that. We're going to get another benchmark revision early next year where we should get an update that will attempt to do that. My friends at Goldman Sachs and I think that 819,000 revision will be almost halved once we account for people who are in the workforce that we couldn't track, right? And remember, here's the thing. We just went from 240,000 a month gain, April 2023 to March 2024 to 170,000. So it just went from super robust to very strong. That was not a bad thing.
Right. So next revision, next year for the year, you think will be jobs added, not jobs lost.
Well, it won't be
or
jobs added.
Or be the half.
It'll be half. Instead of being 800,000, it'll be around 400,000.
Got it.
Yeah, that'll give us a better picture. There's almost 159 million people working right now. That's more than we've ever had. And we just don't have enough workers to meet that demand. There's still more than one job available for every worker employed.
Okay, get out there, get your jobs. Joe Brusuelas, Chief Economist, RSM. Thank you so much for being here. Plenty more to come here on Trading 360. Up next, it's the big three. 3 stocks, 3 charts, 3 trades. Then let's sign goes to the technicals. Joe Tagay, Equity Armor Fund, takes us to the trades for Eli Lilly, ExxonMobil, and Palantir next year. Trading 360, Schwab Network.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only in Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalini's live on the floor of the New York Stock Exchange. It's time for the big three. Three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts here to take us through the trades. Joe Tigay, portfolio manager of the Rational Equity Armor Fund. Glad to see you both on a Friday. So, Joe Tigay, how are you feeling about the market?
A little nervous, to be honest with you. I was hopeful that the jobs number would be good enough to keep the stock market in there. I think the market's looking down the line, seeing maybe some weakness in manufacturing, and really worried about the next coming quarters on this job trajectory. So yeah, I think it's not great when it comes from looking broadly. Particularly worried about semiconductors. They are a leading indicator for me. When they have weak guidance like Broadcom did yesterday, that's bad for the economy as a whole. Typically, when companies are expanding, they're buying computers, they're hiring people. When the economy is going to be slowing down, we're going to see that slowdown coming from the guidance from semiconductors first. So I think that's really what's going on today. And I hope I'm wrong, but it looks like a slowdown happening right now.
All right, let's get to what you're watching as far as stocks. And you're watching Eli Lilly, which had a dip but has been climbing back up. And on that climb back up, actually hit a new 52-week high. What say you about where the stock is headed, Joe?
Yeah, I really love this name. It's kind of in a defensive sector too. I'm kind of shifting money towards more defensive sectors right now. And I love their product pipeline. I think their size is really big. They're going to take advantage of a lot of the new innovations happening out there. So I love the chart. I love the name. I think I'm cautious for the rest of the year. I think a lot of my trades are very cautious for my clients right now. Trading a lot of call options instead of owning stocks right now is how I'm positioning. And then Eli Lilly, for myself, I'm just looking out through January. I want to be in the name, but I need to have protection. I don't think we're going to be racing through to new all-time highs and just running away over this period. So I'm looking at the 900, 1,000 call spread in Eli Lilly. It gives me participation to the upside. I'm capped, but I know my downside risk putting this on. So very cautiously optimistic for Eli Lilly. I'm hopeful they can trade towards their all-time highs and hopefully reach an all-time high, but I just want that protection on while I have my trade on.
Okay. Let's see what Ben Lichtenstein has to say about the technical. Looking at the charts.
Yeah, I like the bullish stance on this one, Nicole. There's multiple time frames that are suggesting that they are still in charge here. So I just want to start off with a intermediate time frame and then work our way up into that longer term 1 hour candle chart. You see high conviction, you see that all-time high and sideways consolidation just off it. This right here is a very bullish pattern. We're talking about a big move up and then balance, which is forming around this 940 level. So there's that high mentioned 972. Taking another step back, I want to show you that we're kind of working our way towards this lower extreme and retesting that 890 area, key area of support. But taking a look at a longer term chart, we've got daily candle queued up here, and you can see a similar pattern, right? We look for these areas of value to move at higher and higher levels to determine trend. It's the upside simply put right now. We do have a bit of double top up around that 972, 973 level, but coming right back down to the 50-day moving average where we found support in the past. We haven't spent a lot of time below that. You can see the lows that we saw in the beginning of August, but other than that, it was back in April. Still holding well above the 200-day moving average. And if I look at RSI, starting to roll over, I think more a reflection of that short-term price activity is still a bullish pattern playing out.
Okay, so still a bullish pattern. I know you were feeling cautious. Joe, any final thoughts?
Yeah, I want to participate on this bullish pattern. I think that we will see a trend towards all-time highs for the rest of the year. I think if the market is going to rebound today, it is going to rebound the rest of the year and not continue to sell off, then I think we'll see sectors like healthcare, we'll see companies like Eli Lilly being part of that leadership. So yeah, I want to be a part of this rebound, and I want to see this trading towards 1,000 by January.
Yeah. Okay.
And let's move on to ExxonMobil. This is oil's at the lowest levels of the year. It's at the lowest levels in probably December. What do you think about Exxon, which has been sort of chopping around for a while after hitting new highs back in April?
Yeah, it's been a struggle. Oil has been a struggle. No, oil has kind of been in front of the global slowdown, perhaps. I think oil is at an attractive level for a purchase for me. I'd like to play it by buying ExxonMobil. When the Fed lowers rates, sometimes people think about, oh, the economy's slowing down, but sometimes people think, oh, well, we're going to see some inflation because the Fed might be too aggressive. I think it makes a lot of sense as a rotation. Warren Buffett might agree with me selling Apple, buying Occidental, but as a rotation, selling out of some technology, buying some energy at these levels makes a lot of sense. So we have a slowdown, but people, they're going to not buy what they want, but buy what they need. Everybody needs energy and petroleum for everything. So I think energy is going to be a buy if the Fed and if and when the Fed lowers rates. Of course, we know they will be lowering rates, and the more aggressive they do lower rates, I think the better buy it will be because the inflation expectations for the 5-year period will be increasing. So that's kind of my bet play here. I'm thinking inflation expectations are going to pick back up as the Fed lowers rates, and I want to own energy, and I think ExxonMobil is a fantastic company to do so.
Okay, let's see what Ben says. What do you think about the chart here? We did see that high and then a lot of choppiness.
Yeah, similar to our last example, though, across multiple time frames, bullish pattern playing out here, Nicole. I wanted to start off with more intermediate. We'll do the same. We'll work our way into that longer term 4-hour candle chart. So we're going all the way back to the lows that we saw back in January. If you remember, stock was trading around that $95 level up to 123, sideways consolidation since. So this is basically acceptance of that run-up that we saw earlier this year, as the market has been and continues to be forming value around this 115 level. As long as we hold above 103, we're still in the clear in terms of trend to the upside. Well-defined upper extreme 123. You've got your lows from June. What was that down around? We'll call it 107, 108. Taking a step away from the 4-hour candle chart, adding some time on with daily configuration here. You can see a similar pattern playing out, balancing around 10, 110 that is. Areas of consolidation that formed higher and higher levels. This is just acceptance of the price activity we're seeing going all the way back to, again, beginning of 2023, essentially. 110 is a key area. Now we're kind of working our way towards that. So in this sort of random phase, we can dip down below it, work our way above. But again, you've got well-defined upper and lower extremes, and you've got 90 in this instance is kind of that line in the sand that the bulls wouldn't want to see crossed. Here's a look at Exxon relative to the 50, the 200-day moving average, dipping down below the 50, holding above the 200 as it did, if you remember, back in end of June, beginning of July. But again, you can see this value area that's formed, and simply put, it looks to me like bulls are in control here as well.
Yeah. All right. Let's move on and get to Palantir. We're talking a lot about tech today, and some of your thoughts here, Joe Tigay, about Palantir.
Yeah, I think it's a great place to be talking about. A lot of anxiety in tech. I think there should be a lot of attention on Apple's launch next week of their new iPhone. They're going to be coming out with new features. You got to buy a new phone in some cases to get these new AI features. And this is just a big test for the AI trade in general. Are people going to pony up the money? Are they going to be waiting in line, camping out, tenting at the Apple stores for this new phone to get these new features? And really, the market's seen a lot of money made by NVIDIA, a lot of money made by the chips sellers of the world ahead of this AI. But we haven't seen the big bucks being made by selling it to consumers. So I think that's a big challenge for the AI trade. But one area that maybe the market's overlooking in the AI trade is selling to other companies. And that's actually, right, governments in particular, that's where Palantir makes their money. They're selling big data analytics, big data AI to governments, to large companies. And I think that's where we're going to see the first wave of profit in AI, and that's why I love Palantir personally. I think I want to own it for the long term. This is not a trade. It might dip back down, but I just want to be in this and just watch it play out.
Okay. Look, it had a nice run. It's up 1 year, almost 100%, up 95% in 1 year. Ben?
Go 3 for 3 here, Nicole. I completely agree with this one as well. High conviction trade to the upside. Looking at hourly candle chart behind me, you can see the big move on the left side of the screen. And then, as we've been talking about, that acceptance, that new area of value forming at a higher level. Again, these are hourly candles, so we're looking at some of the price activity we're seeing. If you remember, going back to those lows, that was the dip that we saw to begin the month of August. Big move up, high, up around that 33 level. You've got a low, we'll call it around 30, and we're kind of balancing within this range that we've established here, so no rejection of that upper level. Similar pattern playing out on the daily candle chart as well. So we've added some time on. We can see migration of value to the upside, exactly what we look for, that staircase type pattern where we're seeing value form at higher and higher levels. Market pauses, regains composure, vertical separation, a breakout to the upside in this instance. And it's kind of like a wash, rinse, repeat type pattern that we're watching. And I just wanted to show you where we are again in this instance relative to 50 to 200-day moving average, convincingly above it right now. We found support a few times on it. Rolling over a bit in terms of RSI, I think that's more a reflection of some of that short-term price activity as we come off that high of around 33. But yeah, across again, multiple time frames, value continues to move higher. It looks to me like we're trending up.
Okay. Joe, we'll give you the final word today.
Yeah, I guess cautious optimism in the right place. I think for the next quarter or so, it's going to be about stock picking. We're going to see a lot of rotation while this economic data remains mixed. Hopefully the jobs data will get better. Hopefully the jobs data is not going to fall off the cliff, and this economy will stay strong. Or else, I think 2025 could be a troublesome year.
Yeah, well, we're hearing more and more about a soft landing, so maybe that will go exactly as you planned. We'll see. Joe Tugay, Equity Armor Fund, and Ben Lichtenstein there on the charts for the big three today. Thank you. Coming up next, how are you feeling? We're going to spotlight investor sentiment. Janus Investors just released its 2024 investor survey. What do you need to know? Let's find out more. Trading 360. We'll be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time to spotlight investor sentiment. Janice Henderson has just released the latest investor survey. Joining me now, Matt Summer, head of Specialist Consulting Group at Janice Henderson Investors. Thank you so much for being with us. So this investor survey report, Insights for a Brighter Future, has just been completed. What were some of the major takeaways?
Well, great to be with you this morning. I think one of the major takeaways is the fact that 78% of those surveyed are either very or somewhat concerned about how the upcoming presidential election may impact their financial picture. In fact, given those levels of concern, it's perhaps not surprising that almost 2/3 plan to take less risk until the election is over. And we would suggest that that's a mistake. We looked at the last 75, 80 years of data, and we looked at the market performance in both election versus non-election years. We looked at Democrat-controlled White Houses versus Republican-controlled White Houses. We looked at divided versus unified government. And what we concluded is regardless of how the political winds may shift in Washington, D.C., there's very little evidence that in and of itself warrants wholesale changes to one's portfolio. So we would really suggest that investors, despite all the noise over the next couple of months, that investors stay the course relative to their portfolio and their long-term financial goals and objectives.
And that's what it is, I guess, based on what you're seeing in your historical data, that it's more noise than anything, because you said as folks are now saying, I want to take less risk, more than half, right? You said about 2/3 of the folks are saying, I'd like to be a little less risky going into the election. What do they seem to be worried about when it comes to the election? I mean, is it one side or the other side, or certain tax policies, or is there any sort of detail as to what they're worried about?
Well, one of the things that we have uncovered with our survey is that people are very concerned about the level of political discourse within the country. People are also concerned about the growing instability of what's happening on the world stage from a more geopolitical perspective. So it isn't necessarily one thing or the other as much as it is the uncertainty. In fact, we asked outright, is it inflation? Is it interest rates? Is it the risk of a recession? Is it perhaps poor stock market performance? And what we found is that it wasn't necessarily any of those things. It was all about the political uncertainty in the current environment.
Yeah, and I'm not sure that that's going to change. The geopolitical story is not going away when you talk about, right, the world stage. And as far as the back and forth in politics in Washington, gee, I mean, we're all exhausted. And I'm not sure that's going to change anytime soon, but we'll see. That being said, there was another big topic, and it had to do with AI and fraud and scammers. And we've all gotten them, and they are scary. That's something that came up, right?
It did come up. In fact, 73% of those surveyed felt that AI will only make it easier for fraudsters to exploit people financially. And one of the things that we're hearing a lot about recently is something called the grandparent scam. The way that this works is fraudsters will go onto TikTok and other social media outlets. They will get a voice digital print of young people, and then they would use AI to impersonate that voice to call grandparents expressing, I've been in a terrible car accident, people are hurt, don't tell mom or dad, please send money. It's very, very real. And receiving one of those phone calls out of the blue from a loved one, of course you want to be of assistance, of course you want to take action. So two things we're suggesting to investors. One, there are very few things in life that require you to send money right away. Now, yes, there are emergencies. Perhaps something happens, there's a sense of urgency. But first and foremost, take a deep breath, take a step back. Secondly, the way that many of these scams are facilitated is through the use of cryptocurrency. So if the person who you receive a phone call or correspondence from is pressuring you to do something immediately, and if they're insisting on funds transferred via Bitcoin or other types of cryptocurrencies, those to us are the two biggest warning flags. Just take a step back and consult with your trusted professionals.
Yeah, great advice. I think that is so on point. And I think we've all heard stories about this. And when we speak to enforcement, like police and all that, they always say to have a safety word to really prove if it's you. But it's true. And for those of us who have our voice out there even more so, like you and me, I mean, there's so much out there for those AI folks to take. That being said, how about 2025? What do you think investors need to focus on, or what seems to be, looming?
Well, for 2025, our number one suggestion for investors, as well as their financial advisors and other professionals, is to build your financial literacy, build your financial knowledge. We found that 87% of those surveyed were interested in building their financial literacy over the next 12 months. And what was really interesting is that this was consistent across all wealth levels. It was consistent across all ages, as well as other socio-demographic characteristics. So there's a strong appetite out there for people to get smarter about the market, smarter about Social Security and Medicare, smarter about different ways to save for retirement. And we would encourage individuals to dive in and ask for help where and when they may need it.
And last but not least, what were investors in this survey most happy about?
Well, one of the things that we found relative to investor behavior, particularly over the last 12 months, is that people were happy to see higher interest rates on their money markets and CDs. In fact, we did see a shift out of equities into money markets and CDs as people were taking advantage of rates that they haven't been able to take advantage of in many, many years. But we have an expression, and that is you can date cash, but you can't marry cash. People still need to hold a significant portion, particularly younger investors, a significant portion of their portfolio in equities in order to maintain purchasing power over the long term. And despite the peak interest in cash over the last 12 months, we found that investors are still pretty bullish on equities, particularly in both the healthcare as well as the technology sectors.
All right, great to see you. We're happy to see you. Matt Summer, thank you so much. A really interesting survey there. Janice Henderson, Investors. Coming up next, the disruptors, and we'll focus on Adobe right after a price target hike over at Stifel and a programming alert, episode 2 of Inside the Mind of a Trader. Premieres Monday, 5 p.m. Eastern. The show is created and produced by Charles Schwab. Journey into the minds of people who trade brilliantly. And here's a preview.
I want to start out by talking about your career as a college quarterback.
It's funny. I mean, I'm trying to dodge 300-pound men tackling me. Now I'm just clicking buttons.
When I see you work like this, are you actually seeing physical railway lines and lumber?
Risk management is what keeps you alive. I'm not very good at sales, turns out. I'm very good at trading, where my customers don't care about anything other than me having the cheapest price.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Neil, how's my favorite client?
Quick question, Carl. Can you offer me the same choices as Schwab?
Choices?
Yeah. At Schwab, I can get full-service wealth management, advice, and invest and trade on my own.
Come on, you know Carl's the only choice you need, right? Neil, tell me you know this.
Gotta run, Carl.
Schwab.
Have a choice in how you invest. with Schwab.
Welcome back to Trading 360. I'm Nicole Penalini, live on the floor of the New York Stock Exchange. A look at developing stories this morning. I'd like to bring in Diane King Hall, senior markets correspondent here on Schwab Network, taking a look at DocuSign with up arrows today, and the analysts are seeing some bright spots here for this name.
That's right, and it needed this win in terms of the share price, so it performed better than expected on both the top and bottom line. Adjusted EPS came in at 97 cents a share. Again, that was better than expected. Revenue rose 7% to 736 million. The expectation was around 726 million, a little more than 726 million. So you are seeing shares increase by nearly 3% at the moment. That brings the share price up for the year. It is performing better on a year-over-year basis, but year-to-date, it really needed this win. In terms of its outlook, the guidance is also helping to give, put some tailwinds for DocuSign, because the initial reaction yesterday was it popped and it was a little bit of pressure, but now it's solidly held on to gains for today's session. The outlook, they're looking for revenue between 743 to 747 million for the third quarter. The expectation, analysts looking for 740 million. So the future looks bright for DocuSign. And one of the challenges DocuSign had been facing is that it did really well during the pandemic because, so many people work from home, but in this post-pandemic world, it had more challenges, kind of maintaining the momentum that it had before. You're seeing Wells Fargo boosted its price target to $50 a share. Previously, they had it at $48 a share. They are maintaining an underweight rating on the shares. So it looks like some of this is wait and see, but DocuSign said they've improved efficiencies. That's one of the challenges. They stabilized the business, and they have new growth areas as well, Nicole.
Yeah. I'm looking, I felt so good when I was looking at it, and I saw the 1 year was higher, and I remember what a great pandemic stock this was.
Yeah.
I just pulled up a 3-year chart. That was the easiest. It's terrible.
Yeah.
Don't look at the 3 years. Okay. Thank you, Diane King Hall.
You got
Good
it.
to see you. Appreciate it. How about we turn our attention over to the disruptors? And George Sillis is with us, senior markets correspondent, taking a look at Adobe. Stiefel hiking the freight target there. What are they seeing?
Well, it's kind of a bold call going into earnings next week on the 12th for Adobe, and Stiefel and Nicole has increased their price target to $650 from $600. They do maintain a buy rating on this name, but if you look at Adobe, which is really a leader in document software, Creative Cloud, digital media and marketing, and also e-commerce, and they're integrating, of course, their Firefly AI into all of their Creative Cloud, software. But they're actually looking at, this is now Stiefel, at the channel checks in terms of customer trends for their Creative Cloud product software, and they're seeing improving trends. Considering the stock, really, if you look at it in the last year or so, is actually down about 5% year to date. It's basically flat. But overall, the business seems to be improving in terms of the channel checks. The earnings growth estimates for Adobe are actually quite conservative. Now they're expected to earn about $18 per share this year for 2024, and going into next year about $21. But I think the other thing that Stiefel is looking at is essentially valuation. Right now, looking at 2025's earnings around $21, the stock is trading around 26 to 27 times earnings, where historically speaking, it usually trades around 36 times earnings with improving earnings and sales growth for the underlying core business. So I think there's a call here for, stable to improving trends from a customer base and a Creative Cloud software suite, but also valuation looks rather compelling for Adobe, which if you look at the stock, especially in the past week, it's actually trading, I would say, rather well compared to the S&P 500 and the overall broader market, which again, maybe that value proposition that I mentioned just a moment ago, which again is probably inclusive of Stiefel's call with their target down to 650 from 600.
Right. So how do you go about an example trade then?
Yeah, so volatility is high, Nicole, right now. So when volatility, especially the VIX, is above 20, we sell premium. I think if you look at, the valuation, it looks quite compelling for Adobe. I'm going to put it in the same sort of camp as Workday. I'm not saying it's going to go higher after earnings, but I think the valuation is relatively stable and the price has been acting stable. So I want to capitalize on effectively high implied volatility in the options premium. So what I'm going to do is I'm going to go out to October monthly contract essentially going to sell the $545 cash secured put. And now altogether, earlier today, you could sell it for about $22 a share or $2,200 a contract. So essentially, the reason I chose that strike price is that it corresponds to the 200-day moving average, which again may be a pretty impressive long-term level of support. And the other reason I chose that strike is that it represents about a 35 delta. So we're selling a 35 delta, which implies about a 65% probability of profits. In other words, the stock will essentially be trading at 545 or higher by expiration. And that's the whole objective. We essentially want to see that level hold, and that premium of $22 will erode to zero. But if you do structure this trade, you have to be willing and able to take ownership of the stock at $545, but your cost basis on this position is $523. So it's a neutral to bullish trade. It allows us some flexibility to the downside to $545, but we also have sufficient time over 40 days for this trade to manifest.
Okay. Thank you for that. Good luck there at Adobe today. And an example trade for us. George sells every day with our disruptor. Good to see you, George. Thanks. Coming up next, our 360 round, we'll dive into those semiconductor names. Of course, NVIDIA, always a headline, and the latest on the Department of Justice. And much more, many more names to cover. Our panel is ready.
For the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network. Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. Peace out, Coffee. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. It's time for our 360 round where we focus on the semiconductor space. It's really important to sort of put this into perspective. The S&P 500 is down 3.8% for the week. The NASDAQ is down 5.5% for the week. Let's say you were busy and you were checking your semiconductor stocks. Many of those are down between 10 and 15% this week. NVIDIA, ASML, AMD, Broadcom. When you see these names down so dramatically, you say to yourself, now what? This is our discussion. Kim Forrest is with us, founder, chief investment officer of AVGO Capital Partners, and Andrew Graham, CEO of Jackson Square Capital. Where do we begin, Kim? What do you think? What do you say when you see those numbers?
Well, two things. One is something that I've been talking about for a very long time is the rollout of AI is not going to go as smoothly and certainly not as linearly or as fast as anybody believes. And I think the earnings from NVIDIA and yesterday's Broadcom kind of show that while, their products are still in demand, they are not white hot demand anymore, and the demand doesn't seem to be growing. So that's the first concern. The second concern is today's jobs numbers, and the revisions to the prior jobs numbers show a slowing demand for labor, which also indicates probably a slowing economy. And if you are an old-fashioned trader, you want to get rid of cyclical stocks, and semis are very cyclical, or have been in the past. I'm not sure that they really are anymore, but they have been in the past, and you're going to sell them. And that's how you get to Friday, and your stocks are really down.
Yeah, we're seeing a major sell-off. The question is, is this an AI play for cheap, or are we concerned? To your point, Kim making some concerning comments. What say you, Andrew?
I think it's an AI trade for cheap. I mean, it's a crowded long position. There's no doubt about that. The semi trade is fatigued, and the Philadelphia Semiconductor Index, the technical picture on it looks kind of sick. It looks like it's probably got maybe 9% downside to support levels. Don't hold me to that necessarily, because I think some of these are holding in nicely, NVIDIA and Broadcom to be specific. So yeah, to Kim's point, rate cuts improve the relative attractiveness of cyclical laggards, and that's kind of where the money's flowing at the moment. Today's downtick, jobs-related downtick, if it leads to an increased spike in volatility, will lead to multiple compression. Some of these semis have high multiples, so they could come in here. But I see the NVIDIA report and the Broadcom report as just continued strength.
So for NVIDIA, you're not worried about the Department of Justice. There were reports that NVIDIA reached out to the Department of Justice and confirmed there was no subpoena, in fact, and that Bloomberg report was wrong, but it was enough to sort of startle the markets. But Andrew, you would buy NVIDIA. You like that one, right? Is that correct?
Yeah, it's our biggest holding at Jackson Square Capital, and Broadcom is right up there in the top 10. But yeah, there's a level probably to buy NVIDIA. Maybe it's $95. I think that's what we've penciled out. But yeah, the DOJ investigation, it's fine. You can look into it. It's not like NVIDIA doesn't have competition. They clearly do. If you take the custom ASIC shipments from Broadcom, the number one leader in custom ASICs, and you add Marvell's, you get unit shipments that equal that of NVIDIA and GPUs. So they've got competition there. They've got competition on the networking side with Arista in Ethernet.
And what do you think about NVIDIA, Kim?
I think it's interesting, and I do think they're the leader right now. I mean, I'm queen of the obvious on that one. And I think, though, they probably have a good 36-month lead on anybody out there that wants to chew into their revenue, and more important, that margin that they are able to get. I am thinking that AMD is coming after them hard. The ZT acquisition, they're going to get 1,000 engineers that are going to be able to help AMD better create products that will go right into the server blades. And I think that's important. That's something that NVIDIA doesn't do right now. And I think AMD is a genius for that. And then they scooped up the big salesman, again, from NVIDIA. So all signs point to AMD as that is their target. And I think there is, certainly room for more than one GPU and, inference engine provider. So I think it's going to be a great race, and keep your eye on AMD.
Yeah. And you made it clear, Andrew, that while Intel, I think everybody thought Intel's a great company, and then we're disappointed again, you're out on Intel, Andrew, now.
Yeah, I have been for maybe 8 years or 9 years. So I'm open-minded, though. I mean, really, we're at the end. I mean, keep in mind, I think we're at the end of a bad cycle for semiconductors. We're sitting here and saying, oh, these stocks have done so well. But really, in the broad semiconductor space, we're just leaving a demand-led downturn. And so you got to keep an open mind that Intel can make a turn. I think a lot of things that Intel did were idiosyncratic. They were self-inflicted wounds or unforced errors. And they've got to work through that. I think they're trying to right now. But I keep an open mind. We'll come back to it maybe once they get close to reinstating the dividend or something. But not today. Today, I think it's Broadcom. That's our number one pick. I like it post earnings, and we'll add some.
Are you concerned about demand, Andrew? Do you think that it's slowing? We were talking about whether or not this group is linear, or do you think it's growing and sort of exponential at this point?
Exponential. So when you look at compute workloads getting more sophisticated, companies, hyperscalers, OEMs want to optimize performance. They want to optimize power consumption at a lower cost of ownership. Oh, sorry, I linked this one out. That's the that's what you're getting with these custom ASIC chips, right? Custom ASIC business is a $30 billion business growing at 20 to 25% compound rate of growth. And Broadcom is the leader there. So they're doing 3D, next generation 3D chip stacking with TSMC. It is, number one pick.
Just Kim. Yeah. Kim, I think about rates coming down. How do you think that can fare for the group? Quickly.
Well, again, I think a lot of people have been trained that semis are cyclical. And I don't largely agree with that because I think they are the thing that drives our economy. And sure, you're going to get a bump up whenever companies start hiring again and they have to support new people with some sort of device, whether that's a tablet or a PC, and then, more capacity on their network. You get that. But I think for the foreseeable future, the trends are that businesses are looking for productivity. Semiconductors are the thing that gives it to them, and whether that's in a data center or closer to home, that regardless of what's happening in the economy, that's where spending's going to be, even in a downturn, because companies need productivity.
Great to see you both. Kim Forrest at Boca Capital Partners, Andrew Graham at Jackson Square Capital. Thank you. We'll leave you with the Dow down 356 points, folks. I'll be at the booth on Friday. I will see you. This is Trading 360. I'll see you at 2 p.m. for the watch list. Download our free Schwab Network app. It's available in the Apple App Store. Keep it right here. Fast Market is next.
This election season, stay out of the muck and the mudslinging. Schwab Network's by the numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week. Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed. Stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself, find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not a formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data. You certainly see patterns. Context is so important. I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at things, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial.
The old guard is saying, away, off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy. So what does all of this mean for the market?
As long as people want to buy it, the price should go up. Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one. There's a market for you.
Market overtime on the Schwab Network. Thanks for tuning in.
All right, we're back. Tesla trying to push it a little bit higher.
Traders, welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today, including discussions and option strategies. We're going to cover Apple, which is up about 15% this year, under some pain today into its low time event on Monday, and AMD, which is down about 40% from its all-time highs that we saw in March. And light oil breakdown
Still drifting lower. Futures still drifting lower.
has fallen about 20% from its all-time highs over the last couple of months. Now let's take a look at the major indices, which are at session lows as we speak. The S&P 500.
NVDA at session lows.
1.6%. The Dow Jones Industrial Average off 380 points. NASDAQ 100 leading to the downside. Some weakness in tech off about 2.6%. Russell 2000 down nearly 2% in today's session. Help me break down the market action. Let's bring in my co-host. That's going to be Kevin Hinks. Kevin, right across the board, it was choppy when the jobs report came out, positive to negative, and now it seems like we're in free fall. We've got Feds and bonds; those continue to ramp up. 10-year yield at over 1-year lows.
All right, looks like short covering again.
Positive on the day, putting some pressure on equities, but yeah, this is a broad-based sell-off here.
Yeah, the one thing that's surprising though is that they're not buying their yield. That I guess that their yields being down is a little.
Okay, S&P 500. We got 424 stocks down on the S&P. 78 are up.
That's what I think it is.
Eventually one trumps the other. You know what I mean? And I think that's what you're seeing, which is a little concerning.
Right.
Actually,
Russell 2000. We've got the majority of stocks are lower on the day. 1,520 issues are lower. 168 are higher. Still confirming what we suspect is a broad-based fade in the markets. NASDAQ 100, 90 stocks are red, 11 are green. Fastenal. Let's take a look at some of these stocks that are higher on the day. Fastenal. SMAR. If you like the stock, ABCD pattern.
Yeah, definitely some pain. We had New York Fed's Williams speaking. Fed's Waller also spoke. He said open-minded about the size and pace of rate cuts, but they're all going to be data dependent. Goolsbee was giving some comments also this morning, so we'll continue to watch that. Let's enhance this conversation. Bring in our next guest. It's going to be Joe Mazzola, head trading derivatives strategist at Charles Schwab. Joe, give me your take here. Seeing weakness across the board here for equities.
Smart Sheet reported earnings last night. Pretty decent earnings. Buying the dips. SMAR.
Really what they're keying on, and it's not just the number today; it's the revisions that I think were so big. And it basically says that over the last 3 months or something, we've added a little over 100,000 jobs. I mean, that's paltry kind of
considering what the pace was for 2024, an average rate.
If you're just still sitting at the lows, nothing to do at the moment.
Employment numbers and just in the economy as a whole. Now, the market is kind of juggling this idea of, okay, where are we at this point? Has the Fed been so restrictive that now the economy is pushing towards recession? I don't think we're there yet, but I do think that it's at least a sign that, hey, the slowing has occurred, and the Fed might be a little bit behind the curve here in terms of whether it's the 25 to 50 basis points. I'm agreeing that probably will go 25 basis points, but I don't know if the market's going to like that.
Yeah. Earlier today, I looked at the CME Fed Watch tool. It was a coin flip between a 50 and a 25 basis point cut. Now that's come down. It's only 23% for a 50 basis point cut. But the market seems to want that 50 basis point cut. Kevin, we've been talking about that. You don't want a 50 basis point cut because that means something else is breaking down.
Right. Here's the numbers on what Joe was talking about the revisions.
Still sitting at the lows. Looks like bear flags. We could push a bit lower. Don't see any short covering yet.
86,000 jobs revised lower. How about this stat?
Broadcom looking good. Broadcom pushing higher. That's the only thing that looks okay right now. Tesla's trying to come off the low. Tesla coming off the low.
That's the real numbers on the labor market and unemployment right now. You got about 800,000 more
Tesla
unemployed than you did a year
looking for a bounce.
Now, that being said,
Could see this 185 level, 212, 210 level. Starting to see some short covering, maybe an ABCD pattern on Tesla. Tesla was seeing buy signals on the short time frames. Tesla.
surprise the market. The market gets ahead of itself, which it always does. What do you do to do that?
Let's see what the 0-day looks like.
Go through,
Where's my 0-day chart?
Journalists to put out something.
Nick Timmerose, maybe?
Yes, which he's done before. He's the whisperer, right? So I wonder if that'll happen because Jerome Powell can't let this fester towards 50 basis points, or he's going to have to disappoint the market. I think because I think 25 basis points is locked in. That's my
0-day is still pretty bearish looking.
Opinion at this moment, anyway. But Joe, you look at the SP 500 off about just over 4% so far in the week. This is the worst week since March of 2023 for the benchmark index. Nasdaq down nearly 6% so far this week. So my question to you is, what changed? Because just a week ago we were talking about soft landing. We were just below all-time highs, and it seems like we got some jobs data.
0-day is starting to see some yellow histogram bars. Maybe we get a little turn here. Some shorts cover. Netflix bounce. Netflix.
We're still only 4 or 5% off all-time highs, right? It'd be one thing if we were looking at a 15, 20% correction pushing down towards the bear market in the last month or two. We did see that, not back in August, but we've seen that during Powell's term as Fed president. So we're not even remotely close to that. And I think that the Fed is going to say, look, just because the markets might be overreacting a bit doesn't mean that we want to add more fuel to the fire. I said the markets wanted the 50 basis point cut. I'm not necessarily sure that that's the medicine that they need, right? I think that they might say that they want it, but boy, when you get it, you guys mentioned this earlier, does that spook them? We looked at the difference between market performance.
Tesla looking for some long signals. Nothing yet.
5 cuts in a year versus a fast rate cut cycle, which is more than 5 cuts. The market performs remarkably better in a slow rate cut cycle. So
S&P cash still looking bearish. Down volume still leading. 0-day is not a long yet.
But if it's something that we're looking at 100 basis point cuts by the end of 2024 and 200 basis point cuts total.
Watching Tesla for a move here. Watching Tesla.
We're right on the precipice of that, fast rate cutting cycle, and really the only time that the Fed is going to do that is if they see that there's something on the horizon that's kind of providing them with a little bit of caution. And I think the markets right now, you're asking why the market's selling up. It's possible they're kind of sniffing that, and they're saying, okay, maybe the data hasn't been bad to the extent to where we're worried about something right now. But boy, there's been that inflection point in the last couple of weeks of data where it absolutely is showing economic slowing.
Yeah, and I think that's the concern, that, hey, we're going to go into a recession. The yield curve inversed where the 2-year is now, it's not negative, it's positive, Kevin. So there's some concerns and people like, oh, that means everything's okay. No, that's usually what happens right before a recession starts. But if you look at a lot of the data, and we get a lot of data next week, CPI, PPI, so we'll get some inflationary numbers, even if the Fed's in their quiet period. There's still concerns out there that this economic slowdown is going to continue to ramp up, and that's that snowball that you don't want, where you want the Fed to be ahead of it. So maybe they should have cut a 25 basis point in July.
I don't know.
Still waiting. Tesla looking for a follow through. Got to get above 218, 218.50, I would imagine. I would imagine we'd see some short covering if we can't push it much lower. Broadcom trying to get back above 140. Broadcom and Tesla look the best at the moment.
You've got the leadership of this market, which is that AI large cap tech sector failing and struggling, and the percentages are big.
Futures still sitting at the low.
You look across the board, they are, if you're what used to be, Tom, the rally, if you had anything to do with AI, is flipping. And now it's, if you had everything to do with AI, you're softer. Right.
And it's resetting, right? Yes. Expectations are being reset because, hey, did we reach peak growth for AI already?
Yes. And there's, I think, we can speculate on the macro, but I think that's what's driving the market right now.
Right. Weakness in tech. Here, Joe, VIX up above the 23 level. I mentioned, Joe, that the dollar's hitting, or it's a half a buck off its lows. So now you're getting a push into the dollar. Maybe that's a safety play. A push into treasuries, pushing those yields down to 1-year lows, Joe. Is that, the reaction that you'd expect with this kind of move in the equities, and it doesn't right itself at some point?
I think the bond move is telling you something, right? And so one of the things that I found kind of fascinating recently is the MOVE index, right? So, which measures fixed income volatility, has really been, no pun intended, but it has really been moving, right? It's been spiking. But we haven't gotten the kind of the requisite move in the VIX. Now we're starting to get it, right? 22, 23, it's definitely picking up. But you've definitely seen a heck of a lot more volatility in fixed income than you have in the equities market. What can you attribute that to? Is it mostly that all these short vol plays are kind of compressing volatility in the equities? I mean, there's a lot of different things that you could say, a lot of different things you could point to, but at some point they're going to kind of catch up with each other. It's in the MOVE index when you're kind of in this type of an environment right now where bonds are all over the place. It tends to kind of lead the charge on the equity volatility, and we're starting to see equity volatility pick up, but not to the extent that you would expect on a 4% move in 1 week. I would have expected the VIX to trade higher. And Kevin, one thing I wanted to add real quick to what you were talking about with Broadcom, I think it's an extremely important point that you made. 2 months ago, if you were to report earnings and you didn't report big jumps in AI-related spending, your stock gets hammered. Broadcom comes out and they report fantastic AI-related earnings, but it's the non-AI-related parts of their business that have shown a real slowdown in growth, and that's where the stock's getting hammered today. Huge change in sentiment right there, and I think it's a really important and critical point that you just showed.
Yeah, and you can beat on EPS. We talked about this yesterday. We talked about AVGO, was the fact that you can beat EPS, you can beat on revenue, you can guide a little bit higher. If you don't meet everything and thread the needle when the stock's up 37% so far this year, you're going to get punished, or you have that possibility to get punished. Kevin, I mentioned the data that's coming out, CPI, PPI next week, consumer sentiment. Also, got a couple names as far as earnings go.
Okay, this is the time of day we start looking for BNC pivots. Can we get a short covering rally off the low? Looks like we might. S&P looks like we might get a short covering rally.
think next week is with the Fed coming up on the
SPY looking for a change in direction.
more inflation data. I think next week is a macro week for this market. And that's
Okay, what do we got?
you gotta watch
540.
that is focused on AI, and you got to watch the price action right there because I think that's going to drive the market along with a big macro. So it's two things: it's the AI trade and it's macro.
Yeah, and Joe, real quick here before we let you go, or before we go to break, push into risk-off assets at this point in the Treasuries, dollar a little bit stronger here, but then you're starting to see weakness in like crude oil, even Bitcoin down 3.5%. So it seems like a completely risk-off day, and that oil moved to the downside.
Yeah, not much going on. Broadcom is trying to get back above 140. Not much there. Apple looks like it could be changing direction. Tesla's still dealing with bear flags. Tesla. We got to see this red band turn green and price get back above, at this point, 218.50 or so. Nothing yet.
The strength of the world economy right now doesn't mean that it's slow, but it is slowing. I think that's the key, is that the market is trying to wrap its head around a slowing market. It doesn't have to be a market that or it doesn't have to be an economy that's falling off.
Tesla still moving lower. No follow through. No pop yet. Apple still sitting here. Okay. Could see another wave of selling. All right, so we got yellow TTM bars. It doesn't mean it's going to go to green, go to cyan. We could see those bars start to turn red again. Okay.
Anymore, but it's acting to the employment data. That's what it's keeping.
Yeah, I mentioned that earlier with Oliver Rennick, is the fact that valuations are still elevated on a historical basis for the S&P 500.
Okay, looks like we're going to drop a bit more. Tesla testing the low. No follow through yet. Could see a little double bottom. Tesla not doing much. Okay, 211 down there. You can see where resting orders are. Could see a little bit more downside. Okay, premium overhead, discount below at green. This is 185. This is way down here. I don't know why this is moved. 185, 190. 185. Oh, that was a put credit spread. Okay, that's why. 185, 190. I'm looking at this green band, though, where these resting orders are. Okay, right where we are right now, that's a million shares at 37%. That's a pretty decent amount of shares. Right where we are right now, just overhead. We're below that level, so assume short until we get back above that. Okay. It's going to be pretty obvious when the shorts start to cover.
Have a choice in how you invest with Schwab. Trading at Schwab.
Okay, NVDA turning. NVDA.
Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trade.
Shorts covering NVIDIA.
Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Neil, how's my favorite client?
Quick question, Carl.
Okay, Bitcoin's still moving lower. Bitcoin looks like it's going down to that lower channel. Bitcoin.
Come on, you know Carl's the only choice you need, right? Neil, tell me you know this.
Tesla, no bounce yet.
Schwab. Have a choice in how you invest with Schwab.
Oh, speaking of CNBC, let me shift gears here. Really don't feel like listening to these guys all morning long. Oh, now it's the turning point for the AI trade. So CNBC telling you to sell everything AI related, looks like. Okay, NVIDIA. We're just sitting here doing nothing. Markets. Got a little bit of short covering. That's about it for now.
So they all piled in and thought they were geniuses, and they weren't for a period of time if they got out. But now, the warts become much more apparent when the market's declining. So it's not a panic situation. They'll get down to reasonable levels, but let's not forget, by and large, all these companies, except for NVIDIA today, but will be in the future, are.
All right, Tesla looks like it's going to make just made a new low. Tesla new low.
Much more appreciable than 3% in GDP, but I think that there's still room to come down. Call it a recalibration. I like that term. That implies that it's the pause that refreshes, that we go higher from here. You made a good point right now, just about NVIDIA and everybody else. They are cyclical, Steve.
Trend is down. Most stocks are down.
I tell you, when it comes to NVIDIA or Qualcomm or any of these,
All right, let me take another look at the S&P 500. S&P 500. 433 stocks are down. 70 are up. Trend is down. Trend is down.
A secular growth story of artificial intelligence, which has led NVIDIA to trade over, now it's below, but obviously the top $3 trillion in market cap, to have the kind of multiple that it has.
Zscaler, what's Zscaler doing? Zscaler back down again. Okay, Zscaler looks like it's just basing. Okay, the last two times we hit this level, we bounced immediately. This time we're just consolidating.
I disagree with you. Respectfully, I disagree with you. Over the next year, you bet. Maybe even the next.
Okay, let's take a look at advanced decline percent. Of course, this is going to be lower, advanced decline percent. Echoing the breath. All right, we're getting close to minus 30% on the small caps. Big caps are still at 12%, so this could move a bit lower first. Okay. There goes Netflix. Netflix bounce. Popping now. Netflix is popping now. Broadcom trying to push. Okay, we're at a critical, I won't say critical, but we're at a level now where if we're going to get any kind of bounce, we need to see it soon.
Let's talk about some more moves, okay? You bought more Palantir. I did. AI play. Can you tell our viewers why you bought more here?
I love Mr. Karp. I love his vision. I like the way he runs the company. It's a pure play, we would call it, in AI relative to, we can debate all day long, but semiconductors are the most cyclical area in technology, period. NVIDIA is a category killer stock. It's a totally different deal relative to AMD and Micron and AMAT. So Palantir fits our mold.
All right, we're at 618 right now.
With respect to AI, and we just wanted to add more positions there.
From the high down to the low, we're at 618.
Tell me. 60 years of increasing and paying a dividend, 30% return on equity.
Okay, so if they start to cover, it's going to be pretty obvious. We'll start to see a quick move.
Celsius, the energy drink. Barron's has it as a stock pick. There's energy drinks everywhere. Its stock can still provide a jolt.
It gives a jolt in a relatively healthy way. And I think, too, given there's been some shareholder activism and some CEO changes, that's why we bought Starbucks 3 months ago, because we kind of knew that there was going to be some operational changes there. I think from a bottom fishing and contrarian basis, we like a small company.
Okay, we got a nice squeeze going on, but we don't have any up volume. We have nothing but down volume right now. Ooh, 12 to 1 on the SPY, 35 to 1 on the Qs. NVIDIA starting to bounce. NVIDIA bouncing. Keep an eye on NVIDIA. NVIDIA turning the corner. Okay, look, could see a return trip on NVIDIA. Note the bands of selling. Look, note the bands of supply overhead. Boom, boom, boom. So in order to reverse this trend, we need to get above 103.50 on NVIDIA. Could be another wave of selling. Each one of these bear flags has been met with selling. So that would be a change. Look at the momentum indicators in the bottom. Trying to turn the corner. Okay. 1 minute chart. 1 minute chart showing a turn. Okay, we got a bullish chalk right now, change of character. Needs to get through this supply right overhead. If we can get above 103.25, we could see a pretty quick move in NVIDIA. $103.25 to accelerate. Okay, TTM is looking better, but the down volume is the killer. $35 to 1 on the NASDAQ, or the Qs, I should say, the QQQ. If they all of a sudden start short covering massively, you'll see these light up. More are starting to show short covering. Apple looks like it's turning. Apple, NVIDIA looks good. Okay, maybe Tesla can join the party. Nothing yet. Tesla. A big band of liquidity down here. Orders sitting there waiting for the pullback. Tesla. Nothing yet. Still selling.
Call of the day time. We start with Oracle. Top pick at Mizuho has earnings on Monday. That'll be another key event in the tech, software, AI space. Jimmy,
Still more selling into strength.
A steady technology company here.
Broadcom looking good, trying to get back above 140. 54 cents to go.
It's cloud computing. It's the data centers. I expect on that basis.
Could see another wave down. Okay, so nothing yet on the S&P. I would give more weighting because of the down volume and the number of declining stocks. I would give more weight to a potential another wave of selling.
Costco, the price target gets a small bump, $5, $9.75 from $9.70. That's after their sales data of the prior month. Execution solid.
SMH is below the 200-day moving average.
Membership metrics, like the annuity, the membership business. August sales were
Netflix starting to fade.
almost 23. You got that too.
Amazing e-commerce. Walmart's kind of followed the suit of Walmart. Costco, amazing. Costco to me is top 25 company in the world. You got to own it.
Jenny, Energy Transfer called the top pick today at UBS. They say buy it. Price target's $22. What do you think? Midstream and natural gas, it's their top pick.
Right. And you know what, it just resonates with our recalibrating. So while I don't really want to own energy broadly, I love owning the midstream.
Apple's still fading.
What I'm worried about there is transaction volume.
I wouldn't do anything. I'm thinking short. Everything's short at this point. Sell call credit spreads overhead. Looking for more downside until we see some change in the character of the markets.
you want to own in this kind of environment. Just collect.
Okay, we're making new lows on the spot. All right, red bars starting to show up. TTM.
In this kind of market, Brian Belsky, because you reiterated a buy today at UBS, and the price target's $415.
We do. We own Spotify for about 6 years now. We originally bought it in our mid-cap portfolio, and all of a sudden now it's a large-cap company. And this is an amazing company, great product line. We do think it's the Kleenex of streaming. I'm sorry, the Kleenex of audio, just like Netflix is the Kleenex of streaming. So Spotify, very, very strong company. We want to own it.
You have a thought on Honeywell, which was initiated today at Morgan Stanley? Equal weight is how they see it. 210 is the price target. Not a lot of upside from here with that kind of rating.
We do. Honeywell kind of threads the needle in terms of international versus domestic kind of revenue growth, especially given the conglomerates they have said it. And with respect to the return on equity quotient, and with respect to Oracle, very strong. Honeywell, very strong ROE, 2% dividend yield. I think it's a long-term core holding especially for value portfolios.
Yeah, I mean it's down 5% year to date.
It's really done nothing, for a long time. I thought the prior CEO was really good, but he got the boot. Now somebody new's coming in. Their end markets I'm not crazy about in a declining economy, but it is a quality company. Somebody just needs to be able to really, polish the stone again to shine. But this sort of missed the whole bull market, or at least over the last 2 years. Trades 180, 200.
Yeah.
And you just can't seem to get it going past that.
I do want to note we are at session lows on the Dow. If we can show intraday, we might as well do that. You do have that. I mentioned Microsoft below 3 trillion. Apple is under a bit of pressure today. So the banks, JP Morgan, 2.33%. Goldman's down about 2% as well. Let's get the headlines now with Pippa Stevens. Hi, Pippa.
Hey, Scott. Secretary of Defense Lloyd Austin at Ramstein Air Base in Germany today, where he lightly pushed back on Ukrainian demands to use long-range U.S. weapons for strikes inside Russia. Austin said that no specific weapon would be a game changer. He is in Germany hosting a monthly meeting of Ukraine allies. 7-Eleven's parent company is rejecting the nearly $39 billion takeover offer from the Canadian owner of the Circle K convenience store chain. Japan's 7&I says the bid significantly undervalues its business and also doesn't consider potential regulatory issues it would face, especially in the U.S. And Selena Gomez is a billionaire. That's according to the Bloomberg Billionaires Index, which just listed Gomez for the first time, putting her net worth at $1.3 billion. The bulk of the singer and actress's wealth is from her makeup line, Rare Beauty, which is a huge hit with many of her almost 700 million social media followers. Scott?
All right. Impressive. Pippa, thanks. Pippa Stevens coming up. More stocks on the move. We have trades on DocuSign, Cleveland Cliffs. You heard of that company before? Intel, many more. We're back after this.
Okay, so looking at previous years, August, September. Okay, if we start to get some kind of traction, you'll see it pretty quickly. Okay, let's watch this right here. We might get a nice buy signal. Let's see if we can get shorts to cover. Tesla, NVIDIA, NVIDIA looking very strong here, NVIDIA. Okay, watching NVIDIA on the move. Okay, Tesla turning the corner. Okay, Tesla, look at NVIDIA. NVIDIA's got to get through these two bands. You can see a break of structure right there. That's a long right there. Break of structure on NVIDIA. Still early, but could see more upside.
All right, got some stocks on the move. DocuSign's one of them. They beat. Jenny owned that stock. It's trying to break a 3-day losing streak. And as we
NVIDIA, NVIDIA almost hit 100, right? Almost hit 100.
This is really interesting. You may remember that back during the pandemic, DocuSign ran up like $300 a share almost. It was wild. It was one of those ones that just got jacked up. And then in the disappointment that those kinds of earnings were going to last forever, it plunged, came back down to the low 40s. So we did a deep dive last year, looked at all these kind of like fallen angels from the pandemic, and we decided to buy DocuSign. And we bought it because it had a fair valuation and really compelling free cash flow. So we bought it September of last year. Over the past year, we're up about 35% on it. It still trades at 16 times earnings, has an 8% free cash flow yield.
Okay, we're right up against supply. All right, NVIDIA is right up against supply. There goes Microsoft turning the corner. Tesla, nice little turn in Tesla. Starting to see some movement in Tesla. Okay, need to see more though. Broadcom pulling back to 385. NVIDIA, can we get something more? Okay, came back and retested that break of structure right there at 102.30.
I'm kind of tired of talking about Cleveland Cliffs, but you keep recommending Cleveland Cliffs, and you keep telling people to buy it, and it's at a 52-week low today. It's been down 7 days in a row. It's down 46% year to date.
It's highly appropriate for you to phrase the question the way you have. And I take full responsibility. No, this is serious, and you know it. I take full responsibility for any recommendation I make.
Microsoft, nice little bounce in Microsoft.
I will tell everybody who's listening, I haven't sold a share. I'm not likely to sell a share. If I didn't sell the stock at 22, 23 earlier this year, that implies that I think the stock will be higher than that. I cannot predict the future with certainty, but that's what I believe. Now, let's talk about why the stock is down. 2 reasons. One, steel prices have been obliterated this year. However, you can look at the prices for hot rolled coil steel, and it looks like they've bottomed. They shouldn't have gotten this low in the first place. But the other thing that's going on here, which is being perceived negatively on the stock, is the M&A activity. We know they've already announced an offer that's likely to be accepted, that they're going to buy Stelco. That's actually smart of them to be buying assets and bulking up with the steel cycle at presumably a low. But what's really knocked the stock down this week is what it looks like is going to happen to the U.S. Steel, Nippon Steel deal, which is going to be blocked. It's going to be blow up. Now, Lorenzo Gonsalves and the CEO and the team at Cleveland Cliffs are not idiots. They're not going to come in and pay any price that is anywhere close to what Nippon Steel offered. That deal was flawed from the beginning. U.S. Steel was unwise to have not accepted Cleveland Cliffs' offer. What's likely to happen now is picking apart U.S.
All right, watching NVIDIA.
Cliffs will get union assets. They have very good relations with the unions. They will continue to bulk up, as they did several years ago when they bought ArcelorMittal's U.S. operations and AK Steel.
They will get bigger at the down point in the cycle. And
Okay. Selling again. Selling again.
Can I ask you a practical question? Yeah. Because you just, well, the way you ended, stick with it. What about the viewer who maybe bought the stock at 22 or even higher than that and has seen it?
Still a work in progress. Broadcom, a little dip.
Or should they?
Microsoft trying to turn, Netflix trying to turn, NVIDIA trying to turn, Apple still sitting at the low. Apple.
I think this would be the wrong price to sell it. I do want to point out that this, to me, is a business that is transforming itself through critical M&A activity, but is being perceived as a cyclical company and just being looked at according to steel prices.
What if part of this is that the U.S. Nippon deal doesn't happen, right? Looks seems like a reasonable hypothesis to make it at this point. And the market's saying over the last 7 days, look, we know that deal's not going to happen, and we don't want Cleveland Cliffs in this deal.
And why would they do it? Right. Why would the market not want it? This is a great question because they don't want the balance sheet stress on Cleveland Cliffs. And what I will say to anyone who is looking at the stock that way is remember what I said a second ago, a few years ago, 4 years ago, they bought AK Steel, they bought ArcelorMittal. They crunched costs out of that. They had all sorts of benefits come from that, and they used their balance sheet to do it. Last thing I'll say on this, balance sheet stress, they did just issue debt a few weeks ago to do the Stelco deal. They did it at 7%. It was oversubscribed by something like 3 times. There is demand for the debt that Cleveland Cliffs puts out because debt buyers understand the cash flows of this company. They are good, and they are going to grow as they bring in these assets.
Okay. Thank you for that. Brian Belsky, Lululemon, Calvin McDonald, he's a CEO. He bought stock, 4,000 shares at $260. It's about $1 million worth. The stock's at a 52-week low. Well, it hit a 52-week low about a month ago. You have that stock, right?
Yeah, we do. We own it. We love it when CEOs buy back their stock. Plus, their chief product officer exited. I think they're going to tighten up their product offering. That's always really good when you see a consumer discretionary name tighten up their product.
What about the stock? I mean, the stock's come down a lot.
Yeah. Well, again, it's down 38% year to date. He bought it.
He bought it for a reason.
We bought it for a reason.
He didn't buy it at a point of strength in the share price.
No, we bought it because it's a category killer stock. Not unlike our on position, ON, in mid-cap. We like the companies that offer the best product, period. So I think Lulu does in the large cap category and ON does in the small mid-cap category. We like it way better than Nike, way better than Under Armour.
Okay. Mike Santoli, he is standing by with his midday word. He'll join us next.
Only 10 stocks are green on the NASDAQ 100. We got mostly sellers in the markets. That needs to change. The S&P 500, 410 stocks are down, 90 are up. Poor performance today. NASDAQ 100, we're looking at 12 stocks green, 89 stocks are red. So that needs a shift. You would think that it could shift here this time of day. Makes the most sense. ABCD patterns after 11 o'clock going into 12:45 now on a Friday, the 6th of September. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Pretty nice outside. A little overcast right now, but the weather's good.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Market here on the Schwab Network. Before we take a look at AMD, let's get a market update. We're off of session lows, but still weak across the board. The benchmark S&P 500 now off about 1.65%. The Dow Jones Industrial Average off nearly 370 points, or 0.9%. Tech still leading to the downside, off 2.6%. And the Russell 2000, the small caps, down nearly 2% on the day. Some other asset classes moving here today. We've got crude oil down to 67.30 a barrel. We've got the dollar slightly higher and creeping higher, 101.30 there. So we'll keep an eye on those. And then bonds are also rallying with the 10-year yield about just over 3.7 after hitting over 1-year lows earlier on in the session. So we'll continue to watch those asset classes. All right, let's bring in our next guest. That's going to be George Tillis, Senior Markets Contributor here on the network. George, talking AMD, down pretty significantly from those all-time highs we saw just a few months ago. And it seems like this is one of those trades where, you know, NVIDIA's down. It's getting hammered. You know, AMD had a pretty good report last quarter, but maybe, you know, not the growth or the expectations that the street wanted. What's your take here on AMD?
Well, I think, you know, across the space in the hardware ecosystem for AI and CPU and GPU technologies, it's akin to me looking at it like a melting ice cube. We're seeing just sort of a slow decline. Now, NVIDIA, of course, and even Broadcom, which is really key in the infrastructure for artificial intelligence. We're seeing weakness in those mega cap names. And AMD, I think also, we talked about this, you know, over the past couple of quarters, has faced some significant challenges. Obviously, their AI MI300 chips are going to be, you know, eventually a market share competitor with NVIDIA. They aren't there yet in terms of their technology prowess, but they're expanding their revenue base as a percent of total in artificial intelligence. But I think the entire space right now is facing some, you know, investment challenges from corporate standpoint, because I think if you look at the entire verticals for technology, obviously there's been a huge arms race for AI infrastructure chips and technologies, but I think the software really hasn't caught up. And the other thing is the manifestation of how, you know, businesses will generate a return on equity from AI investments. And so the markets are relatively weak, and we're seeing, of course, cash harvesting from technology names that have been, you know, market performers or better than market performers over the last year. Now, if you look at AMD, on a year-to-date basis, it's actually been down about 9%. Over the last year, it's been higher by 25%. But nonetheless, it's actually been struggling off those highs earlier this year, which were around $228. Now, I think it really has to do with the fact that, you know, CPUs are still the bread and butter for AMD. They do have their industrial technology, industrial chip segment, which is their Xilinx acquisition, automotive, industrial manufacturing, industrial automation. I think those are areas that haven't shown the growth that were expected over the past year, even though AMD's artificial intelligence chips have actually generated some additional growth as a general purpose inference chip technology. The CPU space has been relatively weak. And lastly, you have to think about competition. I think the competition in the CPU space is starting to become very crowded, especially from China. Intel, AMD, I'm going to throw in the DRAM manufacturers like Micron. All these stocks have been trading to the downside in the past 6 months significantly, because I think there's a lot of encroachment from Chinese manufacturers in the CPU and in the DRAM space. And that's, again, why I think there's been these stocks have been under pressure. If you look at AMD's earnings profile, even though the stock has been falling, the forward multiples have been compressing, but at the same time, earnings estimates have been falling. Looking at the earnings estimates for 2024, they were over $3.50 just about 90 days ago, and now the earnings estimates have fallen to close to $3.38. It's not a meaningful decline, but it is a decline nonetheless.
You were mentioning the CPUs, and that seems to be a good story from a demand perspective, because there's still demand for this, and that's where AMD and Intel do better against NVIDIA. But then this competition between AMD and NVIDIA.
All right, this is what semiconductors look like presently. Semiconductors.
Did they take steps closer to making that real when they acquired ZT Systems and Silo AI? that should enable the build out of some of their chips. Are just like Google Alphabet in cloud.
Semiconductors not doing so hot.
They're distant, but are they starting to compete? And that would be a good reason to look at some of these names.
So I think you bring up an excellent point, because if you look at what's going on, NVIDIA is really talking about, increasing their Omniverse software over time. They obviously have the largest market cap or market share in the data center space. But one of the things that they will face a challenge in is the replacement rate of hardware. So what they're going to do is move into the software realm. In other words, vertically integrate hardware with software. If you look at AMD hasn't reached nearly the market space or market share that NVIDIA has. However, they're already moving in the direction of software integration with their hardware, and that's with their ZT Systems acquisition. So I think their strategy is they see that they're eventually going to need to integrate software with their hardware, but their hardware is facing, I think, the cyclical challenges that NVIDIA is facing right now, which is this huge ramp up. NVIDIA's market share has been growing substantially. Their sales have been growing substantially, but the pace of those sales cannot be sustainable. AMD will eventually pick up market share over time, but they're also planning, because of these other acquisitions, these ancillary acquisitions, to integrate software along with their hardware. It just happens to be that planning is going to take time to manifest. Capital expenditures up front aren't going to see returns anytime in the near future. And I suggest that's another reason why the stock is under pressure. So it's a longer term strategy. It's great for long term investing. But if you're looking to trade, let's say, the daily charts, or even on a weekly or monthly basis, it's unfortunately been a bad trade, at least if you're on the bullish, from a bullish perspective.
George, real quick here, before we let you go, valuation. Is AMD, valued comparably to NVIDIA, Rich, or is it at a discount?
Well, that's the thing. If you look at growth rates of NVIDIA, their net income growth rates, net income margins are 50%. AMD's around 6%. They have the ability to grow that significantly. I think if you look at the forward multiple for AMD at 28 times next year's earnings, that's matched to about 13% earnings growth. So it's already trading at more than 2 times earnings growth. Remember, with earnings estimates coming down. And so maybe right now valuation isn't compelling. Perhaps that's also what the market is telling us with the overall weakness in this thing.
Great stuff. As always, appreciate it. That's George Tillis, senior markets contributor here, breaking down AMD for us. Kev, let's get into the trading stock.
All right. So it just feels like we're either going to make more new lows, or we're going to get some sort of a bounce. But we're making more new lows at the present time.
From those levels. So I looked at a strategy that, Kevin, if you think this thing is going to rebound, or maybe you're comfortable owning the shares, I looked at a cash secured put strategy here in AMD going out to the October 4th weekly cycle. So 28 days to expiration, just about a month in this position and I looked at selling the 125 strike put in here in AMD. You're collecting a credit. It's about $4 right now. I believe we had something earlier that said 330, but the credit that you collect is what you can make on this type of position in AMD. And by selling the 125 strike put and collecting that credit, it takes your break even down. So if you collect $4, it takes your break even down to one. We got 330 credit on here. That's where it was trading earlier, but the stock has continued to fall. So we'll go off of this one. 330 credit on it. That takes your break even down to 120, 170, Kev. So it gives you a big cushion to the downside.
Yeah, this is one that we talk about a lot. It's a more, I'll give you a scenario where this will work. Let's say you wanted to put in a 125 bid for 100 shares of AMD. You may never get that.
Yeah, right. It might never get filled.
It may never get there. But if you sell the 125 put, if it never gets there, you continue to make that credit. You're still profitable on a trade. If it gets there, then your buy-in is way lower than 125.
Yeah.
All right. No follow through yet.
You've got a probability of that finishing out of the money where you just get to keep that credit of, you've got 330 up here. That's about 65% probability of finishing out of the money. That break even.
Apple continues a series of lower highs and lower lows. Apple
got to remember on cash secured puts like this, you're collecting that 330 credit. Your risk on this is going to be over $12,000. That's a, somehow the stock went to zero. We're going to say that, but that's the risk on this trade. Twofold type of position here, Kev. You either comfortable owning the shares, or you just want to collect that option premium, which is invalid, which is expanding right now just due to the fact that the market's selling off.
And the popular strategy is, when it gets close to expiration, you extend duration on it no matter where it is.
Yep, and that's the key. And, you know, this is one of those repetitive type strategies also, Kev, where, hey, if you pick a strike where you're comfortable owning the shares, you collect some option premium, maybe you do that on a week-to-week or month-to-month basis, and maybe it never goes through that strike. You never have to buy the shares, but remember, you've got some assignment risk on that. If you're short that put going into expiration, that you have that possibility that you might have to buy the shares if you're still short that put and it goes through your short strike. All right, that's going to do it for us today here at Fast Market. But stick around right here on the Schwab Network. Next Gen Investing is coming up.
Tesla still making lows. Apple. Still showing weakness.
This election season, stay out of the muck and the mudslinging. Schwab Network's by the numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week. Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
Apple.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader.
Still a series of lower lows, lower highs.
And a geography degree. How did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself, find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous.
Watching Tesla for potential bounce. Apple.
I think the best traders I've seen have
Tesla. Nothing yet. Nothing yet.
Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out.
NVIDIA turning up.
I have a trading system that I've used for over 10 years now.
Okay, NVIDIA turning up a little bit.
Do you think that this is potentially a human superpower?
Just looking at any of this price action as potential short covering, nothing more than that at the moment. Most stocks are lower. Most stocks are lower.
Quality focus has worked pretty much across all 11 sectors.
With the NASDAQ 100 showing 91 stocks down, 10 are up on the day, 10 advancing, 91 declining. On the S&P 500, need to see that reverse. S&P 500, we got 92 stocks bullish and advancing, and 408 stocks declining. Watching Tesla and NVIDIA.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market overtime on the Schwab Network. Thanks for tuning in.
Sounds like most participants in the markets are pretty negative on NVIDIA. Therefore, I'm looking for a bounce. Looking for a bounce that may not show up, but looking for a bounce in NVIDIA.
Welcome to Next Gen Investing. I am Jenny Horn today, joined by Dan King Hall, who is co-hosting with me, joining me at the NYSE. And we have, unfortunately, a market sell-off day and today, which has only progressed as we just came off of your session lows in real time. We've been watching some of the weakness today also in
NVIDIA looks like another bear flag.
Well, the VIX is no surprise up about now at this point, substantially.
If anything happens, it's going to be shorts covering, and we'll see the 0-day setup starting to grind a bit higher, maybe pick up in volume and speed. Mostly yellow TTM bars on the 5-minute 0-day setup, mostly 5-minute yellow TTM bars. But that said, down volume is dissipating. It's still 28-1 down on the Qs, 11-1 down volume on the spiders, 3-1 on the New York Stock Exchange. Let's take a look at the New York Stock Exchange. Okay, so we have a bearish look to the volume oscillator. All right, so this is bearish until it gets down to the green zone. Bullish percent turning down. New highs, new lows. Okay, still above the 0 line, so still somewhat bullish, but lower highs. Advanced decline is turned over, and we got red elder sticks. Okay, coming back inside of price action. Let's look at the S&P. Look at S&P cash and the S&P equal weight index. S&P equal weight index, the number of stocks above the 20-day have dropped markedly back down to 48%. Okay, that's starting to set up a long signal. Number of stocks above the 50-day dropping to 60%, 59%. So this is starting to set up a long. Just keep your cash. You're going to have a nice little bounce in the short term. Could be looking for more downside, obviously, but number of stocks above the 20-day in the upper panel, number of stocks above the 50-day in the lower panel, the red-green bars indicating overbought, oversold, or the number of stocks, if you will. So we view this as a reason to sell when we get into the red zone. We made a new high on the S&P equal weight index, and then we dropped off. VIX, bearish signal, lower highs, lower lows. When this is red, we're looking for lower highs and lower lows. This is a 60-minute time frame. VIX currently at 23 and change. VIX VXV, the front month to the 3-month, becoming more bullish as this rises. Looking for a bounce. Okay, watch NVIDIA, looking for the turn in NVIDIA. There goes Tesla. Tesla's on the move. Tesla trying to turn the corner. Tesla. Tesla could be another bear flag. Note the overhead supply zones. We need to get above, I would say 217.50 would give us a nice reversal signal.
or is there any slowing of growth? We'll want to hear more about AI demand from Oracle as well. And although the stock is under pressure today, it is up more than 30% year to date, Jenny.
I know, and I think that that's also amazing too, in the sense that like we look at Oracle and it's pulled back, I know, from highs, but I mean, like it's still been one of the most resilient of all.
There is a chance that we get some massive short covering going into the weekend. Traders take profits and we start to see a reversal. I wouldn't look at it as a reason to get long and swing. I'd be looking for it as a reason to a day trade off the lows, perhaps, if we even see that. So right now we're just watching Tesla, Apple, Broadcom is starting to reverse and move higher.
Adobe was one of these initial winners of AI earlier this year, but I have to say this is the important, I think, aspect of the AI conversation, Diane, is that it's not going to be like a rising tide lifts all boats. And I know that this thing was trading
Zscaler at 156.
defender of Adobe takes time to learn, understand their creative suite is one that's difficult, honestly, to learn because I had to learn Photoshop and Illustrator in college, and it's a skill that once you have it, you're loyal to this product. But if AI basically eliminates a lot of that learning curve,
Still looking for more bear flags. Looks like more bear flags are in store.
I mean, it just seems like then you take away the basically scarcity of your product.
Yeah, that's right. And I mean, I think you make a great point. I think before Adobe and others, you had this this kind of question around the growth in AI and who will be the beneficiaries, the first tier, the second tier, the third tier. And so, as you mentioned, there was this conversation, this theme.
That's some pretty intense selling. Watch this level here. We got to get through 216.50 to give our first reversal.
It's not to say that Adobe can't necessarily be a beneficiary of growth there, but investors aren't willing to put their chips on the table. So far, I mean, the stock is very little change. I mean, it's down about 3% year to date. In terms of the expectations for their quarterly numbers coming up, adjusted EPS expected to come in at $4.53 a share. That would be an increase of more than 10% on a year-over-year basis. Revenue is expected to come in at $5.37 billion. So that's the number we're looking for. That would also be an increase of.
You can hear that bullish flow. Microsoft is starting to go. Watch Microsoft here. Microsoft, nice reversal. Microsoft.
Adobe has had some challenges.
It has, yeah. I would say that there was like this definitely like front-running growth that we saw with Adobe, but Firefly already exists. So I guess maybe there's that expectation that they do already have an AI product that is out there, which is huge because right now every company is trying to get a piece of that AI credibility. It helps to already have an existing product, which they do have. So now we have a complete shift of gears.
Microsoft got a huge level of supply overhead. Microsoft got a huge level of supply right overhead. Get above 403.80 or so. That should do it for a reversal. We got a break of structure right now. Apple, nice reversal. Apple.
Share. Revenue is expected to come in at $900 million. That would be a drop from the same time a year ago. They're expected to report a net loss. Comps are expected to be down double digits. So it has some, challenges in front of it. But once again, you have Keith Gill sounding off, and I mean, he's continued to kind of stand by GameStop, even though we've seen what has happened to it. Now, look, to be fair, GameStop.
Okay, S&P. Okay, 0-day setup is starting to look more bullish. All right, looking better. Okay, TTM is about to cross over to cyan. TTM is about to cross over to cyan. Okay, we got a nice short covering rally underway. There goes Microsoft, Tesla turning. Tesla. Snowflake,
but expecting lower revenue, larger
AVGO,
I mean, like in comparable store sales are also
Amazon,
significantly. So that
Apple,
I think, should overshadow like any of the conversation because frankly, I feel
Microsoft,
like there's a lot of hype and noise around GameStop.
NVDA.
But I mean, comps are expected to drop by 23%. That should matter more than anything.
It should right now. Today, at least, it doesn't.
It definitely doesn't today.
No, especially like when you look at how it's trading compared to the broader market. I'm just taking a look up.
Okay, so far so good. Apple, sorry, wrong symbol here. Apple. Okay, look at the 0-day setup. You can see what we're looking at. Okay, we're looking at these TTM bars. Apple's on the move. TTM bars, you can see turning from yellow, about to go green or cyan color. About to go cyan. Down volume, still leading, but that could flip. We're looking for a nice reversal. TTM is yellow, about to go cyan. If this keeps up.
Well, really quickly, we'll go through what's expected, but I think a lot of that has to do with the pushback on the potential merger with Albertsons. So adjusted EPS expected to come in at 91 cents a share. Revenue is expected to top 34 billion. I think what
Apple needs to get above 221.50, 221.40.
are they going to be able to clear the hurdle with regard to the antitrust concerns? And they're facing off with regulators about that. The government is coming after them on a couple of fronts, saying this isn't going to work. It's not going to be helpful for consumers. They're concerned about what that will do, what a tie-up between the two, how the government views them as the number one and number two players within grocery, what that will do for prices. Will it make prices
Okay, Tesla. Okay, we're starting to push. You see the equal high right there? I was expecting to see a little bit of a pullback, but instead we're pushing through these areas of supply overhead. Okay, you can see this equal high right there. Whoops, this equal high. We're looking for a rejection in this area. Overshoot it, come back in. Right now, we're just watching this level right here. If we can manage to get through here, our next level would be up here. Also, note the volume. Note the volume down here. Lots of volume. That's what we need to see for the follow through. Apple, nice reversal. Snowflake, Broadcom, all of the New York FANG index stocks are moving higher. Meta's dragging its feet. Apple ripping higher. Apple ripping. Snowflake, NVIDIA, all nice reversals.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk
Our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat.
Okay, Apple needs to push up to that next level. Apple needs to push up to this next level right here.
Bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Okay, Broadcom moving higher. Nice move on Broadcom. Supply overhead at 140-ish, about 134 million, 1.34 million, sorry. Here's the hourly chart on the right, looking for that to turn back up. Had earnings last night. Notice where a lot of these stocks have reversed. You see the green band below? Okay, this is a discount area. The gray is the mid zone, and overhead you'll see premium. We're not going to get up there anytime soon, but I'd be selling up here, obviously.
64% from that point all the way up here. And you can see now that the price action is kind of
Broadcom.
we have these very dramatic swings to the upside and the downside.
So just shorts covering for now. Assume this is just shorts covering, so we need to see a follow through. Need to see a follow through. Otherwise, we could reverse and turn back down. More selling into strength. That's what I'd be doing right now, by the way. What I am doing is selling into strength, reduce exposure. If we can get a follow through, that would be great.
But we are once again remaining above two of our moving averages that we look at are yellow 21-day and orange 63-day exponential moving averages here. So, from this kind of framework here, we can also see that we've got a bit of an uptrend forming here. You can see we've got our blue dash line here, our trend line going up across these lows. In the shorter term, gives us kind of a more triangular shape here, and we're getting closer to the upside rather than the downside here. So definitely a lot to digest in this chart here, and keep in mind too.
All right, can we get Tesla to push a bit more? That's Broadcom.
Our lows here 995. So really,
Tesla turning the corner. Note where we are in the discount zone. The mid zone here is the gray area. Premium is over here. That's the high of the day. You notice where we saw that selling this morning. Shouldn't be a surprise.
I follow the same closely. I like the meme trade. I know everyone gets mad at calling it that. I say it endearingly, but I think it's encouraging to see short interests come down in the same. But as far as RSI momentum here, have we seen this show any signs of encouragement or sort of dwindling with price?
Actually, yes, it is. It is making more of a bullish move in terms of our RSI study here. So you can see, for starters, we have this kind of downward sloping trend line here connecting these highs on the RSI. We drifted below that 50 midline, and we, made a move lower here. However, we also saw within the past couple weeks here, we have moved back above that trend line here that was sloping to the downside. We have also recaptured the 50 midline here. So
okay, you can see the red zones overhead where price action met resistance earlier this morning. So taking profits off into that strength. Buying down here at the lows. See if we can't get a follow through. Tesla.
That's what the important part is. RSI is ancillary to price.
So, okay, now we watch some key levels of support and resistance also into earnings next week. What are you seeing here? I know the same is moving today pretty substantially. Actually, it's continuing to move to the upside as we speak in real time of 4.5%. But it's also one that I tend to think of as a volatile player on the back of its earnings.
Of course, I would agree completely here. And when we look at this one, to the upside at least, there's some pretty obvious points to watch here. Volume profile point of control near about 2650. That would be one area to watch. And the next high point, our red line, 2979, let's call it around 30. And then another high here at our pink line near about 3370. The downside is a little trickier, I think, here. We've got our confluence of our moving averages right around 2230. Then we've got this area right here, our purple 252-day.
Apple just flagging at the high. Apple. NVDA looking pretty good. NVIDIA.
Set of lows here. We've got our dark green line at 8.
Back to VWAP. Looks like NVIDIA is headed back to VWAP.
So those are some key points to keep an eye on here if you're planning on trying to trade this name anytime soon.
And I do know that with trading this name, I mean, it's a difficult one to trade in the sense that, like, I guess because the volatile nature of it. And I just did it. That's been something that's been just sort of discussed, and you can see it from the options chain as well. So now, when we do look at trading this name, of course, for example purposes, walk us through your thinking here. Of course, just if you were taking
Note the bullish chalk. Note the bullish chalk right there.
Even though we've lowered expectations for this report, we are still up 30% this
Okay, there's a bullish chalk right there. Price is moving above it. Looking for it to head back up to VWAP. Looking for prices to head up to VWAP. First rejection area.
Long-term factors working against this company. Just real quick. Near insurmountable barrier in return to growth. Negatives are migration to digital games from physical games, declining game sales due to rising microtransactions, growth of subscription services, ongoing hardware sales declining. What a terrible backdrop for this. And I would also add mobile games are becoming increasingly prevalent, which would have no physical copies whatsoever to even sell.
And I would also add that this is something like without even being an analyst, I know this to be true from just like my brief experience with gaming.
So despite all that, though, when I was trying to come up with our example trade, there were very few attractive bearish setups here. It just wasn't really working out very well to the downside. So I thought about it a little bit.
NVIDIA, nice little rally.
Hoping to capitalize on a short-term move on earnings here. +1 September 13th, 25.
Okay, if you want to trade NVIDIA, NVDL is also a possibility. NVDL. Nice rally.
Vertical spread. All of it comes together at a 130 net debit here. So this is kind of like a risk reversal type trade here, where we have a long flat area that represents our debit paid. We stand to lose only $130 if we finish anywhere between 20 to 25. So that gives us a bit of breathing room here if things don't necessarily go our way in this trade. Long-term, prospects for this company, like I said, are not especially good right now. But we still do have unlimited upside potential in this game. Max loss comes in near 230. That would be if we do move below our 19 strike there. So we are capped. If we do, kind of play out more toward the
NVIDIA, nice long with the follow through. Tesla going now. Tesla going.
2.7% to the upside. So we really don't have a lot of heavy lifting to do to make some profits on this trade here. So that was kind of the thinking behind this one. Excuse me, 2630.
Okay, all the FANG stocks are going. New York FANG stocks are going.
To kind of define our risk, and you could choose to not include that long strike at the 19 put there, but that would be more
Shorts are covering.
okay with getting assigned shares if we do move below that level here. You may not want to do that here. So just something to keep in mind that you can customize this more how you want.
Yeah, and I think also a good thing to add is that assignment risk naturally, which is important when you're looking at this example trade. But now to go back to here, the technicals, we'll look at Kroger, which I have recently found the grocery stock to be more and more interesting because I frankly just think this is, if you're going to spend your money as a consumer right now, this is the one area to me that still feels so inflated. It doesn't feel I know that we've talked about grocery prices coming down. I went to the grocery store this week and I went to Kroger or Mariano's and I'm still mad about it. So this is, I have a bone to pick, I think, with Kroger right now. So with that being said, walk through the technicals here. This name has held on to a 15% gain this year, so I know it's not outperforming, but it's doing fine.
Yeah, it's tough. Shopping for a family nowadays, I mean, you're not walking out of there for less than $100 for any kind of reasonable, purchase that could get you through the week.
I mean, I can barely walk out of there for myself for less than $100, let alone with multiple mouths to feed.
It's rough, yeah. But when we look at this chart here, what we're seeing is more of a triangular shape, both beginning at our 52-week lows and our 52-week highs, converging toward each other between our two white dashed lines here, giving us this symmetrical triangle type pattern. And we're getting kind of close to the conclusion of this pattern here. So we might be looking for a breakout in either direction. That's what you care about, would be a move beyond either of these two lines here. However, once again, we can see a similar situation where our moving averages are kind of clustered together. They're right on top of each other. Yellow 21-day, orange 63-day, both coming together around 53. Also, once again, we have a shorter term upward trend line in blue here that we are testing to the downside.
All right, so NVIDIA, nice reversal, pushing a bit higher. NVIDIA. Tesla having a good a go of it. Tesla has a go of it here, headed back towards VWAP into some areas of supply. Tesla. Where's VWAP? VWAP's way overhead. Okay, you can see Tesla. Look at the volume coming in. Tesla down here. Okay. Look at the volume. Tesla looking good. This area right in this zone, right around 214, 215, you can see the buyers that came in. 31% there. See that value right there? 31%. Looks good. Price action not showing a really strong directional trend either, as exhibited by our clustered moving averages.
Okay, and also with Kroger reporting next week, I know we're down about 1% today. Also, hanging on though to about a 0.7% move to the downside this week. So I mean, like,
Okay, so there goes Amazon, ripping higher. Amazon. Apple doing well. Apple also with a nice pop. Apple with a nice pop on the reversal. Okay, moving through these areas. Notice earlier we just told you a few minutes ago that this had this bullish chalk right there, that we should see a follow through. Looking for the next break of structure. All right, the previous daily low right there. You see it? Previous daily low. We just hit it from below. Looking for a push higher. We got supply right here. 41% of today's volume right there on that short. This would be a really nice recovery. We could see a follow through. Tesla. All right, so we're seeing some profit taking now. Profit taking. Little profit taking. Okay, Apple profit taking. Nice little reversal right there at yesterday's previous daily low. All right, just profit taking. Let's see if we can't follow through for now. Meta turned back down. Meta's looking the worst for wear. Meta's not doing what the rest of these are doing. Meta continues to drop Meta into the discount zone. Okay. Okay, so this is looking pretty good. This push higher. This was taken just 5 minutes ago. 5 minutes ago, saw all these stocks moving higher, with the exception of Meta. Now we're starting to see some profit taking. Apple. All right, little dip there in Apple. Apple. Okay, back down to this level. Let's see if that happens. All right, notice the 41% in bearish volume overhead traded today, and the lower level here is 16% buyers at the low of the day. So not as much as in force as these overhead. These levels right here, 41%. This is 16%, 21%. All right, we need to see a move back up through this level. Okay, we need to get back above 222. All right, so traders are quick to take profits.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere.
Okay, let's see what Zscaler is doing. Zscaler post earnings. Okay, back down to this base that we're seeing over here on the right. We're seeing a base forming. That was a very quick. That was a quick pop. They sold into strength. So that seems to be the MO for the week, for the last few weeks, selling into strength, distribution. Not a bad idea. Watching the S&P, looking for higher lows on the S&P. S&P looked like it was going to get some legs. We ran right up to the supply zone overhead. And sellers came in, taking profits. Major resistance overhead.
And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Accelerate your market knowledge and shift your perspective to the full view. Real-time example trading in full hours of trading. I'm Tom Lyons. I'm Kevin Lee. Catch me on Fast Market. Weekdays at noon on the Schwab Network. Fast Market, ready for you, ready to go.
Okay, can we produce a higher low? Be great to see a higher low. The bears had it most of today. The bears have had the baton most of today. We got about 2 hours and 29 minutes to go. 2 hours and 29 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. I'll be with you here until 4 p.m. It is Friday, the 6th of September, 1332, 132 for you civilians, 132 p.m. on the East Coast, the best coast to coast with the most. See if we can't muster a bounce or if we're going to continue to move lower. Selling into strength has been the MO for the last few weeks. Distribution. 0 day is showing TTM bars that are cyan in color now. Maybe we can muster some strength. Okay, is this just enough to get bulls to come in, activate some liquidity, get people to buy so institutions could sell into strength? We'll see.
This is the 10th anniversary of the Apple Watch, so we're expected to see some news on that front, and possibly new air.
Okay, potential for us to bounce. You can see TTM has turned cyan. TTM has turned cyan on the S&P cash, but no follow through yet. No follow through yet. Wow, I can't believe we're down at 5,400. Microsoft, big fade there, big fake out. A lot of these big fake outs. It looked like we popped it up. They sold into strength. Still got an hour, 2 hours and 26 minutes to go for the regular session. All right, can we muster a higher low?
then wait a few months? I mean, I feel like possible. I mean, it will really depend on how Apple delivers on this new iPhone, if it's going to, create this super cycle that analysts have talked to, and also, is it going to be enough to get consumers
NVIDIA like to see a higher low.
because, we see the consumers start to be more choosy. Not that they're not spending, but they're careful about where they are spending. And is the new
Okay, so we got that nice run up. We got that nice run up from 1250 up until 120, 122, and then we reversed off of that. So they were selling into that strength. You could see the selling bars of volume. Now what do you see? Volume pick up again. Has yet to pick up on the bullish side. Looking for a higher low. I wouldn't do anything just yet. Just wait and see if we get another leg up or not on the shorter time frames. So far, it's just selling into strength.
It will be interesting to see whether it's, kind of, there's going to expect to be some changes with regard to the camera as well. So, people pay attention to that. Consumers pay attention to that because they, you want it. Your phone is not just a phone. It's more than that. I mean, it's like a small computer in your hand along with the camera. So, is that going to be enough to get you to upgrade?
See Roaring Kitty talking GameStop, GME. I don't know. I don't know about this one. Look at the volume. Volume's starting to pick up on this. Let's go to 2 months so we can. All right, you can see the volume picking up on GME, GameStop. Keith Gill talking about he's done with Chewy, looking for GameStop to do something. Okay, watching GameStop. All right, no follow through in the S&P yet. No follow through. Apple turning back down. Apple. Okay, so we got a quick pop. They sold into strength, and they bring it right back down. Okay. Back down to liquidity. Let's see if they buy or not. Most of these look ugly again. Most of these FANG stocks, 8 of 10, look kind of ugly. Amazon and Snowflake are trying to bounce. NVIDIA pulling back. Apple with a nice pullback. S&P. S&P. All right, VWAP overhead. Pretty major level of support below 5,400, 5,410. It is September, so you should have a plan for hedging if need be. Okay, let's see what SOXS looks like. SOXS. Okay, so SOXS. All right, hedging on the semis. Semis still. Okay, here's your A, here's B. So if you were thinking about hedging with SOSX, got a nice B pivot.
Give me the iPhone 16 actually, but just bring it. Yeah, just bring more of these details. But we'll leave it there for FOMO, for Dan and myself. Now coming up next, we've got a programming alert. It's time for episode 2 of Inside the Mind of a Trader, which premieres Monday at 5 p.m. Eastern. The show is created and produced by Charles Schwab. It is a journey into the minds of the people who trade brilliantly. Here's a preview.
I wanted to start out by talking about your career as a college quarterback.
It's funny. I've been trying to dodge 300-pound men tackling me.
Yeah. Okay. S&P.
Supply side to kind of foist this AI hardware on consumers to little or no success.
early this year, we had Samsung with their AI phones, and they did show some growth over the previous model, but it's still not really necessarily upgrading because of AI. And then this summer, we had Microsoft come out with several partners. There's Copilot Plus PCs, but those have...
Okay, so the semiconductor is not looking so hot. SMH, not looking so good. Okay, we got some buyers here. There's a possibility we could get some short covering into the close, and we close above 200-day. If we don't, there's an equal possibility, and most likely possible move would be to the downside and retest this 200 level. Many of these stocks don't look that great. Let's look at Micron. Double bottom. So maybe these are ready to bounce. Micron, On Semiconductor, Lam Research, Broadcom, which we took a Iron Condor on, expires next week. We took the puts off earlier, so that cushioned that downside. Broadcom, Marvell,
That's right, they often do. Steve, for now, thanks very much. It'll be a busy week. We'll see you soon. Our Steve Kovac. Coming up,
Marvell,
Waymo's keeping San Francisco residents awake.
Intel. What's Intel doing? Intel, awful looking chart. Intel, Taiwan Semi, also looking ugly. RSI rising, RSI drifting lower. Until these change, the semis, until these change, I would imagine that we're going to see more downside. So if you want to short SMH, you could use SOXS, or you could do call credit spreads, which has been what I've been doing, selling call credit spreads on SMH. Okay, it looks like this. Call credits. This is what I've been doing for semiconductors. Okay, been selling these 245, 250s. That's been a few days ago, so I would probably do something like, I don't know. It all depends now. This has been a good trade up until now, so I'm not going to do anything else. If this starts to bounce and holds at 200-day, I might take the profits here and close that position, looking for a bounce on Monday. But all the stocks are moving lower now. Apple's moving lower, quickly moving lower now. Apple making a new low. Okay. Ooh, that looks terrible. All right, so Apple. $235, $240. Those call credits no longer working. All right, so they're selling this. Okay, they're selling this. Okay, I don't want to take puts at the low of the day. Looking for a bounce. Ooh, okay, one more time. Let's take a look at what happened in previous election years. You got to be mindful of what could happen, plan for the worst, hope for the best. Here's 2019, 2020, Biden and Trump. Okay, so we dropped in late August, made lows in August. September, we came back and tested the low again. So that's the most recent. 2015, 16, second term Obama, right? We dropped in August, made a bounce, came back down and tested the low. 2015, 16, 11, 12, 18%. And then we retested, took out the lows into the first week of October. So I'm thinking that we could see more of that. Be ready for it. You could do SPXS hedges, SPXS. You could do SPXU. Okay, these are hedges, all right? So this is just going to neutralize your portfolio somewhat. It's not a trade per se. It's just helping to neutralize your portfolio. If you like small caps, you could do TZA. Okay, if you think small caps are going to move lower, TZA. IWM, let's take a look at that. IWM back below 50-day. Note the Bollinger Band, so it's probably going to stay within this range between 223 and 204. So we'll probably come down and visit this 200-day, maybe bounce next week.
Welcome back. Automation and AI have been threatening jobs in many industries, but there's one you might not have seen coming: race car driver. Even race cars are going.
Z-scaler is back down to 155 again. Z-scaler. Okay, what's gold and silver doing? GLD, gold. Okay, gold. In a range for the last couple of weeks. Gold. Let's see, silver. Silver. Okay, the fear trade is out of the way. Let's look at the Japanese yen, Australian dollar pair. A lot of people talking about that on social media. Making it back to the highs that we saw previously. That led to a meltdown in the S&P 500. You see that peak the first week of August. That's when we made this move to the downside, first week of August. Is that where we're headed? Sure looks like it, doesn't it? Tesla making new lows, Tesla.
The same thing is going to happen here. And this challenge on its third year now, 12 schools around the world competing for a $1 million prize, bragging rights, Kelly, and no doubt, the PhDs that are standing behind us from UVA is here. Virginia Tech.
Okay, looking for a bounce. Looking for a bounce in the S&P. Tesla back down to the lows, so you have to be quick taking profits on these.
Up against an EV, up against a Waymo. You know what I'm saying? Like, you could actually bring real competition and a real race back to these sports.
This is cool. Stay on me. The UC Berkeley car got running again. This is the real Indy car. Delara chassis. Look, no driver. Look at that. Look at. There's no driver in there. This is not Kelly. This is not remote control. I know it had a problem. This is not remote control. There's not a human controlling like a video game. This is literally the software, the AI brain left.
All right, looking for a bounce.
Because the computer ain't talking to me. I don't know what it is.
I won't put on a hedge until the evening, until right before the close, I would imagine. We still look pretty ugly. Looking for some of these stocks to bounce. So we've seen a pattern. Every time we bounce, they sell into strength. Institutions, distribution. Okay, so this looks pretty. This looks pretty ominous. The S&P. Okay, the 100-day is right below now. That'd be a 5% pullback. The previous pullback was near 10%. It was like 9.6 or 9.8%. This is showing 9.9. This is not completely accurate. But the 200-day would be short of that, 9.4%, more or less.
To learn more and register, scan that QR code or head to cbcevents.com/gameplan. Coming up, we'll continue to monitor the sell-off. NASDAQ down 2.5% now with Broadcom and Tesla leading the decline.
Okay, let's look at the 60-minute chart. 60-minute.
After those disappointing earnings last night. We'll be right back.
Rinko, 60-minute. Okay, bearish. Candle chart below the 20 EMA. The 20 EMA on the 60 crossed down through the 20 EMA on the daily. That dotted red line for reference. This 60-minute chart continues lower. You got a little shooting star right there. All right, so I don't want to hedge at the low of the day. If we get any kind of bounce, I'll probably hedge towards the close if it still looks pretty ugly. We're oversold on the 60-minute. RSI could stay down there for a while. All right. Unfortunately, they sold into that strength. Looked like promising. Looked like we're going to bounce a little further. Netflix is starting to bounce. And a little short covering there. Anticipate that any bounce will probably be sold into, so that's not a bad idea. Reduce your exposure, collect some cash. I would think we're more than likely going to move lower, given the gravity of the selling every time we bounce.
If you look at the call by JP Morgan, I can see why they're making this call, because if you first off, their call is essentially raising a price target on NEO.
Okay, Palantir turning green. Palantir. Narrow Bollinger Bands. Narrow Bollinger Bands. I see Jason over at Three Peaks is talking about Palantir. MDT. Medtronic. This is the one that makes pacemakers. Medtronic. GME. Keith Gill talking. All right, so got caught into that. People buying into the idea that Keith Gill is getting into GameStop, getting stuck as this pulls back. I'll stay away from that for now. NVIDIA, about 1 hour ago, we saw 24,000 December 110 calls bought for $9.80. Adding to open interest, NVIDIA, a block of 24,000 December 110 calls, NVIDIA. That was about an hour ago. We got that little run up. Okay, so NVIDIA trying to make a higher low. Okay, TTM bars are moving from red to yellow now on the short time frames. Okay, NVIDIA, watching NVIDIA. S&P trying to hold this level. S&P trying to hold. NVIDIA got VWAP overhead. NVIDIA, you can see this 1.54 million, 1.58 million shares trading hands right there at that low. We came down, tapped it, or we're going to push higher. If we do push higher, look for VWAP as your target. First target, this pivot right here, and then VWAP. Okay, so that's what I'd be looking at. Okay, looks like we're going to turn the corner. TTM bars are going from red to yellow. Red to yellow. Okay, so here's your low. 1.58 million shares trading hands right there along this bond, this liquidity level. Slightly more bears than bulls, but turning back up. First level, you got a bullish chalk over here. Negated that by pulling back. Got this pivot and then VWAP. So 1, 2, 3 targets. Watching for that. All right, so I'd be watching this here. All right, volume's starting to pick up a little bit.
There could be a push towards the emerging market stocks, inclusive of China, based upon the Fed lowering interest rates, because
okay, let's see if NVIDIA can muster some strength.
So, George, I mean, I totally agree, and I think that when we look at a lot of these names, I mean, like overall price activity, I think to sort of step away from NEO here, get your thoughts on like recapping this week, and I know.
All right, goes Netflix. Netflix on the move. Netflix.
I mean, do you think there's a reason to be concerned, or do you think that this was maybe necessary given
obviously they're selling off in the winners this last year. I think at the end of the day, the artificial intelligence hardware cycle may have been a bit of a stretch. Obviously, that's being represented in declines in stocks like AMD and NVDA, even Broadcom today. So obviously that may have been overarching growth expectations versus reality. I think that the overall market is challenged. I wouldn't be surprised to see new highs in the S&P as we move closer to the event, contingent upon the Fed cutting rates, maybe 50 basis points. But going forward in the next 3 to 6 months, I suggest it could be
NVIDIA looks like it could get going. Okay.
We are essentially moving to lower monetary policy rates, but in fact, fiscal policy has actually been very supportive of the overall market.
Okay, here goes Netflix. Netflix, nice pop on Netflix. Apple turning the corner. Apple. NVIDIA turning. Higher low.
Fiscal policy is obviously going to come down, and that is going to have to reach an equilibrium, which may end up demonstrating some weakness in the overall markets between now and let's say the next 6 months.
Man, it'd be nice to put in a hammer today. I see Scott Redler looking at the 100 level, 101 for NVIDIA. Okay. NVIDIA, can we get a nice short covering rally into the close? Somebody bought a ton of calls, noted by Jason, over at 3 peaks. NVIDIA, 24,000 of the December 110 calls bought. Okay.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar piece. So there's profit there. You take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data. You certainly see patterns. Context is so important. The best traders I've seen have insatiable intellectual curiosity. Otherwise,
Okay, Netflix with a nice bounce. Tesla, still no bounce. Tesla. Apple trying to bounce. NVIDIA looking for a follow through.
Not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deploy the fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly? It's controversial. The old guard is saying, okay, off with their head.
AI feels controversial and it's going crazy right now.
It's going crazy.
So what does all this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
Where else I would want my money?
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one. There's a market for you.
Market Overtime on the Schwab Network.
Okay, we're coming into the 2 o'clock hour. S&P still sitting at the lows.
Good afternoon. Welcome to the Watch List. I'm Nicole Federlides. It's 2 p.m. Eastern Time, coming to you live from the New York Stock Exchange, selling across the board. It's been a tough week. Here's what's coming up on today's show. We're digging into a new retail report, which is revealing about the state of the consumer. We'll also take a look at that jobs report from this morning, some of the warning signs that maybe you want to keep on your radar. Or was it a perfect print, right? Verizon, the acquisition of Frontier Communications, and what that means for the telecom space. So plenty to discuss here. A week that's been under pressure, so we do see that the Dow and the S&P have snapped the recent winning streak. They had 3 weeks of wins, but the S&P right now is down 4.1% this week. The Nasdaq down 5.7% this week. The Nasdaq right now is down almost 2.5%, 487 points. Pretty big move. Russell now 1.5%. Oil and gold are lower, and gold is down by $18 at 25.25 troy ounce. Oil sitting at 67.63 the barrel, down above 52. That's also been the lowest levels of the year. For some of the biggest stories in the markets, we welcome Kevin Hanks, host of Fast Market here on the Schwab Network. So look, this is
Meta rolling over out of a bear flag. Tesla, no follow through. A 2-day trade that just blew up this morning. Selling into strength made sense. Now we're pulling back. Tesla managed a nice follow through on the news that the company was going to start producing a Model Y with 6 seats. That lasted 2 days, and now we're already started to reverse and test the lows. So it's really tough. Really tough. Unless you're day trading, I would be risk off, not doing much.
The unemployment rate dropped to 4.2%. A lot of people thought that was because of the storm in Texas from a month ago, the auto workers strike that showed up on unemployment. All those numbers led to what people think is a softening in the U.S. economy. That's making bonds rally, yields come down, and that's making a soft stock market led by large cap tech. Broadcom's earnings, right? Lower again, taking that sector all down. So this is a market sell-off where the leadership that took us higher is also taking us lower, Nicole.
right, understood. And then, of course, we'll have more data next week, CPI, PPI rate, and Apple, big event.
Yeah, Apple's got their glow time event coming up September 9th. It starts 1 p.m. Eastern time. It'll be on the company website. It'll also be on YouTube. They're expecting to bring some new colors for the iPhone. They're expecting to upgrade the camera, maybe some new earbuds. All these things are going to be announced at September 9th, 1 p.m. Eastern time. Now, historically, on an announcement of a new iPhone like this, the average sell-off is about 43%.
All right, Tesla making new lows. Tesla. Meta is about to make a new low testing. Apple about to make a new low. Same thing with Microsoft.
Apple higher on the day, along with some notes from Bank of America, TD Cowen had some positive notes on Apple. However, Apple also softened. As you know, it's now down 1%. Still one of the stronger stocks today, but it's down 1% based on the overall market being down.
Yeah, all right. Yeah, lots to digest for next week. Definitely. I mean, I love to follow the time event.
Okay, looking for NVIDIA to make a higher high. Looking for the next pivot. We're on a buy signal. Technically, we could see a follow through, but we got to get above this high right here at 102.60, 102.70. And then we could retest this pivot and then VWAP potentially. That's a lot of ifs.
But the bad news is that the market is still cooling down. The unemployment rate is down where it was, but that's really just a matter of rounding. And a lot of that surge in July and the retreat in August was from temporary layoffs. But if you look at unemployment outside of those temporary layoffs, it's still trending upward. At the same time, we're seeing payrolls continue to trend down. So I think we're in a spot where labor market is still slowing down, and it's getting to speeds that are approaching what I call the stall.
Well, I was just discussing with some of the traders where the revisions and how the government reports and how, how much can you trust them? People look at the household survey, they look at ADP, they look at other things because the revisions we've got the spring revision, 818,000 fewer non-farm payroll.
Okay, Apple making new lows. Apple. Amazon making new lows. Tesla making new lows. Meta's about to make a new low in the evening session. Let's see. This is NVIDIA, not S&P. Sorry. NVIDIA. Yeah, breadth is bad. Down volume leading.
So payroll gains are slowing, but they're still positive. So I don't think we're on the cusp of a recession, but we've got dynamics in the labor market, like a rising unemployment rate. This is what the happening. I don't see anything from at least the next the short term that's going to lead some sort of stabilization in investment.
Okay, NVIDIA.
What's going to be the catalyst to sort of this booming economy and so many jobs where we're going to be adding a slew of jobs rather than revisions that were lower? I mean, last month it's at 86,000. I mean, right? When do we get to the point that we're not talking about a tough time?
So I think one thing that's clearly on the horizon that could be a boost to the economy is action from the Federal Reserve. Several policymakers spoke today and all but
NVIDIA.
Later this month. But the question
The lower Bollinger Band opening up. Upper bands opening up. So we could revisit this 90 level. And the 200-day, that's possible.
So it could be that the labor market gets a boost, but it could be several months down the line, and it's uncertain the exact state the labor market's going to be in.
Okay. So Apple pushing back. Apple. NVIDIA. Trend is down. Not expecting much, but potential more waves down.
So that does sort of weigh it down structurally. But if you look at
NVIDIA, Amazon. Amazon's losing the 200-day.
I think that explains some of the increase in unemployment rate, is that there's been more people entering the labor force.
Let's see. Money magic levels. Let me look at Amazon. I might sell more call credit spreads. Amazon upper level is 182.50. Selling the 185, 190.
And that's why we've seen the unemployment rate creep up in particular this year.
Yeah, so it sounds like he wants the Fed to cut. He's not sure how much the Fed will cut. Over there at Indeed, what is it that you're doing? Is it a lot of research, or are you actually placing folks? What are you finding each day?
Amazon. Amazon at that low of the day. I'd like to see a bounce to do any kind of call credit spreads. No bounces yet. Okay, we're starting to see some short covering on Microsoft, Apple, a little short covering.
Which is based on the vast data on job postings that we have in Indeed. It's down,
increased a considerable amount from its peak back in 2022, but still above pre-pandemic levels, so akin to what you're seeing with the job openings data, except for I've got data from last week, whereas the government just gave out data for July. So we're seeing this moderation, so we're seeing this one as well.
All right, down volume is better than it was earlier, but it's still 28-1 down on the Qs, 10-1 down on the SPY. So constant selling.
We can look at what's happening to the growth in the wages and salaries that employers are advertising to job seekers, and they're currently growing at about 3.2% year over year. That's down a lot from what we saw in early 2022. It's actually roughly in line with what we saw back in 2019. So I think that's a sign that at least the competition for new hires, what employers have to do to attract new workers, that seems to have stabilized at a level akin to what we saw back in 2019, which seems quite sustainable given that the 2019 labor market was humming along and wasn't really close to inflation.
Yeah, and I know you'll be looking to next week to the inflation prints and we'll have jobless claims as well. Anything that you're really looking for, and consumer sentiment on Friday. Within those numbers, is there anything you're watching for? CPI, PPI?
So, the weekly unemployment insurance claims are something to keep an eye on, in part because while we have seen this large pullback in hiring for new workers, most indicators of layoffs are relatively low. Initial unemployment insurance claims have been drifting up this year, but they're still moderate by historical standards, in fact, a little bit low. So I think that's something I've been keeping an eye on a weekly basis to see, are we starting to see some sort of sustained increase in people applying for uninsurance claims, which would suggest perhaps picked up layoffs or a more material deterioration in the labor market, just because that's more higher frequency data.
Yeah, that's a good point. I like that. You say that the indicators of the layoffs are still relatively low. That's a good point. Good to see you, Nick. Thank you so much. Nick Bunker, Indeed Hiring Lab. Thank you, Nick. Coming up, Options Corner. Tom White is standing by. He will highlight unusual options activity from the day and how investors are looking to trade on recent news of NEO. Great week for NEO. DocuSign and Tesla. We'll be right back.
Starting to see short covering. More so on Microsoft, Apple, Amazon, Broadcom now. Meta's starting to see some short covering. Tesla. Okay. Amazon. NVIDIA. If anybody would be focused today on trading, I would imagine they'd be trading around NVIDIA, perhaps. Netflix with a nice bounce. Netflix. Okay, so NVIDIA. Let's take a look at NVIDIA. Call wall 108.110. Okay, so 108.110 is way overhead. Support 105.100. So we're right in that zone right now. 100, 105's overhead. So we want to hold the 100 level. That's where the put wall is for NVIDIA. Love to see some short covering into the close. So far, nothing. Very little interest. Seems like very little interest in the markets.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back. It's time for Options Corner, where we analyze unusual options activity that we've been seeing, the trades that we see throughout the day, Tom White is with us, host of Fast Market here on Schwab Network. I was looking at the semis down 10, 15% this week, and NEO up 25%. Lots of positive comments. The analysts have been somewhat bullish, even though the stock is down big time over 1 year. So tell me about the bullish trade that you found, Tom White.
Yeah, having a nice little pop here today. Probably on the back of that upgrade that they got out of JP Morgan. They raised their price target to $8 from $5.30. They're overweight on the stock now. And this is probably based on...
All right, just a little short covering. That's all it is so far. NVIDIA, no follow through. Looks like it's going to drop a bit, NVIDIA.
They actually have a 40% market share in the premium segment of EVs over in China. So things looking up here. Citigroup just recently opened a positive catalyst watch on the stock with the $7 price target. So yeah, their margins are starting to improve. They're the leader in the premium segment of EVs at this point over in China. And they actually raised their Q3 revenue during last earnings up to 2.63 billion to 2.71 billion. That consensus before that was about $2.5 billion. So they raised that, and they raised their Q3 delivery estimates up to 61 to 63,000. That's about 10 to 13% above previous consensus. So a lot of things going right for the stock. Despite that, Nicole, stock's still down about 44% so far this year, but making a nice little pop today. And the options traders are jumping on this. Call volume about 3 times normal daily average volume. The one that stuck out to me was actually September 13th.
NVIDIA. Just a little short covering. That's all we're seeing.
Just about 27 cents. So there's not a lot of option premium in these options.
All right, we got a little bit more than 2 hours and 44 minutes to go. 1 hour and 44 minutes to go. Sorry. 1 hour, 44 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Friday, the 6th of September.
Based on the delivery numbers, and somebody expecting this stock to rally over the next week.
Yeah, you see it from many of the other houses that came out. I see Citi with the $7, some expectation moving to 8. I mean, you're looking at upside of 60, 65%. The high was $10 and change. So very interesting trade you found there. Now, DocuSign, this got a nice little pop. Was a pandemic darling, but has been under pressure when you look at a longer term chart. But nice pop to 3.7% today. You found a bullish trade, right now?
Yeah, this is post earnings, Nicole. The stock's basically flat on the year now after kind of trading in a consolidated range over the last several months. Now, there's nothing wrong with DocuSign's business, and their earnings last night kind of reflected that, where EPS came in at 97 cents. That was above the estimates of 81 cents.
Okay, NVIDIA. Still looking for some sort of follow through. Nothing yet. Nothing yet. Continue to see waves of selling. Tesla at the low of the day. Tesla.
That's why we're seeing the stock up a little bit. Now, in the pre-market, the stock was down. But then if you looked through some of their estimates moving forward, they raised guidance.
All right. Looks like NVIDIA is going to pull back a bit more now. So I won't hedge until the end of the day. If we manage to get any kind of bounce, I'll gauge it. But I don't want to take anything right now because the markets could zoom higher, in which case I would have a better level overhead to hedge. I don't want to buy short hedging at the low of the day. I'd rather see a nice bounce into the close. So we still have an hour and 40 minutes for that. All right. I'm going to take a couple minute break. I'll be right back. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Friday the 6th, 2:19 on the East Coast, the best coast. Give me 5 minutes. I'll be right back.
Okay, next up, Tesla. Why is that one on your radar?
Oh, Google is one I was thinking about. Call credit spreads on Google.
Tuesday, Wednesday, Thursday.
Google losing the 50-day.
Stock was higher each one of those days, taking a big hit today, down about 7%. Now the stock's basically flat on the week, but this hype was all based on getting approval for self-driving over in Europe and China.
Google, where are the levels? Google.
Programs working over there.
Google.
They're anticipating early next year getting approval there in full self-driving.
160 overhead.
This adoption of full self-driving takes place or takes hold. That's $99 a month per person that's using it. That's revenue accretive there. And then everybody's anticipating this big October 10th robo-taxi day that they had to push back from early August expectations. So that's also on the radar of a lot of traders. But then at the same time, you've got their AI-trained humanoid robots that are expected to come out and get more clarity on those over the next several months. But yeah, if you looked at some of their declining revenue, saw a nice little pop in here before today's sell-off. And we did see some unusual option activity in here in the option market. But these are longer dated options, unlike the previous two I discussed. These were out in the December 240 strike calls. A trader bought 20,000 of those for a debit of $20.35. So the break even for this trader at just over $260 over the next 105 days. That's about 21% above the current share price in there. Despite that weakness that we've seen in the stock today, call volume still over 1.5 million calls traded on the day. That's about double normal daily average volume that we've seen over the last week of trading. So yeah, somebody taking a longer dated bet on Tesla that we're going to see some more gains. You're going to capture that October 10th robo-taxi day, and then also
NVIDIA, no follow through.
October also. So yeah, somebody betting on some upside into the end of the year for Tesla.
Yeah, exciting. Sounding really bullish too. I mean, the 3 and the Y have seen growth. Full self-driving in China and Europe 2025. It seems like it's next week. And when I asked Steve Leslie and Hatem Diab about what Gordon Johnson, who's a bear, right?
Yeah.
He's a bear. He said, yeah, this is what Elon Musk does. He puts it out there like he dangles a carrot, but it's upon
No follow through, NVIDIA.
and then he won't necessarily get that, and so it causes the stock to fluctuate. I don't know. Let's see. Let's see what happens in the new year when he tries to.
All right, let me take a couple minute break. I'll be right back. Watch this support level. S&P also sitting at the low.
Coming up, we'll take a look at retail, some of the hottest trends. We've already done back to school. Now it's the holiday season. What do we need to know? Programming alert, episode 2 of Inside the Mind of Trader premieres Monday at 5 p.m. Eastern Time. The show is created and produced by Charles Schwab. It's a journey into the minds of people who trade brilliantly. Here is a preview.
I wanted to start out by talking about your career as a college quarterback.
It's funny. I mean, I'm trying to dodge 300-pound men tackling me. Now I'm just clicking buttons.
When I see you work like this, are you actually seeing physical railway lines and lumber?
Risk management is what keeps you alive. I'm not very good at sales, turns out. I'm very good at trading, where my customers don't care about anything other than me having the cheapest price.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So, all this for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know, Carl is the only front man you need.
Oh, I gotta take this, Carl. Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge.
And shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Gates. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. I'm Nicole Fedelides, live on the floor of the New York Stock Exchange. A few market movers for you right now. Shares of Broadcom, those are selling off. The guidance fell short of the expectations. Despite strong earnings that topped expectations for the latest quarter, other chip stocks also down in sympathy. Right now, Broadcom's on track for the biggest one-day decline since March of 2020. Mobileye shares, those have sunk to new all-time lows. Reports that Intel is considering selling part of its stake in the autonomous car technology company. Bloomberg reporting Intel's decision is expected at its board meeting later this month. Shares in Mobileye are down about 18% for this month of September and nearly 75% for 2024. Intel shares down again today, by the way. August jobs report, well, we looked at that, the labor market, and it's important because we want to know how the consumers are feeling. Got to have a job to spend some money. And we got in second quarter retail scorecard. Sharon Martis is with us, Director of Consumer Research at LSEG. And it's very interesting. A lot of the retail companies, they have decent quarters, but they actually warn going forward about a consumer being cautious. Did you find that in your research?
Absolutely. We received a significant amount of negative guidance going into the third quarter. And among the reasons that the retailers are citing are the macroeconomic conditions, a cautious consumer, and prices are still very elevated. Retailers are warning us not to expect too much from them in the third quarter. And as a result, we're seeing that the earnings growth rate for retailers has dropped significantly in terms of estimates.
Okay, all these charts look pretty bearish. All these charts look pretty bearish. Let's go through the New York FANG index stocks, the top 10. Apple at the lows of the session. Amazon at the lows of the session. I'm going to cover how I am trading these. Broadcom at the lows of the session. Google at the lows of the session, starting to see a little bounce. Meta at the lows of the session. Again, I'm going to go over how I'm trading this at the present time. Microsoft, oops, MSFT, that helps. Microsoft at the lows of the session. Netflix, NVDA at the lows of the session. NVIDIA. Okay, Snowflake at the lows of the session. Now, how would you trade this? How would you trade this? Would you be looking to go long at the lows of the day? Or are you anticipating there's going to be more of the same? I'm thinking there's going to be more of same. Okay. So what I want to do is to sell premium. Okay, here's Google. Let me just mark Google up real quick. Google. Let's see. Google. Okay, here's Google. All right, so what I'd like to do is sell overhead call cred spreads. We know that Money Magic's levels are 157.50 and 160. Let me just put that on the chart so that I have it for reference because I'm looking at taking a trade, but I want to get a bounce first. Just want to get a bounce before I do anything. Okay. 157.50, 160. All right, 157. Okay. Money levels 157.50 and above that 160. So that's the major levels that traders would need to push this above in order for us to move these higher. Okay, so right now I'd be looking at the upper level, which is 160. I would probably sell that level, or 165. If I sold the 160, I'd be buying the 165 call credit spread. But I'd wait for a bounce. Okay, in this case, 160, 160, 165 call. Okay, so that's what I'd be looking to do. Looking for a short covering rally to do this. Google trying to bounce a bit. Okay, so Apple, you know what we did or have been doing with Apple. Apple is a call credit spread as well. Selling the 235, 240. So this is what I'm going to be doing until the markets start trending again, because there's a very decent possibility we could drop right back down to the low that we saw in August. Previous occasions, presidential election cycles, 2019, Trump, Biden. Prior to the election in November, we had the markets pull back 7.2%. The 200 days right below. We hit that level 3 times. We bounced, came back, and retested it again in the second week of October. So that's 2019, 20. You've seen these before. 2015, 16, that was Obama's second term, right? Second term. August, we came down and hit the low. Bounced and came right back down and tested the low again. So that's what I'm looking for. The other reason why I'm looking for this is the Japanese yen Australian dollar pair, which gave us trouble the first week of August on that spike, is starting to come into view again. So Bollinger Band's opening up. So as this is moving higher, you would expect the Nikkei to back off. And the Nikkei did exactly that. Nikkei is backing off the 50-day, dropping right back down. So that caused a problem for the Nikkei. It also caused a problem for the U.S. And right now I am looking for more downside unless something happens to make us reassess the markets. I'm looking for more downside. So therefore, I want to take call credit spreads. I want to hedge. If I was going to hedge, I'll do that at the close. I'd be looking at perhaps SPXS. Okay, that's one that I'd be looking to hedge with, but I'm not going to buy it right here. We'll see if we get any kind of rally in today and if they sell into strength again. But you can see the volume here. About 200 million shares trading hands in the last 4 trading days of this hedge, 3-time bear. You could also do SPXU. SPXU, that's another one. 3 times the cost, 4 times the cost. Volume. Okay, so this is like a hedge. I just don't want to buy the hedge here. I want to see what happens in the last hour of the trading day. If you're thinking small caps pulling back, maybe we get to the 200-day. Maybe you want to hedge with TZA. Maybe you want to do both. Okay, I just wouldn't do it right this minute. I'd be looking for a little dip lower. This is continuing to move higher because we're showing weakness in the indices. Okay, Amazon pushing lower again. Amazon. Okay, so TZA, let's see, QID, you could do for the NASDAQ, QID. Okay, QID at the top Bollinger Bands, QQQ. Okay, that could come down to the 200-day. This, I mean, we could bounce here, but I think pretty good shot we're going to hit the 200 at a minimum. Remember the previous charts of the presidential election cycles? Revisiting the low seems very plausible. Bounce in September. So maybe you just want to collect cash. That's one way to play it too. You don't have to do anything. You could just wait, be patient, wait for this retest. I mean, this could come all the way back to the April low too. Nothing says we can't visit that low. So in order to do that, I'd be doing maybe SQQQ, SQQQ. If you think that the Apples, Amazons, all the New York FANG, if you think these are going to continue to move lower, then you could consider SQQQ. Okay, so those are the hedges that I'd be looking at. If you don't feel like doing call credit spreads like I'm doing, or you could do a combination, or you could do nothing at all and just sit in cash and wait. I'd be waiting. I've got a number of people asking me about trades, and I'm saying to them, look, this is a risk-off mode. You got to be patient. If you're chomping at the bit to take a trade every single day, it's probably not the right idea to be on right now, unless you're good at day trading and you're buying puts. When it fades, this morning we were looking for a fade right out of the open. That's exactly what we got. S&P cash. We were looking for a fade at the open, and that's what we saw, a fade at the open. So if you were ready for that, Mondo and a few other people shorted this right from the high. So are they looking to go long the calls? I don't know. We don't have not much time left. So if we're going to do anything, it'll probably be some short covering. Bottom line, the markets are weak. The markets are weak. Let's take a look at the New York FANG. This tells you what you should be thinking on the New York FANG index, the top 10 stocks. Does that look bullish? Okay, these 10 stocks are being sold. Tesla's starting to bounce. Tesla, a little short covering in a day. So there's going to be some outliers. There'll be some outliers. Tesla looking for a bounce. But the majority of these stocks will probably continue lower. Can we bounce back and get rejected and then move lower? Sure, anything's possible. But I'd be selling overhead calls. Okay? Because we're making lower highs, probably going to make a lower lower, at least test the low right here. Instead of trying to fight the trend, trying to swim upstream like a salmon, go with the trend. The trend is down. Okay. Here's a good example. Zscaler. What happened after earnings? Man, it's just like the floor dropped out, right? The floor dropped out. So this made a 6% move. The expected move on earnings was, what was it, 8.9%, something like that. This moved 16%. So when stocks in the tech group, security, drop that much, you should be aware of it. Okay, CrowdStrike, I have a credit spread on CrowdStrike. Actually, 2 credit spreads at Iron Condor. So CrowdStrike is doing exactly what we're looking for. You just have to be patient and let time pass. A lot of people don't have the patience to sit and just let the theta kick in. Okay. CrowdStrike is up $150 per contract. Okay, so we sold this for $214. So what I'm looking for, let me see if I could close this, what I would close it for. Let's see, CrowdStrike, create closing, buy 10, sell 10. Okay, 44. All right, still pretty elevated, $44. Earlier today, you could have gotten out of this at about $30. I'm looking to get to about 15. That would give me a clean $200 per contract profit. Okay. So you sell it for $214, but it takes several days, in some cases a couple of weeks, for theta to kick in and for this credit or the cost of this Iron Condor to drop from what you sold it for, $214, down to say $15 at some point in the short term. We got 2 weeks to go. Theta will kick in bigly next week. Theta is going to kick in which case we'll see this drop very fast. So the 214, you could buy. There goes Tesla. There goes Tesla. All right, so we're getting some short covering. All right, so that's what I'll be doing. I'll be doing this on any bounce. I'm looking to take call credit spreads on most of these New York FANG stocks. Tesla's starting to turn. The great thing about selling credit spreads is, at least from my perspective, number one, I'm broadcasting, so I can't really, it's easier for me to take credit spreads that I know at a 10 delta or 15 delta, there's like 85% probability that I don't even have to look at it during the trading day. Plus, if you use Money Magic's levels, example, all right, let's use an example here while Tesla's bouncing. Let me show you something. Let's go to Apple. Let's look at Apple, okay? So Apple, I'm selling these credit spreads up top. I've already sold these. These were earlier in the week, 235, 240. All right, so let me look at Money Magic's levels. Money Magic's levels, the upper strike is 227.50. So what do you think the probabilities of getting to 227.50 are? Well, it's possible. We would definitely look for some resistance there. And Money Magic will tell you that when you start to ease up towards those upper call walls, the upper call wall, 6 months of open interest, the average is about 227.50. Now, he's also looking to buy the dips into next week. So buy the dips and look for Apple to bounce. Now, 227.50 is the upper call wall. So what do you think the probability of getting 230 or 235? I think it's pretty minimal between now and October 18th. We'll reassess it over the next couple of weeks, but more than likely, the credits that we receive will collect 90%, 95% of it. So that's one example. Let's look at another one. Let's look at Amazon. Amazon. Okay, so same idea. Amazon's weak. I want to sell I've already sold the 182.50, 187.50 call credit spread. What's Amazon? Amazon's levels, the upper level is 182.50. So currently, 182.50 is right in line with what Money Magic has as the upper call wall. So what would happen if the prices move back up towards that level? We would probably see a lot of profit taking, in which case that would create resistance and press the stock price back down. So 182.50 is the call wall that I'm paying attention to, and that is exactly where Money Magic has the upper call wall. First, you got to get through 180. 180 is the first call wall, and then 182.50 is the next call wall. Let's look at another example. Did we do Google yet? I think we did Google. Tesla's trying to make some more. All right, got plenty of time to rally, an hour and 17 minutes. Okay, let's look at Google. So Google, I told you, I'm interested in selling 160s, 165s. Google starting to bounce a little bit. Google. Okay, so Google's levels are, I have it right here. 157, 160. Okay, in order to get to 160, we got to get through 157.50. So all those calls there are going to create some resistance. Okay, you didn't see what I was talking about before, so let me just go for this real quick. So there's Google. This aligns with Money Magic levels, 157.50, 160. I'm interested in selling 160, 165 because prices are probably going to stay below both of these strikes, 157.50 and 160. So I can sell this with relative safety. The 200 days right there. Okay. Here is Amazon. Just talked about Amazon. 182.50 is the second call wall. First call wall is 180. So I don't think we're going to get through 180 or 182.50. So I can safely sell these. Already sold them. And The last one, Amazon, 235, 240. Amazon, Money Magic has 180, 182.50. 180, 182.50. Wait a minute. Wait a minute. What's going on? Apple, 225, 227.50. Let me just put that on here. Apple, money levels. Sorry about that. 227.50 and 225. 225. Okay, money levels. All right. So 225, 227. We'd have to get through both of those levels in order for this to not work. So these are about a 15, 14 delta, something like that. Okay, so that's what we're looking at. Oh boy, hope everyone's having a good day. Looks like Tesla, Meta, Google bouncing. All right, so Google, nice little bounce. Tesla trying to push off of this level. S&P still down here at the low of the day. Tesla. So you can either sell call credit spreads overhead, and or you can take a hedge towards the end of the day, or you could do nothing. You could stay in cash and just wait, be patient, wait for that retest of the August low, and just day trade in and out during the day, close by the end of the session. Let's see, Amazon. Okay, so let's look at semiconductors again, semis, SMH. Now, SMH, if you're looking for more downside, I would wait for a bounce, and then maybe buy the SOXS. If you're bearish, semiconductors, you think semiconductors are going to move lower, you could buy SOXS and short the semis this way. If this was a stock, you'd be very bullish. Okay, so SMH looking pretty ugly. Most of the semis we talked about earlier. Look at the semis. Semiconductors. Okay, here are all the semiconductors. Semis. Okay, here are the semis. What do you think of the semis? You think semi is going to bounce? All right, this is on the day. Let's look at the week. Semis for the week, even worse. Semis for the week. SOXL, long the semiconductors are down 33.4% for the week. Okay. Let's see. At present, NVDA is off 14% for the week. So with this in mind, are you bullish equities? You might say, okay, yeah, well, taking the contrarian side, I could see SMH bouncing. Well, it hasn't bounced yet. So until the next hour goes by, I won't make a decision, but I'm thinking about a hedge against SOXL. All right, excuse me, semiconductors. Okay, Meta, nice bounce on Meta, but still pretty ugly. All right, this looks like shorts covering. That's all it looks like for now. All right, so you want to scalp this? This looks pretty good. Semis, on a short covering, semi. Okay. Tesla, NVIDIA. Okay, NVIDIA looks like it could go some more. NVIDIA. NVIDIA. Okay, all these are getting some, get some follow through.
Have a choice in how you invest with Schwab.
Okay, we got an hour and 10 minutes to go. An hour and 10 minutes.
Available anytime, anywhere, on any device for free.
All right, so NVIDIA trying to push. Watch NVIDIA here. Okay, SMH is starting to bounce. SMH. NVIDIA bouncing. Okay, NVIDIA. Okay, Tesla. Tesla trying to get something going. Just shorts covering, it looks like shorts covering. Okay, so that's what it looks like right now. Amazon pulling back. Netflix.
So this, I mean, ultimately, as you noted, increasing premium broadband and mobility services. There was also a dividend increase that was thrown into there. Michael,
What's Chipotle doing? Chipotle, I just saw something on Chipotle. Chipotle trying to get back above the 200-day, not having much luck. Chipotle. CMG. All right, back to Tesla. Tesla looking for the follow through. Watch Tesla in the day. This could run. Tesla in the day. All right, watch Tesla.
keeping pace with AT&T. How about keeping pace with T-Mobile, Michael? Right? I mean, AT&T, is that even part of the story anymore?
Absolutely. So T-Mobile is playing the same game. They've dipped their toe in a couple of private equity transactions over the past 2 quarters, investing several $1 billion trying to find places where they can partner with existing fiber builders to build out their own fiber infrastructure. T-Mobile is pretty far behind AT&T and certainly Verizon. They're talking about having maybe 10 million customer locations built by 2030. So again, this theme of convergence and having a multitude of ways of connecting customers back to the device. All right, Tesla. Watch Tesla here. Okay, you have an opportunity to exit. You have an opportunity to make some money on Tesla into the close. Okay, there goes Meta. Apple. Okay, watching Tesla into the last hour of the trading session. We got about an hour and 6 minutes to go. It is 2:54 p.m. 2:54. We're looking for Tesla to continue. Okay, the target would be that previous high that we put in right around 115. 115 high is what we're looking at. 115 high, I'd be selling into that.
And so which ones are a buy right now in the world of telecom, Michael, over at Morningstar? I know you have 4 stars indicating, obviously, some good news there. Are any of the names in the group 4 stars?
217. Okay, there goes Meta. Meta zippity doodah. There goes Meta. Meta turning the corner. Okay, NVIDIA. Nice move on NVIDIA. NVIDIA looks like it wants to go. That previous pivot over there on the left. Okay, looking for this to get up to here. If we make it to there, then you got VWAP. Okay. Okay, this one first. And that one second. There we go, NVIDIA. NVIDIA looking good. Go, NVIDIA, go. All right, nice little follow through. Okay, cool. What's Z-Scaler doing? Where are you, Z-Scaler? Z-Scaler coming off the low. Z-Scaler. Microsoft. Still at the low. Microsoft. Nothing to do there. Microsoft. Tesla. Tesla coming off the low, but still a long way from the top. Long way to the top.
This election season, stay out of the muck and the mudslinging. Schwab Network's 500 coverage of the presidential cycle.
Let's play a little AC/DC. It's a long way to the top if you want to rock and roll.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading the trust of a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive.
Okay, Tesla on the move. Okay, NVIDIA, nice move on NVIDIA. There goes Apple. Apple, boom. There goes Apple. Okay, turning the corner. It's a long way to the top. If you want to rock and roll. Apple. Apple. Turning the corner. Nice volume on Apple. See that volume on Apple? Okay, we're clearing this level. Bullish chalk showing up. Looking for a move through 222, 220.75. 220.75 could get us 221 very quick if you want to day trade that.
Do you think that this is potentially a human superpower?
Okay, S&P is trying to turn the corner too. All right, so let's get this going.
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly? It's controversial. The old guard is saying, are they off with their head?
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price.
Amazon.
My goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you. Market overtime on the Schwab.
Broadcom. Meta trying to make a higher high, 501.98, 502. Tesla looking for a higher low. Tesla, Apple trying to go. Snowflake, Apple.
Stocks have been getting hit. Pretty much been the story all week. We put in lower lows and we continue to throughout basically the weekend. Right now, it does kind of look like we opened up the downside again in the market. As well, it kind of depends where you look, but Bitcoin's making lows. We're at the lows of the session for stocks. We did
Apple.
fresh low for S&Ps about about an hour ago. So we'll see how it goes. Maybe we get a little push, but we're gonna have to.
Apple going.
And it doesn't look like there's really been a lot of interest in buying dips today. It's been just pretty much a slow, steady drip, and no one really shown up to buy the dip. 54.12 for the index, so down more than 1.5%. Tech a problem. We were already faced with an uphill climb with Broadcom's disappointing guidance yesterday afternoon, which had the shares under pressure.
Apple, let's see. Apple money magic levels again. We said 227, right? Apple. I'm looking to sell some call credit spreads on this bounce. Apple. Apple. Okay, Apple.
When the economy looks like it's under some real pressure, and even if we get cuts, not sure at this point that you're going to get the turnaround and the economic trends that you want.
227. So 230 makes sense. 230. Apple.
And so then you get a lot of the similar types of trends we've already gotten. Lower dollar, firm bonds, but then the equity sell-off kind of messes that up. So let's go through it. This is a few important things here. Firstly, Broadcom down 10%. Obviously, that's a major headwind throughout the entire session. Semiconductor,
Apple.
once the hero, now the laggard of the market and the problem area basically all week. There's not a lot of working in equities apart from anti-beta trades, BTAL, fun I've talked about many times this year, as a way to still get upside when stocks are grinding higher, but then also be protected when you get risk-off moves concentrated in momentum.
Apple's still pushing.
BTAL is now 20% on the year. It's a pretty amazing performance for basically an anti-beta, low-vol type of play. If you think about U.S. in
All these FANG stocks, for the most part, are moving higher, except for Amazon at the moment. Okay, NVIDIA zipping higher. NVIDIA.
So it's been a really nice way to thread the needle for stocks this year. By the way, as we are right now at the lows of the session, the dollar and bonds have had a really interesting course throughout the day. There's definitely a lot to be mined there, but the short of it basically is that you would think that with yields going down, bonds getting bid, economy slowing down, that the dollar would be lower today too, because we're upping the odds of 50 basis points, which is what we did this week. Looks like we're going to end the week with about a coin flip chance of 50 bips. You would think the dollar would be lower here today, but here's the catch. When it gets to the type of intense selling that looks like we're getting, Bitcoin off, gold off, with every sector down, then the dollar basically catches a kind of pure risk off bid. So that's what I was looking for this morning as a sign that we were going to get a fresh leg lower. So as we head into the finish here with an hour left, dollar higher and bonds higher too. So lower yield, higher dollar. That's pretty much telling us that you really don't have a lot of outs right now, because investors are even going to buy dollars kind of a cash hideout. That makes me think that high correlation selling could still be kind of brewing in the market. We're getting a little bit of that today. It's not awful, but that's an important point here, because even though it looks like the Fed could be still live for 50, maybe the dollar's downside limited here. Stocks are going to get slammed. So that's kind of an important nuance because generally everything else fits together pretty much perfectly today, including Bitcoin being soft and early in its weakness, flipping around after.
Okay, S&P is trying to turn the corner.
This morning when it went red and turned around.
Meta going. Tesla looks like it's going to go again. Snowflake, NVIDIA. NVIDIA looks like it wants to go. NVIDIA wants to play. There goes Apple. Apple on the move. Apple on the move. NVIDIA. Okay, NVIDIA going. New high. All right, there's your second target right there. Okay, we're getting our second target.
Well, it looks like we're kind of like hanging on by a thread here, basically, at the end of the day.
It does. I mean, we are kind of hanging on by a thread. I think the more you dive into I will say, I thought that we were overreacting to this morning's number. I mean, I thought that non-farm payrolls maybe came in like not as bad. Like, I think the initial reaction of okay, but then you look at some like the private hiring sector, we're at a slowest pace in what, since 2012. And I think that maybe this spell was warranted. Now that I'm becoming maybe a bit too much of a pessimist or realist, because I think we have to sort of acknowledge like the economic conditions in which we're operating.
Yeah, well, like if we were gonna.
Okay, we're right there right now.
If we're putting out a number like that, then boy, the bar was really low.
Right.
Because it still was a miss.
Okay, NVIDIA.
Trying to kind of spin it this morning, kind of a few ways. It's kind of a spin that maybe it could have been worse. And then the stocks tried to do kind of the baddest good thing again, which is like we're bashing our head against the wall for anyone still thinking that's the trade.
Friday afternoon, a day where the NASDAQ is down big, S&P down big, Dow down big. What is the trader looking for? Here's what I think. Here's what I do on days like this. Here's what I've been doing.
Tell me the Kevin Hinks Friday afternoon.
Hit up the 1-minute charts on the indexes.
Okay.
Right? Look for signs of recovery. And you are seeing them actually. You got the low on the SPX about 5402. Right. You got the low on the NASDAQ about 18,400. You've got the low on the Dow Jones about 40,297. And so you are seeing a little turn up in the minute.
Like literally in the last 20 minutes.
Yeah.
There's the little hook.
It's showing you a little hook for the end of the day that maybe you can nibble on dips here, or if you already did nibble on dips, Jenny, I'm not talking about myself.
Okay, looking good.
You can feel a little better going into the end of the day with a tradable event, right? That's where we're at this point in the day. You probably released some of your hedges. You probably upped your delta down here, and you're seeing where if the market.
Okay, nice follow through.
Do you reapply?
Microsoft, nice follow through.
That's what I want. 1-minute charts as we go into the end of the day.
Hey, I'm with you there. I'm not opposed to a little feel-good Friday ramp. Right. Maybe in the last hour here. Seems like there's a little bit of nibbling, to your point. Bitcoin at the lows of the day, but that also just kind of ticked up in the last 10 minutes here. The problem is that, again, it's like how far can you go when the big tech stuff is getting hammered? It's kind of frustrating to see Tesla getting back so much. We talked about that this week as kind of being one of the few winners in the mega cap trade, Jenny. That's down 7% right now.
I mean, gosh, the giveth and taketh of Tesla. I mean, it's just like the most typical week, I feel like, of Tesla. It was like the past couple of months. I mean, it wasn't. As of yesterday's close, they revealed this roadmap of FSD.
Okay, Tesla. There goes Snowflake. Big move on Snowflake. Looks good.
I just still think will be important because we're clinging on to any sort of day on the calendar right now. But saying that they're unveiling FSD for the Cybertruck, they also unveiled plans for Europe and China. We talked about how that is not yet here, and that could also be like maybe a regulatory thing. But nonetheless, it wasn't exactly a new fundamental update, and we were rallying, which we were saying that was kind of.
All right, nice follow through.
All of that today, which not really on any fundamental update either. I mean, it's just like the nature in which Tesla trades. I mean, I guess this is like the dream for those that trade volatility. I mean, Tesla is no stranger to that. But what's kind of amazing is actually if you look at what has been losing trade in this entire space is like the EVs. Like NIO's gaining 25% this week. It's rallying today. Different size company, incomparable, but the Chinese EVs are actually in the really solid.
No, it's a very good point because Tesla was in that same,
Because they catch the bit to the downside with these names, but then they don't oftentimes catch the bit to the upside.
Okay, S&P, nice little reversal. Some shorts covering.
Can't change what Tesla is. Always been that. So, all right, we'll get a little up and down. I mean, what would be impressive, Kev? How much do we have to erase, do you think, to feel confident here? Maybe we get back above 54.50, a nice little, relief rally, maybe 54.60, because we tried to spike there and then we came back down.
You're looking for something good to come out of this day.
Okay, Apple, nice little pop on Apple. Not quite back to the pivot high, around 120 or so. Tesla, nice bounce, higher lows, higher highs, but no follow through. Amazon, nice bounce on Amazon. Running into some areas of supply.
I think the earnings situation also a little bit of a disappointment this week. Cloud companies were in focus.
Netflix, nice follow through. Amazon, nice rip higher. Apple, nice move on Apple.
We came from their Jenny's that AI is not an obvious bull case for a lot of cloud companies. They're having to find ways to adopt it, work it in, and make sure it doesn't eat their lunch in many cases for the services they provide.
I could totally agree, and I think watch out for the exact same theme for Oracle and Adobe. I mean, I think like that is like the quintessential argument for companies. We cannot expect them to be a
Amazon, Apple,
perfect example. Company that's $700 billion right now in terms of its market cap.
Tesla, a little profit taking.
Definitely the growth story, but there's still other aspects of this business. I mean, you see earnings fall 18%, sales jump 50% nearly, and we're still down 10% on the session. I mean, this was objectively, you could paint this as a strong quarter. I know that guidance missed, but like Broadcom sell-off today, I think is a little bit of an overreaction, but it shows you this is what happens when you're riding.
NVIDIA, looking for another pop higher. NVIDIA. Nice move on NVIDIA. Okay, so we can see a little bit of a follow through.
You know what? It wasn't a very interesting report.
Well, as soon as it came out, it's like, how could you buy this after they miss guidance? When there's an entire narrative about how guidance should be, blowing the doors off.
Well, right. And to me, it's like if you should be growing, not saying that, sales is 41%, not saying that that's not good enough, but I just feel like given the expectation, the valuation, you should be seeing consistent that pace of growth. I mean, we shouldn't be already like missing, to your point.
Kev, last thought, the AI trade, I mean, did it officially
All right, let's go take a look at semiconductors, semis, SMH semiconductors. Okay, looks like we're going to try to lift back up above the 200-day. So I would wait until Monday, perhaps, to plan another trade around this one. We had call credit spreads against this one. For now, NVIDIA doing very well. Still got a ways to go.
Revisit the economic data, talk about the next couple of things to look for the economy, probably inflation. Guy Berger, Director of Economic Research at Burning Glass Institute. Don, so let's go back to the beginning here real quick this morning. Big revisions, a pretty sizable miss too. We going the wrong way with John?
Yeah, I think we are.
Tesla, no follow through. Looks like a bear flag. Tesla, no follow through on Tesla. NVIDIA just got rejected at VWAP.
Things are okay. This is not a bad jump by any means, but it doesn't seem like it's stopping. So what's okay now may be less than okay 6 months from now.
The potential for monetary policy to counteract whatever trend is happening in employment, which looks like it's a bad trend. What are your thoughts on that, Guy? What will it take? How long does it take if they were to start? And what they did, does that make a big difference?
I mean, I think it will make a difference. Sorry, I might sneeze in mid-statement, but I think so maybe it's a moment. I think that first there's room for
Okay, nice pop on the S&P.
The floor under hiring, which has been hiring coming down, not layoffs, have been the big driver of this cooling in the labor market that we've seen. It's very gradual, and the fact that it's gradual buys us time. But at the same time, it does seem like they're already a little behind the curve.
Okay, we got rejected at VWAP. Still bearish until we can get back above it. Nice little rally up to VWAP for now with 45 minutes to go. S&P, nice little rally.
Stocks went on to make a new high into the end of 07. Obviously, something happened afterwards, but in the interim, stocks went higher. Stocks slowed down in the middle of 2012, at the end of 2012. 2013, for any of us that were there, was a phenomenal year for stocks on the back of that slowdown. Just because the economy slows down doesn't mean the stock market has to necessarily slow down. They don't automatically go with that.
Nobody cracks down, Tom, the handbook that says, hey, this is step 1, 2, 3, 4, and 5 of what the soft landing looks and feels like. So we're not exactly sure what to make of the little softer report here, maybe a little stronger report there, another softer one here. We're jumping to conclusions, figuring that maybe the soft landing story is in doubt.
That's right. I think there is soft landing fears, but I think the bigger fear would be a credit event. I just don't think there's a lot of leverage in corporates. We know household leverage and debt service ratios are still 40% below they were at the last cycle peak. So I think there's a lot of room for credit to expand. And capital spending has been muted. So
Tesla didn't make it back up to the 115 high. Still have time, but only 45 minutes left. Okay, we need another layer of liquidity to show up here. As we can see, 2 million at this low, bought into this. We rallied higher. Volume came in. So we need to see another one like that. A series of higher lows. Okay.
New money you're adding, just make sure you're better diversified. So if the rally broadens, you want to take advantage of the broad rally, not just the mindset.
Let me also say about NVIDIA and those stocks. Like, what are you supposed to pay for a stock that's growing revenue at 400%, growing net income and EPS at 300, whatever the exact numbers are, at multiple 100%? What are you supposed to pay for that? And that extent, obviously, Google has some regulatory issues right now, and Apple is sort of an island unto itself from the growth standpoint. But for the rest of those names, Microsoft, etc., what are you supposed to pay for those stocks? They're supposed to trade at a premium. And to Tom's point, again, for the millionth time, we're not a particularly large tech investor, but when those stocks sell off, so when you're trading at 30 or 40 times forward in the case of some of these names, you're going to get 8, 10, 30% drops. It doesn't mean the fundamental story for them.
Okay, Tesla rolling over. No follow through on Tesla.
The rest of the market, not screamingly unattractive.
Yeah, I still like these for call credit spreads overhead. I think the odds of moving lower next week are pretty high. We got some short covering, puts monetizing, combination of both. As we lifting off the lows, new money coming in, day trading these.
Isn't the problem that a lot of these other stocks were given NVIDIA-like multiples?
All right, looking for a higher high. If we can get that, look for another area of liquidity to show up here. If we can see some buyers in the next 42 minutes.
And now some of them are realizing, oh, you know what? Maybe the growth rates are going to be a little slower. Maybe the AI benefit that a lot of these stocks were getting, I don't know, maybe Broadcom's in that category, didn't deserve to get as much of a bump as it got.
Sure, flows have a funny way of hitting everybody, and they did on the way up. But to the point that we're discussing, a lot of these names are 20, 30, 40. Dom mentioned in the previous show, 50% off their 52-week highs. The overall market is 2 or 3% off the high. Then maybe the overall market's 4 or 5%. The equal weight's 2 or 3% off its highs. Over the last 3 months, financials, industrials, real estate, anybody, anyway, I can go into the details, but like 4 or 5 sectors have been outperforming.
Yeah, utilities, staples.
And there's nothing wrong with that. There's nothing wrong with periods of time
and we'll call it risk off because that appears to be what's happening. When the leadership shifts away from technology or cyclicals, at least today, to something a little more defensive. I don't think that there's something inherently wrong. The market's telling you something. We heard the story in the middle of
Apple trying to push a bit higher. Apple.
I think it was 2015 when defensive started to lead and everybody was worried about the market, and then you made a low.
Microsoft pushing a bit higher. Microsoft looking pretty good. Coming off the low. Microsoft for the day trade. Off the low. Still down here, but nice little bounce. Tesla selling off. Tesla selling off now. Back down to the low.
People come on and where's the broadening? It's too narrow. Look at all the 7 stocks carrying the whole market. Now, obviously, the index level, that is.
Why does he keep saying that?
And they're like, well, wait a minute, I don't like the broadening. That's right. Broadening feels too defensive. It's like, what? Staples, healthcare, utilities, those aren't classic risk on in the market feelings. So now we're having a problem with the broadening.
Yeah, and I think a lot of that too, when you look at some of the best performers, you bring a lot of real estate has actually been one of the best performers, and that's because this is all the idea that inflation is coming down, the Fed is likely going to be lowering interest rates, so it's all those interest rate sensitive sectors that are going to be doing better.
Okay, the S&P 500.
It really helps the story of the
All right, none of these. K-View, Kenview looking good. Chipotle trying to get back above 55, 56. CCI looking pretty good. Crown Castle breaking out. CCI breaking out.
Fundamental story in some parts of the real estate market. Take a look at FL Green, and like there's something going on here in the office market that's not just interest rates. In utilities, we've all talked about Vistra and Constellation Energy.
CCI breaking out volume.
You're 100% right that the money flows have shifted because of rates, but fundamentally, it's not just that.
Volume the last 5 days. CCI, Crown Castle breaking out. Let's see, where are their earnings? CCI.
I'd say the thought is next week you are getting a setup for some positive catalysts because we've got a presidential debate.
CCI, not CCL. CCI.
Wednesday, which I think
Crown Castle. They missed.
And then people have to look
Okay, they missed. October 16th. Next one.
Positive fundamental catalysts on the horizon. So I wouldn't end this week too bearish.
All right, we'll make that the last word. Good way to leave it. Everybody, thanks so much. Of course, Dan and
I keep looking at smart sheets. These 4 metrics, green, earnings growth, they beat the top expectation. This looks really good. 291% earnings growth. Let's take a look at SMAR. That was talked about earlier this morning in the trading room. All right, so nice little reversal on this one.
Agreement management platform. The stock is on track to snap a 3-day losing streak. And Mobileye is dropping to an all-time low, with Intel also under pressure following a Bloomberg report that Intel is weighing options for its stake in the struggling autonomous driving tech company. Intel did decline to comment. Those shares are now down 60% this year. Scott?
All right, Pippa, thank you. That's Pippa Stevens. We're getting some news out of Washington, D.C. Our Eamon Javers has that for us now. Eamon?
Hey there, Scott. That's right. Federal Judge Amit Mehta just wrapped up a hearing here in the ongoing Google antitrust case, and he laid out a timeline for when he's going to ultimately decide the fate of Google in this ongoing case. Now, remember that Judge Mehta has already decided that Google is, in fact, a monopolist. So that question is decided in this case. The question here now is what to do about that, what the lawyers call the remedy for that. The Department of Justice has not said yet whether it wants to break up Google or some step short of that as part of the remedy in this ongoing case. What Judge Mehta just laid out here in the timeline is that he wants the Department of Justice to indicate at a high level by the end of the year what they want. He said by late fall or early winter, he wants a proposal at a high level from the Department of Justice about what to do with Google. And then he wants by the end of the year a detailed proposal from the Department of Justice laying out exactly what they think the fate of Google should be. There will be a trial period in this that will go through the spring. And then by August of 2025, Scott, Judge Mehta said he will be prepared by then to issue his final decision on what happens to Google here. So we've got a long bit of running room here, but now our first indication of when we might know what it is that the government's proposing to do here in this remedy phase of the case. That first indication, again, will be late fall, early winter when the government gives that high-level indication, Scott.
All right, Eamon, thank you for that. That's our Eamon Javers in Washington. We're just getting started here. Up next, Morgan Stanley's Chris Toomey is back with us. We'll find out how he is advising his clients amidst this sell-off. We're live. live at the New York Stock Exchange. Closing bells come right back.
Okay, B and C pivots, looking for SMAR to follow through next week. Okay. So I'm going to buy some shares. If it dips next week, I'm going to buy more. The idea is that I want to average in. So if it dips a bit, I'm not buying 100% at, say, SMAR. I'm not buying 100% at the high of the day, which I saw that's posted earlier. I liked it. I just didn't want to buy it up here. I'd rather buy it lower. So we got that opportunity. Very good looking company. Beat earnings big time. Look at that earnings growth. That just blows me away. So, okay, got some just now at 52.18, 58.218 filled. Okay, looks good. Okay, got really quiet there. Got quiet. SMAR. The other reason I don't want to put too much on it right now is because the markets could sell off next week and give us even better opportunities. Abby. Yeah, CCI looks good. Let's take a look at CCI. The only thing with Crown Castle is the earnings. Crown Castle earnings, they missed. They report again on October 16th. I like it when all four of these metrics, statistically, when all four of these are green, you have a much higher probability of a stock remaining bullish. This is a strategy that Earnings Whispers has developed over 20 years or so.
This dismal week for the markets, worst in fact in about a year and a half. NASDAQ taking it on the chin today. It's on track for its worst week since January of 22. Joining me now, Post 9, Morgan Stanley's Chris Toomey. Welcome back.
Thank you. All right, what's your take? Look, last time we were here, economic number was kind of in Goldilocks view situation, which was giving the Fed exactly what it wanted to do. What we saw was a situation where prices had gotten way ahead of themselves. We thought we were probably experiencing a situation where something was going to have to pull this back. We got a bad employment number at the beginning of August, then we got some decent numbers in between. But I think the big thing that's changed is bad news is bad news, right? Like it used to be bad news is good news, now bad news is bad news. And the other thing is good news is not great news, so good news is not bad news, right? So you had
Is good news bad news? And I would take issue in even some respects that what we've gotten is quote unquote bad news. We're acting as if the economy is in some tailspin. The data would suggest otherwise.
I think the data is, if you look at earnings are actually okay, right? The Mag 7 numbers, the most recent one, was actually not bad. I mean, the question is that, everything is priced to perfection. And if it's not great, it's got to be bad. The employment number today, you've got Steve Leeson on all the time. He looked at it first thing and he said, not bad, right? But the market's acting like it's horrible. And so I would say the economic data is not bad. I think the economic data is fine. I think the pricing was off, right? So the pricing's come back.
I don't even know if the market is taking it like, oh, the data was so bad. I think we're starting to get into a conversation as to whether the Fed is going to blow it, or whether they already did.
No doubt, right? Because I mean, the thing is, we're in a situation where they've kind of thread the needle here with regards to kind of moderating growth, bringing down inflation, raising up unemployment, and the market's been doing well. But the problem is that, you know, we're at an elevated place for rates. We were just in a period where we had 15 years of zero interest rate environment, and there's about a 6-month drag before they start cutting rates, right? And so you're in a situation where
Okay, Apple trying to make more highs. Google, all right, Google, I'm going to sell some call credit spreads. Google.
But that doesn't mean we need to completely fall out of bed.
Oh, what's Merck doing? Merck. Let's take a look at Merck's earnings. Merck has earnings October 29th. Look at Merck.
And then all of a sudden it's like, wait a second, this isn't
Merck.
and we get the elevator down, right? And so that's the reason why you have to
MRK. Merck. Is it back above? Not yet. It got rejected at the 50-day.
Part of your point, and again, it's like parts of the market took the stairs up. Big tech didn't take stairs up. They took a rocket ship, and now they need to come back down to earth a little bit. That's the problem.
Because Wapner said it needs to come back. Rejected.
Pricing standpoint, you've got rates coming down, so the equity risk premium is actually becoming a little bit more attractive. You're in a situation where they're continuing to provide great earnings. In our view, it's a situation where you still want to own these names. You just want to own them at the right price. And so in our view, market had to come back a little bit. You were going to expect to see the Mag 7 get hurt and drag the market down and all the other names that have been benefiting from it over the last 18 months. And now's the opportunity where you can start looking
Merck. All right, so we got 29 minutes to go. 29 minutes to go. Exit into strength, reduce your risk.
Absolutely. So I mean, look, we've been waiting for this pullback. We've been sitting on cash. We've been collecting the types of income that we like to collect, but we thought the markets weren't really justified with the right type of risk that were in there. And so then now that prices are coming back, we're getting a little bit more interested in putting some money to work.
Interesting. So you thought the price was wrong. Now the price looks a little better. You're also implying that you don't think the pullback goes much deeper than here.
No, I think it could. But that doesn't necessarily mean we're going to try and call the bottom. What we're going to do is we're going to look and see where the valuations are, how this fits into clients' portfolios, and we're going to start buying the names that we really like that we think we can get at good prices.
How are you looking at volatility? VIX up 14% today, right? It's north of 22, and then election risk, 60 days away.
Right. So, I mean, look, I think people have talked about, I don't know if you know this, but September's not a good month with regards to investing. Elections also can be a problem for investing. And so in our view, that increased volatility is what we love. We like to take advantage of it, whether it's buying names that we think are unduly getting penalized or just writing call options on it and collecting extra income. So we like this volatility. We think it's going to stay. We didn't talk about this. I think one of the most important things that has been going on in the market is the buyback situation. So buybacks tracking almost 2 to 3 times than it historically has. That's going to end at September 13th once we go into earnings. So that's going to be another wave of problems that we see going into the next couple of weeks. So in our mind, we're not
Okay. So Meta pulling back a bit. Tesla back down to a new low of the day. NVIDIA still working. Nice job on NVIDIA. NVIDIA making it through. Okay, NVIDIA making it through. NVIDIA's through VWAP, going to stretch its legs now. Nice, VJ. Is that a 0 day that you took? Credit spread? Looks good. All right, break a structure on NVIDIA. Break a structure. Do I want to add NVDL? Let me take a look here. How much do I have NVDL? 400 shares. Can I add more? Should I add more in NVDL? That looks really good. NVDL. All right, I don't want to overdo it. NVDL. I got 400 shares, so maybe I'll add 50. Maybe I'll add 50. Charts, NVDL. It's end of day, so I can always wait. NVDL. NVDL. All right, NVDL. Okay, maybe we get a follow through next week. NVIDIA to start the week, and then he fade it. Who the hell knows? NVIDIA. All right, trying to push through VWAP. We've got 25 minutes to go. 25 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Okay, with 25 minutes to go for the closing bell, be looking forward to Friday, TGI Friday.
Interest in volume today.
Looking for NVIDIA to continue. Can we get some follow through?
5350 hits. If that gives
NVIDIA, I'm looking for the follow through.
day moving average. You're hoping at 50, 55 hits, you pull back up to that 100-day SMA at 78. Maybe catch some support there, take it back up to 5450, and hopefully we send this thing back to all-time highs. But it's getting pretty nasty as of right now.
Yeah, the rollover here falling short too. The previous highs, you've got the lower highs now. I guess the good news is lower lows are still pretty far away, given the chaos of that last week from July to August. But
I'm tempted to take CrowdStrike off, but I'll give it another day for theta to kick in some more. CrowdStrike. Let me take a look at CrowdStrike. We have an Iron Condor on that one.
Notice too in this channel, we've got a regression channel that we've been staying in for over 2 years. I mean, this channel has held strong, and you are back down to the center of it. You notice there in around April, May, we tested it, pulled back up. There in August, tested it again, pulled back up. This is a couple too many times in a short amount of period, in my opinion, to be testing that over and over again. I would say frosty if I were, a trader or an investor right now, and just really pay attention to the next week or two. This very crucial level we're at for the market as a whole.
NVIDIA pulling back a little bit.
We got to hold on here. We lost a lot on.
Notice these levels are stair stepping up. I'm noting the green shaded areas. Okay, 200 million, 1 million as it pushes higher. Okay.
With respect to AVGO and going into earnings and this big jobs number, I think this is a prime example of when you get this perfect combination of a catalyst like jobs data combined with a ton of net negative gamma, which typically
The call wall is 5750, not 5600.
So
Interesting.
people out there in the market right now buying puts, and what happens is if no one else is willing to come into this market and buy calls and take the other side, right, or buy up the underlying, if all everyone seems to really be doing is buying puts, then market's probably going to go lower, because that's sort of the feedback we get caught in with market makers hedging downward to hedge those deltas that they're long.
Tesla's still drifting lower.
Nobody else takes
Google. All right, nice reversal on Google. If you sold call credit spreads on Google.
This could be a basket.
Okay. All right. Thanks, Shane. Appreciate that. That's the kind of where the bar is at this point. We're just hoping it doesn't get disgusting. Hope it doesn't turn into, VIX 60. Good thing we're a ways off from that right now. Shane, appreciate the look here. Like the long-term channel too that we've been hanging out in, basically right in the middle of that 2-year channel. So a lot at stake for next week with inflation, but we still got time for 20 minutes. So hopefully we can at least stay within that range. Change pointed out to us as I speak. Bitcoin making a little section though, generally pushing us a little bit more risk off.
Microsoft fading, Apple fading.
Hopefully, like the first episode, I know it's pretty darn good. Premieres Monday at 5 p.m. Eastern. That's the next one. And
Google fading.
this is the one with the lumber guy, Stinson, I believe.
Google.
I wanted to start out by talking about your career as a college quarterback.
It's funny. I mean, I'm trying to dodge 300-pound men tackling me. Now I'm just clicking buttons.
When I see you work like this, are you actually
leaders right now? The financials, I'd expect them to perform a little bit better in the light of the fact that you've got interest rates coming down. Maybe it has something to do with Warren Buffett selling Bank of America. I'm not entirely sure. But yes, your point is spot on. You can't sit back, own 7 names, and go to sleep. You've really got to pay attention and be nimble in this market, or you'll miss it.
Kev, how are the next 60 days ahead of the election going to color the kind of decisions that you make in this market? Because the market's tunnel vision, right? It doesn't think about it till it has to. Well, now it kind of has to. We have a debate next week. Polling is going to be much more talked about than it has been.
Yeah, the election is going to be huge for volatility. We're seeing that in the VIX for sure. Monday, we've got Apple. Tuesday, we've got a presidential debate, to your point. Wednesday, we get CPI. And every day that gets closer to the election, there's more angst. I don't know that it has that much pressure on the overall.
Okay, NVIDIA pushing a bit higher. NVIDIA.
The stock markets can typically perform well regardless of whether you have a blue or a red White House. But I think that it's going to increase volatility.
Apple's iPhone 16 launched to trigger biggest upgrade cycle yet, according to Wedbush.
We'll continue to harvest that volatility by writing covered calls. I would encourage viewers and investors to try to follow suit there, because when you have higher volatility, you have higher premium. What we saw with AVGO Broadcom yesterday is 60% annualized premium. Yes, granted, that's pretty insane. But if you can generate another 3, 4, 5% on top of whatever dividends you're generating, all that does is smooth out the ride for what we expect to be heightened volatility for the next 60 days and beyond.
Kev, have a good weekend. We'll see you on the other side, I'm sure of that. It's Kevin Simpson, Capital Wealth, joining us. Up next, we're tracking the biggest movers into this close. Put the Stevens is back.
Okay, Apple trying to get back up to the highs of the day. So nice reversals off the low if you took any risk off the low. Any trades off the low. This is looking good. Tesla not doing so well. Netflix breaking out, new high of the day. Netflix going. Okay, looking for more.
What did you think, or I guess what described this as kind of one VIX regime then?
Tesla's still dropping.
What's so amazing about the vol spike to start off last month was that it came down so quickly, but obviously
Apple.
Floor. So
iPhone 16 launch on Monday. Apple. NVIDIA. NVIDIA still floating with the VWAP going into the close. We got 17 minutes to go. 17 minutes to go.
From the perspective that it went from below 15 to 37, the 65 was, not a real print. And then back below 15 in the space of 18 trading days. We've just never seen that before. It's as though people discovered VIX and then forgot about it, all within the period of, 3 weeks. And then the bounce back, starting on the 6th was very vigorous. And now we've got another fading spell. So
all right, CrowdStrike. Let's go take a look at that. CrowdStrike. Okay, here is Apple call credits. Monday, we got the iPhone launch, iPhone 16. So we could see a retest of the call walls overhead.
Steer their portfolios one direction or another.
Apple pulling
I
back.
think people can't be surprised if VIX and volatility remain elevated for a while.
Given the kind of narrative around that spike to 65, the Japanese yen played a big role, at least in the narrative. But of course, it was pretty easy for the yen to rally when the dollar was falling apart post jobs. I wonder if the fact that VIX is going back up now without any yen blow up, does that point more towards kind of the economic explanation as opposed to like some hedge fund that blew up?
Okay, we're starting to see a lot more profit taking. Netflix and NVIDIA hanging out.
Yeah, that's the thing too. Yeah, nobody would have showed up, right? Like if it was such a bad trade, how come nobody went bust up?
There may have been a few people inside a pod shop that got tapped on the shoulder, but certainly if anything blew up, it hasn't appeared yet. But I think clearly the yen remains in focus. It continues to be strong, and whether there's additional unwind to come from there. The dispersion trade was the other thing that people were nervous about. But clearly we haven't had the kind of nuclear explosions that we've seen at different points in the past. And the economic data and trends are clearly front of mind right now. Let's say that the yen trade is not going to be the one that crushes us. People have definitely shifted focus to economic data.
Amazon, we just check a few things here. Amazon, check some boxes.
Every day has seen an attempt to lift equities at the open, followed by a sell-off. It's as though Europe wanted to buy, and once Europe went home, everybody started to sell. It really has been a whack-a-mole week.
Yeah, it's an interesting point on the timing there for how we've been fading. Jim, you also are a macro mind, not just vol. You've got a pretty interesting look at credit. Let's go there for a moment here. The high yield bond, cumulative advanced decline line. So is this a McClellan oscillator, or is it you? Have you applied a McClellan oscillator? What are you doing here?
Well, so I give credit to Tom because he's the one who showed this. He's the one who let me discover this. And he was kind enough to share some of this historical data. But what it says, equities are not the only market where breadth matters. And most people don't realize that there is high yield advanced decline data that's available for every trading day. And if you look at that on a cumulative basis, which is, was Tom's insight, going back to the global financial crisis, most of the time we've been in trouble. That cumulative line has rolled over as a signal of trouble. COVID was really the only place where it didn't give advanced warning. But even, as recently as when the Fed started hiking rates, and we saw 2022 as a sell-off, not just for equities, but for bonds, this had rolled over before January and was giving a clear signal that there was softness to come. What it's saying right now is, don't worry, be happy.
Yeah.
So I'm keeping an eye on that. If that rolls over, we could be in for more fun.
Wow, love that chart. Really nice little nugget there. Always like things that go a little overlooked, but also kind of push back against some of the narrative in some ways. It's an important point. I think it also kind of fits with some of the stock rotation, some of the equity stuff.
Okay, so what are we doing here? All right, so we're bouncing around. Tesla with a bounce. We got 12 minutes to go. 12 minutes to go.
Thanks, Jim. Great to have you here. You're welcome. Yeah, good stuff. Have a great weekend too, Jim Carroll, Senior Wealth Advisor, Portfolio Manager at Ballast Rock Private Wealth, the VIXologist on Twitter, X. Coming up, Schwab team taking us into the last 10 minutes. We're pretty much around the same levels here, 54.15. Maybe
Okay.
kind of ran out of gas, ran out of ammo, effort for the day. Maybe just hang it up. 12 minutes left. Be right back.
multi-billion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you?
Okay, Netflix popping. There goes Apple. There goes Meta. 11 minutes to go. Meta making a new high in the evening session. Tesla reversing, short covering. NVDA. Okay, looking for NVIDIA. There goes NVIDIA. NVIDIA going.
Certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation.
NVIDIA is trying to run.
Emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales. I'm very good.
Okay, just got rejected again. Wow, NVIDIA just can't get through this area.
You think that this is potentially a human superpower?
Okay, a profit taking. Okay, a little fake out there.
Okay, it looks like stocks are trying to make me higher, then they got hit a little bit, and now we're at 54.13 in the S&P 500. Joe Mazzola joins me, head trading derivatives strategist at Charles Schwab. Joe, what's going on? Bit of a mixologist yourself, sir. So what do you think? We got any hope into the close, or at this point, maybe it's just game over?
I feel like people have put the mice down.
Let's see. Let me look at IWM, the way it's closing. Let's see, IWM. I want to do TZA. Right at BWAP. It's kind of hard to call this one. TZA. Oh, we're probably going to see more downside next week, I would think. Should I buy some TZA? What do you guys think? Think you're going to buy some TZA? TZA. What do we got going Monday? We got Apple's iPhone 16 launch. That hasn't really had much effect. What do we got going on Monday? Let's see, Monday.
Yeah, that's where I think we're at. Like, there's
So,
also a lot of clear leadership.
Monday the 9th. What do we got going on? The 9th, we've got 6-month bill, consumer credit. Not much going on. Tuesday, no. Tuesday, not a whole lot going on. Wednesday, next week, Wednesday, core CPI, MOM. Thursday, the 12th, core PPI, CPI and PPI next week. I'm going to buy some TZA. What the hell? It's just a hedge. TZA. TZA.
We've had some whippy action. We've seen volatility spike. I know
I'm going to buy a little bit TZA.
Oliver, it's not just volatility in equities. We've seen volatility spike in fixed income too, and it's almost the tail wagging the dog to a certain extent because that
All right, I bought some TZA
index that we talk about
just as a hedge.
from time to time can be a leading indicator over the equity index for volatility of the VIX. It really happened this occasion where you saw the equity volatility kind of picked up a little in alignment with the fixed income volatility. So that's something to really keep an eye on going forward. We've seen big moves in the yields, and so that's really starting to bleed its way into the equity markets.
It's a good point because I find that to some degree kind of like the silver lining of maybe a bad situation where right now stocks going down as yields go down because the economy's slowing, but at least that means we're getting out of the Fed obsessed
consumer credit.
a bull market, basically, right? Where like if it holds like this, which it should, and we kind of get back to a more traditional relationship, then it won't be hard to figure out, okay, when the economy does come back the other way and yields start going up, then we can have kind of a more traditional, economic centric stock rally, which I welcome at this point.
Sure. Yeah. Well, I mean, Oliver, I think one of the things that you're hitting on here is that once all of the stimulus, right, whether it's monetary or fiscal stimulus, kind of makes its way out of the market, and it's been slowly doing that. I mean, we've seen quantitative tightening now for a while. Then you get back to the brass tacks, right? Then you get back to earnings. Then you get back to looking at the economic indicators and what are they saying. There still are some divergences that we see in this market, and the market now is really kind of pricing its forward look on jobs data as opposed to inflation. I know we got CPI and PPI next week, and I know that that's important. You need to keep an eye on that, but from the market's perspective, it sure does seem that maybe that's not in the rear view window, but at least in the side view mirror, because what they're looking at now is economic slowness, and they're looking at that from a jobs perspective, but there's still divergences in that. If you look at, one of the things I've been following is the S&P relative to the job openings, and there's usually a pretty tight correlation, right? If the job openings continue to go up, you tend to see the indexes go up. Well, job openings have been, really kind of pulling back the last couple of weeks and couple months. But yet the S&P 500 is only about 4% off an all-time high. So there could be room, for some additional downside to the S&P 500 looking from that lens.
Yeah, well said.
All right. So we got 4 minutes to go. 4 minutes to go. Everything's pulling back.
Basically, looking at two inflation fronts. One that the Fed keys off of in particular until we get that big decision. I think we put in a floor for VIX at like that 20-ish, Joe. Or what do you think it's going to take to get us kind of back into the mid-teens?
I'll tell you some of the trades that I've been kind of looking at in terms of what the market's been doing lately.
Okay.
Well, a couple of weeks ago, there was a big, massive VIX call trade. It was the September 20th, the 22 calls versus the 30 calls. So really, at that point, I think the VIX was around 16. And so it was a call spread, basically buying the 22s and selling the 30s. Those are in the money now. We're at least pretty darn close to it. We'll see where we settle now. So you might start to see some rolling out of that. If traders want to roll up and take off some of that delta risk, that might provide a little bit of.
What's Starbucks doing? Starbucks.
The big traders, they seem to nail that one pretty
SBUX.
Yeah, right, nice. Good eyes, Joe. Thanks. Good stuff.
Still haven't bounced on Starbucks.
Head trading derivatives strategist at Charles Schwab. 3 minutes until the bell. Finish it up. We'll see you on the other side. S&P's 5405, which means that we are finishing with weakness. 3 points off the very lows of the day.
All right, JB Hunt, JBHT.
Trading Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education.
Okay, short covering. Got 2 minutes to go. 2 minutes to go. Broadcom. 137. What's Zscaler doing? Zscaler. 157. 156.90.
And more time learning. Trade brilliantly with Schwab.
Accelerate your market knowledge and shift your perspective into full view. Real-time example trades, a full hour of trading insights. I'm Tom White. I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Knock, knock. Number one broker here for the number one.
Okay, we got a minute to go, less than a minute to go.
This lets me adjust the bass, add more guitar, maybe.
Just a minute to go. Oh boy. All right, folks. Weekend video will be out around 2:00 p.m. on Sunday, as usual. Hope everyone had a great week. Hope everyone had a good week. Let's see, NVIDIA into the close. A little bit of profit taking NVIDIA. Had a nice bounce off the low. Still has room to the upside. And that's a wrap. That's a wrap. Okay, everyone. Have a great weekend. Be safe. We'll see you on Sunday. I'm your host, Cousin Vinny, coming to you from theclosingprint.com at the Closing Bell, Friday, the 6th of September. Hoping you the best. All right. So take care. Have a great weekend. We'll talk to you on Sunday. Ciao.